So, very good morning to all of you. Welcome to the June board meeting of the IESBA. I want to greet you all, those who are here in person and those who are attending virtually as well. I'm very pleased to welcome you to this board meeting and to the summer in New York with finally clear skies and apparently acceptable quality air. Which we should not take for granted. And we are keeping on monitoring what's happening, but it seems that we are now in a much better position than we would be last week. I hope that you are all well and that you have been keeping well and safe. And it's great to see many of you in person again since our last board meeting last March in Abu Dhabi. And I'm also thankful, of course, to see all those attending virtually joining us on camera. A special greeting to Yao Shu, who is attending at very unsocial hours from China. I would also like to welcome our official observers, Begonia Giner from the PIOB. Welcome, Begonia. Junpei Kato from JFSA. I don't see Junpei, but must be, okay. Welcome, Junpei. And Galen Hansen, our CAC chair, will be attending virtually at part of the time, not all the time, sorry for this. So welcome to our official observers. I would also like to address a very special welcome to our new board member, Hector Lewede from Chile, who has been appointed public board member as of June 1st, 2023, and whom I have already introduced to the board members last week by email. But for those who were not in that email, just letting you know that Hector has been appointed upon an expedited procedure run by the nominations committee to allow us to have the board complete again by June 2023. Hector has made himself kindly available to join before January 2024, which was the initial schedule. And Hector is an independent consultant and a lawyer with extensive experience in corporate governance, compliance issues, and related areas, tax matters, and sustainability. Hector has served for 8 years, I think, at the OECD, at the Corporate Affairs and Corporate Finance Division in Paris, and he also holds positions at the Pontificia Universidad Católica Corporate Governance Center as an affiliate professor and as a non-executive director. And at this stage, I'd just like to invite Hector to say a few words, very, very short ones. You will have the opportunity to connect with all the board members, but to give you the opportunity to say 2 or 3 words if you want, Hector.
Thank you very much, Gabriela, for these words. Good morning, and thank you for the kind welcome. I'm happy to be here. I will do my best to add value and catch up. I know you have been working on these issues for a while, and I read everything. I will try to follow you and if possible, contribute from this meeting on, but have some patience with me. I have a lot to digest, but thank you for the kind welcome.
Thank you very much, Hector, and it's a good sign that you have read everything and you still want to be here, so thank you very much for that. So to note, Andy Mintzer will be an apology for Tuesday and Wednesday, as he will be attending the CIMA annual meeting in London. Andy will be able, or probably be able, to join parts of the meeting virtually on those 2 days, and he will leave this afternoon, but rejoin us in person on Thursday. I'm very thankful to Andy for the effort that this means and for making sure that you are back when we will be addressing the use of experts agenda topic, which is the one where we are most involved. But I'm also grateful to Andy for having flagged his absence in advance to the team and to myself, and above all for having provided comments and contributions to the parts of the agenda that Andy will not be able to attend. That's very much appreciated. Thank you very much for that. Vania Bogert will not be with us this morning, as well as she will be attending or speaking in a conference. And at this point, I'd like to encourage members. It is, of course, more than understandable that sometimes you may have overlapping commitments. I'll just encourage you to let us know in advance, because it's not, well, it's important to know who is around the table at each moment of the agenda and of the discussion. So this is something that I'd like to leave for you to think in the future. Well, observing virtually, we also haven't, and I apologize to the others, but I'd like to highlight those who were previously with us around the table. Caroline Lee, our former IESBA Deputy Chair, who has, as you know, provided an invaluable contribution to this board and to the work of this board and to the standards that we have now. Lisbeth Haustermans, former IESBA member, and Torn Maren Saxhau, former IESBA Technical Advisor. I also take this opportunity to welcome the new technical advisors joining us for the first time. Charles Lu, technical advisor to Paul Mutara, and Carmen Penderis, technical advisor to Sadia Adams. Thank you very much for joining, and thank you very much for being available to help us. Now, we have a few people observing in person. I'm not going to mention them all because I'm afraid I would miss someone, which would be very unfair, but thank you for those who decided to join us in person today. I'd like to make some highlights on the agenda that we have for this week. We have a very busy and important agenda this week, and I'd like to start by saying that it's important that we try as much as possible to reach, to get to Friday with decisions made and options made on most of the topics. I'd like to remember the board members that we don't have that much time, that we made a commitment to make an exposure draft in December. And so it's important that we make good steps in that direction, and that we are able to reach conclusions and decisions to make it possible for the task force to advance the work over the next few months. So we have several important topics on the agenda this week. The first 3 days, we will focus heavily on sustainability. We will be kicking off today with a presentation from representatives of accountability sitting here at the table, making sure that we will walk the talk with respect to keeping a close interaction with representatives of the independent providers, assurance providers community. And I'll say a few words about that afterwards. We will then move to the common issues on our sustainability project, which are relevant both to Workstream 1 on independence and to Workstream 2 on ethics. And following that, we will discuss the proposals of Workstream 1 and the preliminary draft of the independent standards for sustainability assurance engagements, which will be followed by considerations of Workstream 2 proposals and preliminary draft of the ethics standards for sustainability assurance and reporting. So we will be covering sustainability over the first 3 days of this meeting. It's going to be an intensive a deep dive into sustainability issues until Thursday. On Thursday morning, we will discuss the issues and proposals presented by the Use of Experts Task Force. And on Thursday afternoon, the Tax Planning Task Force will brief the board on the preliminary significant matters raised on the February 2023 exposure draft. Not to forget that we are aiming to approve these standard tax planning standards by the end of the year. And so these steps and the possibility for the board to be aware of what's happening is extremely important for that purpose. On the last day of our meeting, we will receive a presentation from MindBridge AI and an update on the technology working group initiatives. And we also have an update from the IESBA working group on its recent activities and an update on the IESBA coordination as well. So thank you very much. Well, let me take, of course, the opportunity to thank the task forces members and the task force chairs for leading the sessions, the 3 sessions on sustainability and use of experts. And of course, thank the task forces, the chairs, the working groups, and the staff, the brave staff, for their very hard work in preparing the agenda materials. Since March, it's been extremely busy for this team and for these people. So thank you very much for everything that you made possible for this meeting. I also would like to thank the participants who have provided advanced comments on the agenda materials to the relevant task forces and working groups, which will make the discussion even more meaningful and allow us to absorb some of the comments and crunch them a little bit before the meeting. So a special thank you to those joining us via Zoom, YouTube at unsocial hours. And yeah, I know that it's challenging, but I greatly appreciate your commitment to be with us today. So when I wrote you last week, I told you that we have been busy. It's not me, it's all a significant number of us have been busy with outreach and related activities. As you can see from the schedule of outreach activities, which has been submitted on agenda item 1B, the second quarter of 2023 has been extremely busy for us. Besides our global sustainability roundtables, which were organized right after the March board meeting, and which meant an incredible effort for the team and for board members, but were also incredibly important in terms of the feedback that we received and that informed the discussion that we'll have today and the preparation of the papers. A large part of our outreach efforts, not surprisingly, have been focused on our sustainability project. So we will hear here about the key highlights from these outreach activities during our sustainability session later this morning, and so I will not say anything else at this stage about outreach activities. Let me only highlight, because this is an important happening, highlight that at the end of March, the Italian Ministry of Economics and Finance released the final act to implement the IESBA Code of Ethics into the Italian legislative framework. This is, of course, excellent news. It's a new jurisdiction adopting and implementing the code. The adoption of our code into a G20 country like Italy speaks about the credibility and the global recognition and acceptance of this code. And on June 27, hopefully, I will attend an official Ministry of Finance event in Rome to commemorate the adoption of the code. Thank you very much, Luigi, for all the efforts and all the much that you have done for this to happen, and for well, of course, to arrange my participation on behalf of the IESBA in this event. Thank you very much. This is something that we should clearly flag and sign off. So if any of you have participated in outreach initiatives that is not recorded, please let us know so that we are aware of everything that is happening. On the activities of the Planning Committee, the Planning Committee met via a video conference in May, and among other matters, the Planning Committee considered updates on the sustainability and use of experts task force discussions, including a debrief of the global sustainability roundtables, about the coordination with the IESBA, which has been extremely important, and the progress in establishing the sustainability reference group and outreach to ISO. We also discussed at the Planning Committee the planning for the June 2023 board meeting, the meeting where we are now. It was discussed there, and also the Institute of Internal Auditors exposure draft on proposed global internal auditor standards 2023, including some key matters relating to ethics and independence. The Planning Committee agreed on a response that should be sent to the IIA on matters that overlap with our code. The staff is kindly developing a response in parallel with all the rest that they have to do. And the Planning Committee will review this response on a fatal-flaw basis, and it will be sent to the IIA under my name and shared with the board for information. In May, we also attended. We also had the IESBA NSS meeting, the IESBA meeting with national standard setters. It was held virtually on June 7, 2023, and it was attended by 18 national standard setters from 3 different jurisdictions. We had a very good discussion on sustainability and use of experts projects with some comments which I think were extremely useful to guide the discussion here today at the board, because it was possible to see what are the major concerns that national standard setters and possibly other stakeholders have with respect to the work that we are doing. And I'm sure that we will make sure that as much as possible, we will respond to those concerns and clarify what was possibly not that clear for the national standard setters. So it was really a good segue for this meeting. Let me also thank Mark Babington, Christelle, Martin, and Laurie Ansley for leading the sessions at the NSS meeting. They will report on the feedback we received during their respective sessions, because it's much more meaningful than doing it now. At this point, I'd like to invite Ken to kindly introduce our new staff members and address some other administrative issues. Ken, please.
Thank you very much, Gabriela, and good morning, everyone. Good evening, good afternoon to those joining us online. It is my great pleasure indeed to introduce our new team members who joined us over the last week or so. And there's another team member who, in fact, has relocated to New York and had joined us already in February. Let me start first with John Reed. John is sitting at the back next to Jean Villejean. John joins the IESBA team in the role of principal. John has over 20 years of experience in the accounting profession. Prior to joining the IESBA team, John worked at the Australian National Standard Setter, so that's the Accounting Professional and Ethical Standards Board, IESBA, as a senior technical manager. Before IESBA, John worked as a director at the Australian Charities and Not-for-Profits Commission, responsible for the development of the annual reporting framework for charities, and as a senior financial investigator at the Australian Securities and Investments Commission. John also has 10 years of experience in professional accounting firms in financial reporting, compliance, and insolvency roles. Welcome, John. John, in fact, just joined us 1st of June, so this is almost kind of his second week with us. And when you get a chance during the break, by all means, say hi to John as well. Next to John is Jean Villejean. Jean had already joined us since February, but in fact, she has just relocated from South Africa over the past couple of weeks or so, and so just starting really in New York with this first board meeting for her. Welcome again, Jean. And finally, let me just introduce Linda Beek, who's sitting at my far left. Linda joins our team as a director. For more than 25 years, Linda has contributed to various developments within the compliance function of audit regulation. As a director of compliance for the Hong Kong Institute of Certified Public Accountants, and subsequently head of investigation and compliance at the Hong Kong Accounting and Financial Reporting Council, Linda played key roles in developing both tools and techniques for decreasing delays related to enforcement matters and promoting the efforts of both of these organizations in improving audit quality. And before relocating to Hong Kong, Linda had represented NASBA. That's a National Association of State Boards of Accountancy, both nationally and internationally. She also served as Executive Director of the Tennessee State Board of Accountancy after working in the audit department of KPMG. In fact, Linda just completed her doctoral research. Congratulations, Linda. Her research focused on the impact of mindset on auditors' professional skepticism when assessing complex accounting estimates, and her passion lies in helping accountants and auditors do the right thing. So I think Linda is just an individual we need on our team. Thank you, Linda. And again, just take the opportunity during the breaks to say hi to Linda. And finally, if I may add as well, we are having an intern joining us as part of our summer internship program. That intern is joining us next week, in fact, and she will be helping us on various assignments within across the team. So that's a bit of the roundup for our staff development, staff news. Gabriel, if I may as well, I'll just move on to a few administrative matters, if I may. The first one is maybe not so much an administrative matters, but more an update on our electronic code, the EIS. Some of you might have visited the EIS website to try to look up the latest version of our code. That's a 2022 version of the IESBA handbook. Unfortunately, it hasn't yet been released because we've had some difficulties. We almost more accurately, the external vendor, the website provider, has had some difficulty with the backend programming of the ingestion system to ingest the full suite of standards into the electronic version. And the reason is because Microsoft, in its wisdom, has continually been updating Word in the background with macros, etc., and that has wreaked havoc with the ingestion system. So as a result, the vendor has really struggled to get the formatting correct and so forth, and it's taken some time to reprogram the ingestion system. The latest news I've heard is that they are anticipating finalizing the ingestion of the 22 handbook this week, and hopefully I'll get news that it's gone live, and once I hear that, I'll let the board know. So that's a bit of what's been happening with the EIS. It's a bit unfortunate because really a lot of us use to go to the EIS website to do our research or whatever work we need to do. Next update, and this is more an administrative matter, and that's to let the board know that there will be a photo shoot on Wednesday, but not for everyone on the board. It's really just for our new board members and new staff members. So we will have a photographer coming in around lunchtime, I think, is when ASTU has organized it. Calendar invitations have been sent to those individuals who have been basically approached to have their headshots done, etc. So that's just so you know, if anybody would like a headshot or a refresh, please let us know, and she'll see what she can do. And finally, a couple of items. On Wednesday, you might have received news about the social activity. We will gather here at 3:45 p.m. and we will be going down to around the Chelsea area, and we'll do a bit of a walkabout on the High Line, etc. So the departure time is 3:45, and it's make yourself comfortable, etc. Walking shoes, and importantly, there is a contribution for the food. And you might have received the email from ASTU. It's $120 in cash, please, if you will, over the next 2 days or so, if you can pass your contribution to ASTU, and she'll give you a receipt. And finally, in terms of the proceedings of the meeting, across the table, we have microphones. They're quite sensitive, but still I would encourage all board members to speak into the microphones, because we do have observers at the back of the room, and sometimes they do struggle to hear even with the microphones. So bring the microphones as close as possible to you, and when you're going to be making comments. So with that, Mr. Chair, I'll pass the floor back to you.
Thank you very much, Ken. We are reaching the end of this initial introductory remarks, but I'd like to mention two things. First, under the first item in the agenda, you will have seen the PIOB issues report or note. I encourage you to read it, because, of course, it provides us with important comments and highlights. So it can be a good discussed further in another occasion, but I'd like to call your attention for the PIOB issues note. Secondly, we have the draft minutes of the March IESBA public session, which has been distributed to the board for review. If you have any comments on the draft minutes, please email them to ASTU until Wednesday, June 14. And the board will be asked to approve the final version of the minutes after your comments by Friday this week. So don't forget to take a look and see if everything is okay there, or if you have any comments. And with this, I think that these initial remarks or introductory remarks I have gone through all the important topics with the help of Ken, and we can move now to the next item in the agenda, which is the presentation that we will be given by accountability and in concrete by Danielle Metzger. So what's the point for this presentation? I think that I don't have to explain, but again, just like I had mentioned before, we have a commitment and we need to have that commitment to keep connected and keep a continuous dialogue and interaction with non-professional accountants, external, the so-called independent assurance providers, to make sure that everything that we are doing with respect to our professional agnostic standards is okay, and to make sure that we know exactly what's happening around. So this is an important presentation for us. Accountability is a global sustainability consulting company with more than 25 years of experience in providing services related to sustainability matters to businesses and governments and multinational, multilateral organizations. And accountability is nowadays also active in the sustainability assurance space and agenda. And well, so it's more than meaningful that we have accountability here with us today. The presentation will be made by Danielle Metzger, and again, welcome Danielle. Danielle is an associate director at Accountability and the head of the Mid East and Asia at Accountability. He's leading the accountability's work, and please correct me if I'm wrong, but I think that Daniel is leading the accountability's work on sustainability, and he has also supported the development of the accountability's AA 1000 accountability principles and AA 1000 assurance standard. So he's very well positioned to provide us with information about what accountability is doing and inform our own discussions internally. So Danielle, we have 1 hour for this presentation and discussion. Please take your time, but please make sure that we leave some time for questions, because I'm sure that board members will be happy to make some comments and some questions on the presentation. And with this, the floor is yours.
Well, thank you, Gabriela, and thank you, Ken, for the kind introduction. Thank you, members and guests of the board, for inviting us to join you here today. We're thrilled to be here. It's a great opportunity to meet with some partners and share a little bit about what we're seeing with our clients, share some of our experience from the standards part of our business, but also to learn from you. It's critical that we continue to share across what we call the ESG ecosystem, so that the performance of practitioners, but also the standard setters, can continuously improve for better performance across the board, and as we say, more accountability. My name is Daniel. As Gabriela introduced, I'm joined here by 2 of my colleagues as well, Pepe Emilia Enrique, who is the head of our standards and research at Accountability. So while I have supported standards on the development of some of our standards, she will represent the standards part of the business, so we can have some more intelligence if there are any questions and technical details there. I'm also joined virtually by our colleague in London, Thomas Mitten. Tom is our acting head of Europe, and he is a governance expert as well, with a background focused entirely on governance as it pertains to accountable business management. So Having said all of this, I'm not sure how many folks in the room are familiar with our firm, Accountability. So today, what I'd hope to do is share a little bit about the firm, about our history very briefly, but what is it that we do? What do we offer our clients? We have two sides of the business, as you're seeing, our advisory side of the business, which Tom and I predominantly focus on, as well as our standard side of the business. So share a little bit of intelligence based on what we're seeing there, a little bit about how we work with our clients on some of these issues, but also give you a sense of our series of standards and how they are bringing value to the standards users. We wanted to share a little bit about what we're seeing in the marketplace and how we're responding, and hoping that this can be really a rich discussion. We do feel that we're at a critical juncture right now as ESG is gaining prominence. The IESBA is extremely well positioned to take this opportunity to provide the much needed guidance around governance, independence, and ethics, which is going to be increasingly critical as practitioners are looking to respond to those demands from stakeholders, which we'll talk about very briefly. But we're all in all happy to be here, to be participating in that discussion, and hopefully adding value in your work as well. We will definitely not take the full hour to do the presentation, so looking forward to some discussion afterwards and happy to answer any questions, and looking forward to that. So I'll proceed with just a brief introduction about the firm. So for those of you who are not familiar, Accountability, as Gabriela mentioned, has been around for nearly 30 years. So we were established in 1995. At the time, it was very reflective of where we saw sustainability, and I don't think it was even called ESG yet at the time, but where we saw the industry. And the firm really represented that in its nature. So we were at the time the Institute for Ethics and Accountability of England and Wales. It was a much longer name. It was a much more academic type of institution. We focused on research predominantly, focused on developing white papers. And of course, this was sort of the time of the genesis or birth of our AA 1000 series of standards. So focused on providing that thought leadership for the industry at a time when sustainability was very much an academic pursuit. There was on the practitioner side, certainly a need for compliance, certainly risk management, but it was either fitting in an environmental health and safety function. It was fitting in on the social side, more of perhaps a CSR may have started at that point, philanthropy, that kind of work. We were not seeing yet in the marketplace a real understanding of what sustainability meant in terms of business value. And in the decades since then, the market has certainly shifted. The regulatory environment has shifted in terms of bringing a little bit more rigor around some of this work as it pertains to management and reporting of this performance. And our firm has changed in parallel to that. So we have shifted our focus. We maintain our research and standards that sort of form the legacy of accountability. We've shifted our name to be a little bit more digestible, if not super Google friendly, but it's called Accountability. And we are focused on delivering value to clients and standards users as they seek to navigate the ESG space. So understanding that space, we're not an advocacy firm. We are practical and hopefully expert advisors to practitioners and leadership in executive and board level positions, especially as the landscape is changing, the issues are changing, the impact to business is changing, and it's really critical that our constituents understand what that means for them. So that's what we hope to provide. As Gabriela mentioned, we work with businesses, investors, governments, multilateral organizations such as the UN and others, helping them to understand what these issues mean for them, for their stakeholders, and how they could hopefully respond to ensure that they will have a more sustainable business practice, a more responsible business practice that continues to improve performance and meet the needs of their stakeholders. We take a very practical approach to our work. We are a boutique firm, so while we're often competing with some of the largest firms in the world, we are focused on developing relationships with our clients and hopefully bringing value in a way that really meets their needs for their business. And so that's our approach to our work. And we'll talk a little bit more about how we do that now. And just a quick mention of our geographic presence. So our focus, well, originally was much larger and more global. About 12 years ago, our CEO, Mr. Sunny Misser, came in from PwC. So his background was very much in management consulting. He was a chief strategy officer for that firm. And he's helped us to shift our focus. So while we had offices in places around the world during our sort of very nonprofit days, if you will, we had offices in Beijing, Hong Kong, Sao Paulo, Johannesburg, areas where let's say that the ethics and accountability were not as strong as they should have been, especially for a firm with such a namesake. So we took the decision to close some of those offices, make sure that we were focused in centers of business and areas where we could really make sure that we were focused in adding value. So our focus now is in the North America region, the UK and Europe and the Middle East. So we have our offices in New York, London, Riyadh, and Dubai, with a focus also on expanding into Asia in the coming year or two, with a new headquarters in Seoul as well. So looking at that on the horizon, and that's our geographic focus. In terms of what we do and what that looks like, hopefully this is working. There we go. We'll dive into each of these sides of the business, but our leading global standards, the AA1000 series of standards, has three pieces to it. At the core is the accountability principles. So we are proud that our standards are principles-based in nature. They are not compliance-driven, which makes them highly adaptable and very user-friendly. We hope that they still maintain a sense of rigor, especially when it comes to our assurance standard, for example, which is used to assure non-financial information. It's used by assurance providers globally. And then our stakeholder engagement standard, which is the leading global standard for stakeholder engagement. It's a very practical guide to mapping, prioritizing stakeholders and engaging with them. On our advisory side of the business, we have our ESG related advisory services. So this is our entire focus and specialty is sustainability and ESG. So while these services might be similar to other management consulting firms, ours is entirely focused on the sustainability elements of these practices. So we'll talk about that very briefly now. So we work with clients at the practitioner level. So it might be working with them on developing programming. It might be working with them on data management and reporting. But we also are more often working at the leadership level and executive level, and oftentimes now with boards, looking at strategy design and implementation, governance and investor relations, especially as these things are now taking sort of center stage on the ESG agenda. It is no longer something that's just being implemented by practitioners, but it's on the agenda of CEOs and boards of our clients. So it has elevated the conversation certainly, and changed the way that the conversation is happening. And so we're seeking to provide guidance to our clients at that level. At the core of all of our work, we do bring our principles and our standards, at least the principles behind them, into the advisory services also. So stakeholder engagement is central to all of the work that we do, as is materiality. So making sure that we're addressing the most material topics facing our clients. So I think just to give a sense, we're industry agnostic. We work with clients of all different industries and geographies. While we do have our geographic focus areas, we work with clients in other geographies as well. The big three industries that we serve most commonly, and this is just due to a greater need for management and accountability for ESG matters, is energy and extractives, which does include power and utilities and mining, as well as oil and gas, financial services, banks and credit and lending companies, as well as healthcare and pharmaceuticals. So working with large pharmaceutical companies as well as hospital networks, health insurance as well. These are sort of our big three. And then in addition, we've seen a lot of traction, especially when it comes to consumer packaged goods and the real estate sector, most significantly. We do, of course, work with nonprofits and other organizations as well, but this is where we see the most activity in the sustainability space. Accountability has been recognized by the World Economic Forum as part of their ESG ecosystem map. So we've been identified as a framework developer, which I think speaks to the practical approach of our standards as well as our advisory services. And I think it's critical to understand that sustainability and ESG does need increasingly a combination of good guidance and compliance-based standards, but really clients need to understand that there are frameworks available to them, both existing frameworks and frameworks that they can develop themselves to make sure that their approach to ESG is addressing the issues that are most critical to them in a way that's going to resonate and be most effective with their stakeholders. So that's why we take this, what we call a framework developer approach to guiding our clients and our standards users through our standards as well. We're fortunate and honored to have been recognized over the last few years by some of the world's leading business publications for our ESG work. So Forbes most recently this past year as one of the world's best consulting firms, Financial Times for 6 years consecutively for leading management consulting firm in the field of sustainability, and CFI.co, which is the media arm of the World Bank, IMF, and IFC, has recognized us as the best ESG strategy development partner globally for 2 years consecutively, and we've just found out that we've been nominated for a 3rd year. So we're very excited and proud of this, especially given the focus on this work in the market. I'm sure you've seen some of the biggest firms in the world are investing quite heavily in providing advisory services around this space. So hopefully our legacy and the value we're bringing to our clients is speaking for itself there. But that's just a brief overview of the firm itself. I think what we can do is a slightly deeper dive into the series of standards that we have, because I think that'll be particularly relevant to your work and the constituents that you have. And I'll ask Pepe to please jump in if I'm missing anything on any of our standards here, given that this is your focus day in and day out. But as I mentioned before, the AA 1000 series of standards is a principles-based approach to responsible business management, responsible management and reporting of sustainability-related information. We are proud that we have been one of the first in the field to develop standards around this. And we are very happy that ours stand apart from what is a very crowded field right now, because our standards are complementary to other standards that are out there. They are not exclusive. They can be used in parallel with any, whether it's a reporting standard, an ISO type of management standard, or any other compliance standard. These really are standards that can be used by and understood by any individual at any organization of any maturity level, of any type. Our CEO often jokes that we hope that our standards are the MacBook of standards that are so easy to use compared to more technical standards that are oftentimes really designed for technical practitioners. So without any further ado on that, we'll just dive into each of these just to give a quick overview. The accountability principles is at the core of our standards. Most recently, these were re-released in 2018, but they were originally established in 1999. So every few years, all of our standards undergo an extensive process of refresh. So that's a stakeholder engagement. So putting our own standards to use, we engage with stakeholders from across the standards ecosystem. So that's our users, that's partners, that's co-developers, and that's our clients as well. And of course, our standards board, which is independent from our advisory board. and we refresh the standards through what is often a multi-year process. So the most recent version of the accountability principles, which is at the core of the standards, was issued in 2018, and it saw the inclusion of impact as the fourth principle. We are, again, encouraging standards users to explore each of these principles and how they pertain to your unique business context, because I think that they all do apply in one way or another. As you can see, most of the other ones are relevant in our dialect today when it comes to the most preeminent ESG and sustainability related headlines. You're seeing things like inclusivity, you're seeing things like materiality as the headlines of the day, and we focused on these for the last 20 plus years as core to what we believe is good practice. So these four standards are at the core of our other standards as well. The principles document that you see here is the framework for defining them, their applicability, and how they can be implemented by users. So that's something that's a good starting point. All of our standards, I should mention, are freely available on our website as part of our public good that we provide for our constituents. The assurance standard, excuse me, is the world's first assurance standard for non-financial information. So again, it is complementary to other standards. It is most often seen as side by side with the
ISA 3000.
Thank you. Yes, ISA 3000, which also provides the guidance for non-financial assurance standards. Non-financial assurance. It is used by assurance practitioners, not accountants, as you mentioned, but we are working with different accounting bodies to understand how can this be applied by accounting practitioners and provide the guidance necessary as standards do evolve in that space, and as we hopefully continue discussions around providing that guidance together. We look at it through two sort of what we call type 1 and type 2. Type 1 is looking at the adherence to the AA 1000 principles. So as mentioned, those principles are still core to that work. So looking at how effectively does the information, does the processes, do the reporting adhere to those four principles? And we have guidance around all of that. And then, of course, type 2, which is looking at the quality of the information that's being reported, the data and information. So this is where we look at the data assurance being applied in a more rigorous way. And that's where the type 2 is universally applicable to any non-financial information, such as those that are emerging now, things like GHG emissions, human rights, and other kinds of data and information that need a more principles-based approach. This can be universal. We're seeing a lot of standards emerge that are very topic specific, but we hope that this provides the flexibility, but also the rigor needed to start to address a multitude of ESG and sustainability topics. Topic of the day, of course, ethics, which is core to our standards. So we believe that ethics and assurance professionalism are essential to the effective application of our assurance standard. And so we've built in and we continue to improve the measures and tools that we deploy to ensure ethics of the highest quality and standards for practitioners. So that starts with, of course, the process to issuing an assurance standard. So that process is outlined in the standard itself. The criteria which providers need to meet is outlined as well. And we also list all of the, we make it mandatory that every report that is assured against our standard is reported to us. Otherwise, it could compromise an assurance provider's license to practice. So those reports that are assured are all provided to us, and we list them all publicly on the website, our standards website. So we have a full inventory of reports that are assured against the standard, as well as providers that are licensed with us. We do have a certification process by which practitioners, assurance practitioners can be licensed under the AA 1000 series of standards. for assurance. We are working on also certifications for our other standards, such as stakeholder engagement practitioners as well. Though, of course, that's more of a practical application, whereas the assurance side of things requires more of that compliance need. All of our practitioners have to have that license agreement in place, and they must operate in accordance with our code of practice. So these are some of the measures that we're taking to ensure that everyone understands and agrees to and is held accountable for what we deem to be ethical and good practice. We are taking some steps to further enhance the rigor around this, and we'll talk about that in a minute, using different technologies that are available, the regular refresh that's happening with our standards, as well as some other measures that we're putting in place. The third standard in the family of or a series of standards that we have is a stakeholder engagement standard. Most recently, this was updated in 2015. It is the next to undergo an upgrade, which will be happening within the next year. And this is really built on this understanding of the core principle being inclusivity. So that's the one that this standard focuses on. But of course, it implements the other 4 principles that we have as well. The most widely used stakeholder engagement, it is really meant to be step-by-step guidance. So a practitioner of any department, we are seeing increasingly stakeholder engagement be a role and responsibility that is defined, if not at the individual level, or possibly even at the team and department level. But really this can apply to anyone from communications department, investor relations department, board management departments. Anyone that's engaging stakeholders can apply this standard. And it's built on really making sure that stakeholders are understood in terms of their relevance to an organization, the value they bring to the organization, the risks they bring to an organization, and the ways and means of engaging with them that provides them with confidence that they are being heard. Now we apply this sort of what we call "you said, we heard, we did," demonstrating to our stakeholders that we have heard what you've said, we've engaged you, and here's what we're going to do about it. So not just understanding them, not just having a one-way form of communications, but really a two-way communication where we're reporting back to our stakeholders. And so we provide guidance around how to do that reporting on the back end. And of course, we're not going to do everything that every stakeholder says. We're going to hopefully use this standard to better understand the level of consideration that different stakeholders might need to be weighted as we understand their feedback, as we understand their input, but making sure that we are taking that feedback and input and demonstrating that we're doing so, and then feeding back to them with what have we done in response to what your feedback was during our previous engagements. So making sure that this cycle is implemented regularly, formally, and consistently is what this standard is giving guidance on. This one does not currently have any requirements in terms of applying it. Again, this is for practitioners rather than assurance providers. So there's no compliance need. There's no registration for this one. It's really a tool and a resource that's publicly available. So we'll just move, actually, before we jump into the recent developments, I just wanted, anything that I missed, Pepe, from your perspective on the standards?
No, I think
okay, great. So we can just look briefly at what we're seeing in the market when it comes to especially the focus on governance around ESG matters, their management, their disclosure, what that means for standard setting bodies, but what that also means for other stakeholders, such as the companies themselves that are needing to manage and report on their performance and practices, as well as others such as the investor community, for example, that's looking at this information with a keener eye for robust, reliable, and consistent information that needs to be verified. So I'm just going to mention that we're seeing sort of these 3 major trends, and then I'll just ask Tom to comment on some of these. But the 3 major trends that we're seeing in the marketplace is this shift from what used to be voluntary reporting to increasingly mandatory, whether that's driven through regulation or through public listing requirements, things like that. consolidation and integration of standards. And we're seeing that with the evolution and development of the IESBA, for example. And then, of course, focus on some critical areas within ESG, such as climate, net zero, but also big governance at the board level, but more robustness around these things. So what we're seeing historically as a flood in net zero claims and ambitions and commitments. Now these are being looked at with a more critical eye of what are your actual targets, what are your pathways to achieve these, and similarly with governance around board issues, board understanding of ESG issues, making sure that boards are reflecting the critical elements of good governance. And in today's ESG climate, this is what we're seeing a lot of focus on. And we'll talk about, Tom, if you could just introduce some of these trends we're seeing, and then we'll sort of share a little bit about how we're addressing it with our clients and standards users.
Brilliant. Thanks, Danny. Just to check, everybody can hear me loud and clear. Fantastic.
Yes.
Hello, everybody. Dialing in from London. Sorry, I couldn't be there in person. As Daniel mentioned, we're seeing many different trends that are happening, and this is coming from perspective of what we see from the regulatory and the legislative landscapes, but also what we're seeing on the ground. So the one that always comes to mind is one I'm working with an organisation at the moment, is around how they as a board are looking at all of this from a strategic mindset, but then how they put it into an operational mindset. So we see more and more now of boards accepting that they can't just do this as a nice to have. It's very much becoming that business as usual for them. So putting in place clear strategies of what they want to achieve, how they monitor that on the day-to-day, and then aligning that with what we're seeing from a regulatory perspective as well. Obviously, the different regions that we operate across, I know Daniel and the team in New York focus more on the North America and the Middle East. I'm more on the Europe and the UK side. You can see the different levels of maturity across the regions, which we're obviously all aware of. But very, very rapidly, all of them are getting into a place where they now need to integrate all of this as soon as possible, really. I suppose from our side of things, and I think, Daniel, it's the next slide that we've got up about how we okay, maybe a different one, but how we are staying with our fingers on the pulse with this kind of stuff. So whilst we are working with organisations and supporting them on that day-to-day and seeing how they react, we're also engaging in a number of opportunities. Like I was a member of your Paris Roundtable, and also I was there with Pepe at your New York Roundtable around the setting of the standards. In the different regions, we are engaging with different organisations, regulators. So we've got the FRC. I think we've got Mark in the room somewhere. I've only got a short camera, but we're coming along to the roundtable discussions as part of the whole corporate governance code consultation, and bringing in what we're seeing on a day-to-day and from a market perspective, but bringing that into a regulatory perspective as well. So we're very much being very proactive with how we can keep in touch with everything, contribute, but then also when we're going back to the people that we work with, it's helping them to talk them through what they need to do. So whilst the regulators set everything, it's how it is then implemented on a day-to-day, and that's where we come in from that advisory arm. And we've had a proud history of being engaged in a number of these opportunities over the years, and we've got a number coming up for the second half of this year, which should be quite exciting, and seeing what the latest thinking is, and then what organisations need to do to respond to that. Sorry, Danny, I think I jumped ahead a couple of slides there for you, but hopefully that covers that off, and I'm happy to pick up any questions from anybody in the Q&A about what we're seeing in more detail and how that relates.
Great, thanks, Tom. And I think Tom touched on a couple of of these engagements that we're focused on over the coming months, as well as others that we can share. Just a quick how some of these things are affecting our approach, and we'll start with how they're affecting what we see the future of standards looking like, and what our response is. So first and foremost, as I mentioned before, and as Tom alluded to, the need for greater rigor, relevance, consistency, reliability of assuring non-financial information. So of course, that's why we're here today. And our standard, while it's been around for quite some time, we're seeing a need for clarity around the relevance of our standard and how it applies to some of these trends that we're seeing. So for example, how does the AA 1000 assurance standard meet the needs of some of these regulations, or meet the requirements of the IESBA standards that are coming out and giving guidance around some of that information assurance requirements. So what we're developing to provide clarity to the industry is our AA 1000 assurance standard, ISA 3000 bridging document. So providing assurance providers with an understanding of how our standard and the ISA standard have comparable language, for example, what our language means versus their language. They really understand the technical differences, but really more so the similarities, and understanding that the AS can be useful in some ways where the ISA may not be, but also that they're comparable and relatable, and how they are. So looking at providing that clarity, enhancing our training for assurance providers so that they can understand how the AA 1000 is meeting those needs, how it applies to each of these new and emerging reporting and requirement standards in the marketplace. But also, so we have here training for assurance providers. We've also been in discussions with organizations like the IEESB and others around providing training for accounting professionals as well, so that they can understand what is non-financial assurance and sustainability data assurance going to mean for their profession. Increasingly, we're seeing as these trends are moving sustainability in this direction, the recognition of the real costs, the real opportunities, the real risks, and upside as it becomes monetized by organizations, by stakeholders like investors. This sort of function is falling, and mandate is increasingly falling under the responsibility and remit of CFO and finance and accounting. So how are we adapting to provide those professionals with the understanding that they need to understand ESG data the same way that they understand financial data, which is going to be the expectation moving forward. We did a full panel with CFOs on this just last year, and that's available on our website as well. We're looking at continuously evolving our AA 1000 series of standards, so the next generation standards, which we hope to be increasingly adaptable and certainly relevant. And as we do this evolution over the coming year or years, as the landscape clarifies in terms of IESBA, how that will be seen by different standard setting organizations, for example, we'll be incorporating those elements directly into our standards in their next iterations. So we've yet to discuss some of these sort of directional ideas and suggestions with the standards board. So in our upcoming quarterly meetings, we'll be deciding how exactly we're going to be pursuing some of those recommendations. And then lastly is supplementary guidance documents that we're issuing. So the most immediate and urgent need is assurance of GHG emissions. So I touched on this before when I mentioned our assurance standard and introduced it, but the introducing to those that are not familiar with the AA 1000 as this use case, introducing it as a great tool for GHG emissions assurance. We're providing that guidance to show how it can directly be applicable. As I mentioned, there's the type 1 assurance and then type 2. Type 1 being the application of our principles, but type 2 being the quality of ESG information such as GHG emissions. So giving guidance to practitioners and assurance providers around how to apply the AA1000 assurance standard for GHG emissions, and especially as it pertains to complying with regulatory requirements around those GHG emission disclosure assurance needs. On the advisory side of the business, we're looking at 2 areas of where this is being implemented. First is the reporting and disclosure space, which starts with the assessment of materiality. So as we mentioned, materiality is one of our 4 principles. So that was something that we were focused on in the late 90s. At the core of that, even at that time, was the inclusivity principle as well, and responsiveness. So making sure that stakeholders at the heart of a materiality assessment. So we're working with clients to apply innovative ways to understand materiality, applying this new concept of double materiality, understanding the impact to the business, but also or what's called the outside in impact to the business and the financial performance of the business, but also understanding the inside out or outward impact to society, the environment, and external stakeholders. So understanding what that means for an organization. For us, that starts with mapping and understanding your stakeholders, their relation to the business. So the stakeholder engagement standard is very useful in that practice. But then understanding how that maps to new requirements for understanding, for example, environmental and social impact. So we're helping clients to understand that and then apply it in their materiality assessment, which informs, of course, their strategy, but also their reporting and disclosures, making sure that they are disclosing on performance data around the most material topics. So we're supporting clients in developing sustainability reports, and we have seen a growth and shift in the framework. So historically, GRI, the Global Reporting Initiative, was the de facto reporting standard for sustainability reporting. We are seeing a lot of different it's very widely varying how clients are looking at this landscape of standards. We encourage clients to understand these standards as tools and resources, but what's most effective for them is going to be what's meeting their stakeholder needs and their corporate requirements. So increasingly, we've seen over the last few years a surge in SASB reporting. We've seen some shift away from GRI towards SASB and having a separate TCFD report. So as we see the emergence and dominance of IESBA, we're helping clients to navigate what that means for the next gen or next iteration of sustainability reporting. How are they going to use these myriad tools to inform the data collection that they need, but also effective disclosures? The challenge with a lot of clients becomes the resource management around this reporting and the trade-off in value. So while a number of clients need to comply with certain disclosures, they're struggling to understand where do they allocate their resources, how many of these frameworks should they be applying, is more frameworks or more standards make for better reporting? We suggest usually not, but strategic application of the right standards. And making sure that you're constantly engaging with stakeholders to understand what's been effective in their reporting and disclosure, what's missing, how can they close the gaps in information that the stakeholders are looking for. We see a range of needs, some that are looking at as ESG investors and some of these ratings and rankings, which have been certainly muddying the waters, I'll say, of ESG disclosure, but very important to some clients, some whose boards are saying, we're looking at our scores and we need to change them, and others who are saying, we've talked to investors and they don't care about our ESG score. So it's always understanding what the stakeholders need in terms of disclosures and how they can be effective in providing that information. And as Tom mentioned, a lot of the focus that we have now on more the guiding good practice is on the governance side of things. We're seeing a significant rise in focus. E&S has become more of a practitioner level, effective management, effective strategies to be put in place, accountability for the performance. But really the G is taking the dominance of discussion when it comes to managing an enterprise-wide governance, but also board governance. So we're providing our clients with somewhat more understanding around what are the emerging governance issues of the day, how do they translate what they understand around good governance to ESG matters. Boards we're seeing have a need for greater understanding of ESG matters that they never had to deal with before. So things like diversity, things like climate, things like cybersecurity, AI, and governance around these matters, which never used to be on the board agenda. So we're looking at applying some really understandable frameworks on the enterprise-wide governance side. We're helping clients to provide sort of a very clear health check. How are they performing in terms of the basic requirements for good governance? And then at the board level, we're looking to apply what we call our DIRE framework: diversity, independence, refreshment, and expertise. So making sure that the board can those that are composing the board are representing the needs of the organization, but also maintaining that independence and refreshment and good practices around making sure that the expertise are there, the representation is equitable and appropriate, and that we're really effective at the board level as well as the enterprise level. So helping clients to understand that with some basic frameworks and guidance. We mentioned some of the thought leadership that we're focused on. Actually, Tom is heading to Europe, I think, to Amsterdam tomorrow for our AFIRE event, where him and our CEO will be providing an address on ESG trends in corporate real estate to a constituency of international investors through AFIRE. And we have our CARE conference annually, which is focused on exactly this matter of understanding how can we assure, manage, and report effectively on ESG performance. We are focused on delivering value through a network of partners. So we work intensively with our university and academic partners across our different territories. We're always seeking to engage with partners on whether it's developing content, developing services, developing intelligence and expertise. Of course, working with students to help them find their way into this space, providing curriculum guidance and speaking in classrooms and the like. Nonprofits and multilaterals around developing and providing resources for members, but also as standard setters, as we mentioned, through our standards, but also through our client work. We want to be providing our standards users and our clients with all the value that we can through the network that we have. So making introductions where appropriate, bringing people into the discussion as much as possible. We very much see this as a collaborative approach to advancing the sustainability agenda, not one where it's purely competition. Certainly we will see some standards emerge as the clear winners, but we're already seeing that through collaboration, through integration and consolidation. So we're hoping to encourage more of that. And as we said, our standards we view as complementary to what's out there, and we hope to be adding value through our partnerships. We're very happy to be here today. We hope to continue the dialogue together with your organization. And there's really a huge opportunity, as I mentioned earlier, to really focus on what does this mean now for ethics when it comes to good governance around this practice. So I think with that, we can pause and open it up to questions. I know we filled a good amount of the time, but any questions about our work, about what we're seeing, about how we can take things forward, and we're all here at your disposal. So.
Thank you very much, Daniel, for this very comprehensive and interesting presentation on what accountability is doing in the space of sustainability assurance. I'm happy that we still have 16 minutes for Q&A, and I'm sure that there will be questions from the board members to you. And so I open here the floor for questions or comments. Christelle, please.
Yes, thank you for this presentation, very instructive, at least to me. I had a question about how you deal with this assurance on sustainability. You spoke about accreditation of assurance providers, right? So this means that you contribute to national scheme generally, or it's a private enterprise scheme? Because if we see what is required in CSRD, for example, in Europe, each national organization should make sure that non-professional accountants are accredited. I wondered if you were part of these schemes or complementary.
So I'll say an initial response, but happy for Pepe to weigh in as well. So we're completely independent. So I would say more on the complementary side. So not aligning with any single national scheme, but hopefully applicable to any and all. So our certification process is completely independent, and it requires completion of a certain amount of coursework through licensed training providers, and then the certification through our organization, through our standards body, which Pepe leads. So that's sort of standalone and independent, and we're monitoring these international schemes and requirements, national and international schemes and requirements, to ensure that we can meet those needs. But we're operating independently and collaborating with them. Is that appropriate?
Yes, maybe I can just add also for the previous presentation, Daniel mentioned what we are seeing in the landscape. While we are moving from voluntary ESG reporting and assurance to mandatory, we're also seeing from accountability's perspective, from the practical perspective, that there are much more demand for assurance, becoming assurance providers. So we have a long relationship with many of our assurance providers. They have been with us for almost 2 decades. But during past year, something happened. We are seeing more and more interest in becoming a licensee, which is of course great because there is a lot of work to do in the future. But same time, it brings to the topic of today's discussion here. It's about ethics and quality. So we are also taking internal measures how to make sure that all the licensees comply with accountability standards. And then this brings to this topic of training. So in the past, the training has been voluntary. It hasn't been mandatory, while we have still been highly recommending it, but we are taking now steps to making it mandatory for each and every licensee.
Thank you very much, Daniel and Pepe. Now, Chana, please.
So I have a question. Seems like you are doing the setting of the standards, the consulting, the training. So there's a lot of activity. And how do you manage the conflicts between the different parts of the business? And then a secondary question is, who monitors these auditors?
Sure, I'll speak to the conflict of interest, and then maybe Pepe, if you can speak to the monitoring. So our sides of the business, so two things. We maintain always that we can never assure information that we have worked on, right? So with clients, we always encourage and actually refer them to a long list of assurance providers that are independent. So that's a requirement that never be the case, as is standard good practice. In terms of setting the standard and providing guidance to our clients, we work with the assurance providers in terms of giving them guidance from a standards side of the business, which is independent. So our standards side of the business may lend expertise. They may sit in and provide guidance on what's happening in the market, things like that, as sort of an expert when it comes to working with clients, but they're not working on client projects necessarily. And vice versa, the advisory team is not, while they may weigh in on the development of the standards to ensure that it's reflecting what we understand as market needs based on our work with our clients, we are, again, acting as a subject matter expert, as our standards business owns and manages entirely the development and deployment of those standards. So that's how we sort of operate with two independent sides of the business. The training is most often provided by a third party, actually, that's accredited with us. So we don't really provide training to assurance providers necessarily. We license training providers to train assurance providers.
No, I mean more the monitoring part of it, not the training.
Right, so the monitoring,
yeah.
if you can.
So in the past, while we had a lower number of licensees, it was easier. Now it's becoming more difficult, and we are taking steps to guarantee that we are monitoring it better when volume increases. But we have a AA1000 issue resolution process. So if there is any suspect that someone has done something wrong and we get information on that, we take steps. So we have a issue resolution process, and we do quality control for the assurance statements and also see that everything is according to our standards. And if we notify that something is not done correctly, we take action.
Additionally, as I mentioned before, every report has to be registered in the system. So that's one way that we have also the accountability for the assurance providers. And there's also now an e-licensing platform that's been established to ensure that everything has been tagged to a specific licensee. So we have the ability to leverage that more than we used to. That's something we've developed in the last few years. As Pepe said, the traffic has increased significantly. And we're looking at additional technological implementations that we can deploy to enhance that for much bigger scale, which we anticipate.
If I may add one more thing. So all assurance statements, they can be in any language as providers decide to write them. So sometimes it's a little bit challenging to monitor everything while the language is not always the language we are speaking, but we have an e-licensing system. It's a portal where each and every licensee has to log in, and they have to log in all the information in English. So everything that has, like all the information related to the assurance process is also there in English.
Thank you. Rania, please.
Thank you very much. This is very interesting. I actually have a number of questions. The first one really is to pick up on Chana's point. So do you have a sort of a systematic, I mean, I appreciate what you said concerning the quality control and the resolution and so on, but do you have like a systematic way of observing, or let's say checking for the quality control of the reports? Like, for example, I don't know, random checks by licensee. So that's my first question. The second one pertains to the ESG report you had on one of the slides, the ESG report that sort of the guide to, I think the previous, this one. Mm-hmm. Is this available? Is this?
Yeah, we're happy to share the reports that we've done for clients, and I'll speak to this one in a minute. But yes, we do random checks. That's part of our process. Okay. So I think what will happen is, and with the technology part that I've mentioned, and we're exploring things with AI and other things where we can randomly select, making sure that we have a sufficient sample size and do that quality control checks. Right now that's done manually. And as Pepe mentioned, it has become quite onerous. So we're looking at alternative solutions to make sure that we don't slip on the ethics of that, because that's critical to being effective. Sorry, was there something?
Okay, just one more thing. Well, Daniel mentioned earlier that all the reports can be found from our website, and everything should be logged into the portal. But we have become aware that some providers are actually not providers because they are not licensees. They have used our standard and they have done the work around the world. So there are some instances that we found out that someone has been using our standard and doing the work, and we did not even know about it. And they are not even licensed providers. Okay.
Right. This is the other thing we do is check for mention of the use of the standard and compare it to the lists that we have and do maintain. Okay. Regarding some of these reports that we've issued, so one of these, the ESG report 2023, is just a client sustainability report, and we can share some links to those. The other thing that you see there, the NAREIT Guide to ESG Reporting Frameworks. NAREIT is one of our clients as well, the National Association of Real Estate Investment Trusts. Okay. So it's a membership organization for REITs and real estate companies that are publicly listed in the US. So we've been working with them to provide their member reads with guidance on, especially recently around reporting and disclosure.
So this is only for real estate, or like?
It's tailored to real estate in the sense that it has things like GRESB, LEED, and other sort of real estate related frameworks. So it's further customized for real estate, but it also includes non-real estate and general frameworks and standards such as IESBA and others. Now, this was from a few years ago already. So, for example, the IESBA will not be in that guide, but we're looking at reissuing this perhaps in the coming year. And I think one thing that we've been exploring is also providing a general guidance to reporting and disclosure.
Okay, one last thing. So this is sort of like an inventory of all the reporting frameworks that are maybe not like 100% exhaustive, but to a certain extent.
No, right, not
Yeah.
100% exhausted. It's sort of the most commonly used and applied. This was meant for practitioners that are entering the ESG reporting space and needing clarity as to the sort of flooded market of where do we start.
Fair enough.
Yeah.
My last question, do you see any most commonly used ESG reporting frameworks for the banking sector? Because I mean, you said that you operate in the financial services. So like what is most commonly used? Because I mean, you mentioned something very interesting, which is what's most effective is what is most relevant to stakeholders. So for this group of, let's say, of businesses, what do you see as most relevant to their stakeholders when it comes to?
Definitely. Yeah, I think and I think this is not just for banking, but generally speaking, we have seen this shift towards SASB and TCFD as dominating. And that's why I think it makes sense that we've seen the emergence of the Value Reporting Foundation. Integrated reporting is gaining traction, but only due to these shifts in the standards. So, and what we're seeing in the regulatory space. So looking at understanding how can this information be better integrated into things like 10K filings and others as is mandated by the SEC or other local jurisdictions. So the integrated reporting, I think, is gaining traction. The previous iteration of the integrated reporting frameworks, the IIRC, did not gain traction. So when it was voluntary, when it was guided by the IIRC, which has been around for quite some time, we did not see the traction. And part of that is because we saw it as requiring a certain maturity level and understanding of sustainability, ESG, what it means for business. It really, I think, has some leading practice principles in terms of defining value or redefining value. But it requires an organization, if they're doing that version of integrated reporting effectively, to really rethink and redesign their corporate strategy, management structure, and accounting around those value drivers. And that's not where most companies have been for the last 10 to 20 years. They've needed to understand, okay, what are the key metrics for ESG? How do I manage those? Let me keep them separate in a separate report so I can understand them separately. Now we need to understand, how do we bring the value of recognizing these ESG metrics and the value of integration without losing either. And that's what I think IESBA is seeking to achieve. So when we see the leading frameworks in the last 5-10 years, it's been those that are really defining and providing clarity around the topic specifically. And less so the integration. But I think as we see the regulatory landscape shift, we're going to see how do those get applied in an integrated fashion.
Thank you very much. Thank you.
Thank you very much, Daniel. Well, the number of questions or requests for questions that we have shows the interest of that this presentation has raised. We will extend a little bit the time, but please make sure that you are short and straight to the point. Sunam, please.
Thank you. Thank you for your presentation. My question is about code of ethics or code of practice in your term. I believe your members will have a lot of questions about ethics. So I believe you may have a function where you just clarify the questions, issues. So that's my question.
Thank you very much. This is a very good question because this is what happens every week. Although we have the code of practice and although it might be very well understood, But when it comes to practical implementation of the code, there are a lot of questions, and providers contact us and asking, okay, I understand, and you say this and that, but now my situation is this, and I used to be working for this company in the past, but I'm not there anymore, or something very specific to their relevance, their situation. So that's about practical interpretation of the code. So although we have the code and it's pretty simple and short and concise, and everyone maybe understands that or not, but when it actually comes to practical implementation, that's where we see a lot of questions. And then also, what is our part? How do we actually give the answer? Because what if the question wasn't exactly how the situation is? So we need to provide answers, but we need to be careful. What do we say? But I think it's important, even though you have a code of conduct or the code, there are these practical questions.
And we have a function that handles that. So Pepe leads our standards department, and her team will field those questions as they come in.
Thank you, Pepe and Daniel. Rich, please.
Yeah, just to follow up to Sunayam's question, your answer. Do you find that the people who call in have a wide disparity in how they would have interpreted what's in your practice code versus how you interpret it, or even between different calls you get?
I do feel that there is a wide spectrum, and many of our providers are actually Big Four companies. So maybe the culture of ethics and understanding of the code differs with some of the smaller. It's not about the size, but like there is a wide spectrum, and I think keeping everyone on the same page is important. But I've seen.
Yeah, I think that the reason, my understanding is that the reason and genesis of a lot of the questions we get is based on the specific needs of that particular incident or organization. So while the understanding of the code of ethics may not be significantly off from what is implied, it's really, okay, but how do I apply it in my specific circumstance? And I think that's what we get most often. And again, we're always trying to strike the right balance of making our standards as widely usable and applicable as possible, while also being effective enough to answer those specific needs. So I think that's where the questions most often fall. I don't know how far the understanding is, or that being the primary issue that we're fielding.
Yeah, maybe it's about many of the providers, they might also have their advisory body, and they might be working with sustainability reports, although it's a big organization and the teams are separate. But I think that's where the topic of independence comes in.
Thank you for the question and for the response. Mark, please.
That was almost perfectly cued, because I wanted to come in on independence as well. And that is when we look at independence in the context of the code, we look in two ways. Firstly, that the individual themselves is independent to be able to provide an assurance report or an assurance opinion, but also that the entity that they work in is independent as well in those respects. And part of the sort of wider consideration we look at as well is that, does the entity also adopt an appropriate quality management framework to ensure high quality outputs? As we look at the sort of considering that in the context of our code, do you see that as being something that is operational in your business and in the client base you deal with? If you had an independence requirement that was not only focused on the individual carrying out the engagement, but also the entity that they sat in? Thank you.
I'm sorry, can you just reiterate the question that you had there?
So basically, it's not only that you have to be independent to do the engagement,
right,
but your organization, all of it has to be independent if you're going to give an assurance sort of conclusion or assurance report under our code. And I'm just interested because obviously you have arrangements in your standards to provide sort of a degree of independence and a degree of protection there. But could that be something that could be extended to the employing organisations or the wider organisation that the individuals who give these conclusions work in?
I think the simple answer is yes. I think there's an opportunity for the entity to be ensuring that same independence across their own organization. We advocate for separate organizations entirely to be providing the assurance. So anytime we get a question around multiple units within a company providing those different services where there could potentially be a conflict of interest, we almost always default to guiding them away from that concern, that risk. Granted, we can't control every iteration, and there are companies, I think, that do have the necessary measures in place to ensure independence even within their company. But more often than not, I think it's more concerning than not. So that's the guidance that we do stick to. Of course, we practice that ourselves, but I don't know if there's anything else when it pertains to. Yeah,
covered.
Does that answer your question?
Yes, thank you. That's helpful.
Sure.
Thank you very much. Felicia.
Again, thank you for a very good presentation. I just wanted to know the process in terms of coming up with these standards, which are globally acceptable. Do you go through the consultation process and also get stakeholder engagements like any other standard setting body? And how is it done in practice? Thank you.
Yes, I think it's a long process due to those requirements, certainly. A multi-year process with engagement with thousands of stakeholders. And so Pepe can speak to the specific process more eloquently than I can, certainly, so I'll pass it over to her. But it is completely based on the engagement of the users and the stakeholders across the ecosystem, through both panels and also public consultations and invite consultations. So there's that iterative process where we make sure that, which I think can be quite exhausting, because you get to the point of certain words being points of great contention between different stakeholders, or the way that sentences are written, because they actually do have implications for how things are then implemented. So it's certainly a long process, a tedious process, but one that is stakeholder engagement driven. But Pepe, I don't know if you want to just at a high level talk through the process.
Actually, you again pretty much said it all. I just want to add that it's a multi-stakeholder process, and it's very important to make sure that you have relevant members in the working group, and also who are commenting and being in the reference group, and also that enough people from different walks of life are actually, and regions are participating in the public consultation process. So it's a multi-stakeholder process. And
so we have a couple of tiers of that multi-stakeholder engagement process. So of course, Pepe and our team are the drivers of the content of the standard. We have, as we mentioned, the standards board, which is part of the organization. But that working group, which she mentioned, is formed for each standard development process iteration. So there will be a working group formed with representation from different standard setters and other organizations. And so they're formed right at the beginning of that process. They provide their input at the early stages, and they also do reviews throughout. And then additionally to that is the public consultation. Are there any other moments of consultation that haven't been covered then? And then, of course, the board gives their guidance and also does a full review of the standard as well.
Thank you, Daniel and Pepe. Christelle, do you want to come in again?
Yeah, just one additional question. I know that, so this presentation is, thank you very much. I know that you contribute also, or you will contribute to the our expert group work. Do you intend to answer to our exposure draft?
I'll let Pepe speak to this one.
could you please? Repeat the
She's asking about the
Yes,
exposure.
question.
you already make
Yes.
a contribution to our
Yes.
work, being present here and contributing to our expert reference group. I was asking, do you intend to answer to the exposure draft when it is issued at the end of the year?
Of course, we cannot wait to that. Thank you very much, of course.
No, thank you for including us. And I think Pepe and Tom have participated in some of the roundtables as well, which has been extremely valuable to us, in addition to us being able to hopefully share something of value with you. And so the comment periods and the exposure drafts are critical to us as we move forward together.
Thank you very much, Gabriel. Just a couple of questions and very quick, if I may, Daniel. First question is, how would you see your suite of standards, and maybe it's just the assurance standard, working within the context of the CSRD? Would you see your standard as being a standard that will be accepted within the EU as a basis for mandatory assurance? That's number one. And number two, it would be helpful if you could share a little bit as to the backgrounds of those licensed assurance providers, those licensed assurance providers who accountability actually vets and authorizes in terms of the use of your standards. Thank you.
The first one.
Sure. So the assurance, the two questions were the assurance standard within the context of the CSRD, and Tom can feel free to weigh in as well as he's watching that develop closely. But then I think the second question around the assurance providers that Pepe can hopefully weigh in on. We do see the assurance standard as something that will support the requirements of the CSRD. We are hoping to engage increasingly actively with those bodies to make our standard as available as possible to them, but also to be recognized as needed, so that those that are needing to comply can know that they can look to us as an option. Certainly it meets those needs. I think the question is the awareness of the necessary stakeholders to be turning to the standard as a resource and a tool for what they need to do. And so that's at least our high level approach. Tom, I don't know if there's anything else that you wanted to comment on as it relates to the CSRD and their assurance requirements there.
No, I think the main thing is when those opportunities present themselves, and we're quite proactive with engaging with the relevant bodies to ensure that this is factored into the next stages from a regulatory perspective. I think Daniel, you probably covered it off, but no, we take a proactive approach to ensure that we're working in collaboration with those bodies to ensure it all aligns.
Yes, Pepe.
Okay, I'm answering the other question about the vetting of the assurance providers. So in the past, while volume was much lower, we had pretty much personalized contact with them, and everything was much more personalized. But as Daniel mentioned, everything is still today done manually. And while we are seeing the increasing demand becoming an assurance provider, we have also a little bit internally been worried about this process. How do we keep track on everything? How do we vet everything that everyone is according our standards? So we are currently updating that process. And especially, it's not only about the qualifications of the company or provider, but also about their intentions. Why do they want to become an assurance provider? Because some of them might see this as a big market opportunity while we are moving from voluntary to mandatory assurance. So unfortunately, this is the reality. So we are also updating our processes.
Was that the question that you had on the providers? Or?
Thank you, Pepe and Daniel. We still have two questions, and then I'm sorry, but we will have to close, being sure that we will have the opportunity to keep on speaking. Yao Shu, please.
Thank you, Chair, and thank you the presentation. My question is about the ESG standards adoption. And I wonder that what has been done for the board to promote ESG standard adoption in the different jurisdictions. Thank you.
Sorry, the question was what has been done by whom
Oh,
to promote this
by that,
ESG standards?
for the board to promote ESG standard adoption in the different jurisdictions.
I mean, yeah, sure. Is that a question? Is that a question for accountability, or is that a question for us, for ourselves? Not sure.
It's for accountability. That's to push the ESG standards in the jurisdictions.
So we don't, we remain neutral on the standards as sort of our standard position. We do not advocate for any one standard in any jurisdiction. We see ourselves as hopefully adding value and understanding for what the different standards are, how they can be applied in terms of the different ESG standards that are out there. Obviously, our standards function, and Pepe has her focus on expanding the use of our own standards. So we do promote them as any standard setting body would through standard marketing processes and also and hopefully more meaningfully through partnerships and providing an understanding of how our standards can be used. So increasing the recognition, understanding, and access to our standards is sort of our approach. When it comes to ESG standards, generally, we are not advocating for anything specific to be done in any one jurisdiction, but we are seen hopefully as a resource to both those compliance and regulatory bodies, as well as the practitioners that need to meet those standard requirements. I don't know if that answers your question.
Okay, thank you.
Thank you, Daniel and Yao Shu. And finally, Paul, please.
Thank you so much for that. I think the presentation was very, very deep. And if anything, the question on the other side of the equation, as you look at the impact and directions giving emerging markets and developing markets, what kind of uptake and impact are you seeing yourselves having? Or do you almost feel sometimes jurisdictions kind of take a step back because they're like, yeah, we can't do that yet. We don't have that depth of capacity. And especially when we start talking about the needs around independence. When you have small, tightly packed communities, how do you achieve that in much smaller markets? Thanks.
This is a great question. Thank you. And I think most of the activity has been in more advanced markets, certainly, right? Where the markets themselves and the economies are more advanced. The regulatory bodies are playing a more active role in dictating what those professionals need to be doing. But as we see the emerging markets come through, I think this is a critical question of how do we guide them based on a different set of resources, capabilities, and the need to still provide the same level of accurate and reliable information. We have had a main focus of our standards usage in certain territories. So while we have had activity in parts of sub-Saharan Africa, for example, it's been concentrated more in South Africa, I would say, right? And so I think we see what's visible to us, at least, the traction that we see through our engagement channels, through our portals and things like that, has been predominantly in more advanced markets. But I think that those pockets are serving probably the emerging markets a little bit more as well. So South Africa, I think, is a good example as an area where we have had our most activity is in Asia. So we have a lot of focus, and hence why we're looking at Seoul as potentially opening a new office there. But Seoul, South Korea, and Taiwan being the predominant markets there, but plenty of activity in China as well in more rural regions. But that's not where the centers are of activity for us. So we don't have as much visibility there. And I think as probably as this grows, as things become increasingly digital, we're going to have to respond to that more effectively. But as of now, we're working directly with our providers in all markets in the same form and fashion. So we haven't had any need for a different approach based on any specific economy context or any specific geographic context. We're trying to apply the same standards pretty universally. Pepe, I don't know if there's anything else to comment on in terms of our experience in other regions.
No, I think that you covered everything very well again.
Thank you very much, Daniel, and thank you very much, Pepe, and thank you to the board members for these questions. This was really a great moment for us as a board that is developing ethics standards for sustainability assurance and independent standards for sustainability assurance. This is really about, well, I had my own questions, but unfortunately, it seems that this board is quite consistent in terms of the line of thinking. So my questions were mostly Chana's question and Felician's question. I have another question, but I will not ask you to answer this time, but I'll leave you some tips about it. You mentioned that your standards are complementary to the other standards, and I'd like to see, not now, but so we can take it offline. What's your vision about your standards being complementary, for instance, with the standards that we are developing and the standards that IESB is developing? This is a critical question, and I'm sure that we'll have the opportunity to explore further how this complementarity could work. Thank you very much. The number and the depth of the questions shows the interest that your presentation raised. It was very informative, insightful, and I think that you left us with a lot of not only information but also open questions that we will be very happy to address while going down this journey or in this journey of developing our own standards. Thank you very much. Thank you very much for making yourself available to be here today. Thank you, Tom, as well, for attending online from London. And we are going to break now for 20 minutes as we had planned, a little bit later than expected, but I think it was more than worth to spend this time with you, Daniel and Pepe. Thank you very much.
Thank you, Gabriela. Thank you, everyone. And please feel free to approach us. We're happy to keep this discussion going. You can reach out to us anytime. We're happy to continue speaking with you. This is a point of great passion for all of us. So happy to keep it going. Thank you.
Thank you.
Thanks, everybody.
Thank you.
So we will be back at 11:12. Sorry, yes, 11:12.
1, 2, 1, 2.
Thank you very much for being back on time. We are a bit late in our schedule, so let's see if we can recover some of the time. But I think that we will be good anyway, and it was worth spending a little bit more time on the presentation. The presentation from accountability was already part of the second topic in the agenda on the common issues on sustainability, which means issues which are of interest for both working groups within the task force, the sustainability task force, and of course, for the board, topics which are common to both. So in this next part of the session, I will immediately give the floor to, well, Mark, Sylvia, Christelle, Laura, and whoever more will speak to us. But the objective of this agenda item is to update the board on recent task forces activities and outreach activities with respect to sustainability, and to address some common issues which are relevant for both Workstream 1 on independence and Workstream 2 on ethics. And the board will be asked to consider this report from the task force and discuss and provide input to the common issues. That's it. So I don't know, Sylvia, is that you? The floor is yours, task force, for the presentation that follows. And thank you very much for preparing the presentation.
Thank you very much, Gabriela. Yes, so in the next session, we would like to talk about the common issues that are actually relevant to both Workstream 1 and Workstream 2. So this is the proposals that were developed jointly as a task force. And at the moment, there are many members in the task force. I wouldn't introduce them now, but I will leave it to Mark and Christelle that at the respective sessions to introduce the composition of the task force. And what we are planning to cover today, and I tested it, I promise, but now it's not working. Okay, here it is. So briefly, we would like to just provide an update on the recent outreach activities, just a couple of words about the roundtables, and also on the other outreach activities that has been covered by Gabriela and the other task force members. And after that, I'll return to Mark, who will provide or who would talk about the presentation of the ethics and independence standards for the sustainability assurance engagements. So the feedback we have received from stakeholders and also from the roundtable participants. And he will also talk about the task force proposal regarding the presentation. And finally, Laura will present or say a couple of words about the establishment of the sustainability reference group. But before I start the presentation, I think Mark just would like to say a couple of words.
Thank you, Sylvia. And I think just wanted to say sort of a couple of things. Firstly, is we recognise that you've had an awful lot of papers for this meeting, which I don't apologise for, no. And one of the things that we'll be doing as a task force is thinking about how we use our next meetings to be able to provide things to the board perhaps a little earlier for consideration, because we know that there'll be another big meeting to talk about sustainability in due course. So that's one. Secondly, please try to remember that in framing everything that we've done, we went away in March to create equivalent standards for sustainability to those that apply in an audit of financial statements. And that's what we've done. And the third thing is that an awful lot of work has gone into adapting the code for sustainability engagements. So what we've done is we've taken requirements in the code and amended them for sustainability. What we've not done is change the requirements. And we've sort of worked on a basis that this is not the time to change the requirements in the code. This is the time to amend them so that they support sustainability engagements. And I'd please encourage colleagues to bear that in mind as we go through. because we've got a lot to go through. And if we try and unpick existing requirements, we'll probably never get to the end. So that's just really a sort of framing sort of bit. So I'll hand over to Sylvia for the first part. Thank you.
So first, we would like to talk about the outreach activities. Sorry, Asta, can you just, and then the next one. Thank you. So first about the roundtables, I'm sure you're all aware of that the IESBA hosted 4 global roundtables in Paris, Sydney, Singapore, and New York throughout March and April. And the objective of these roundtables were basically just to reach out a wide range of stakeholders and get their input on the early directions of our project. It was really important and crucial that we were looking for input not only from professional accountants, but from non-professional accountants as well. As we has reported back in March, there was a quite busy and intense work since the beginning of the year. So we could identify those individuals and organizations that we wanted to invite to the table. I would like to thank Carla Karavician, who coordinated the communication with these stakeholders group. So as a result, we have I think a really great number of representation. We have 142 participants from a wide range of stakeholders group. And as you can see on this table on the slide, no surprise that there was the first 2 stakeholders group from the accountancy profession, so accounting firm and professional accountancy organization. But I think we managed to get a really great number from non-professional accountants as well, and we could get a great input from them and hear their views and especially their challenges regarding the ethics and independence challenges they are facing when they are providing these services. So the participants were from 84 organizations. That's what they indicated. But I just wanted to emphasize that the participants did not officially speak or represent their organizations. And what's also relevant that the discussions were held under the Chatham House rules. So when you are reading the summary in the agenda item 2A, we are not indicating the specific views of individuals or organizations. However, what we try to present to you is what were the general views from specific stakeholder groups, if it was relevant to the topic. The agenda of these roundtables were the same for all 4 roundtables. As we mentioned in March, participants were provided with the briefing notes regarding the objectives and the directions of the sustainability and the use of experts project. And these briefing notes included the topics for the participants' consideration. And I would like to thank here for the board members, Mark, Christelle, Rich, I think it was Chana, Andy, Laurie, and also Kristen, who led the discussions at the breakout groups. And they did a really excellent job in moderating these sessions, so we could get a really useful input from the participants. I don't want to talk about the specific inputs here because workstream 1 and workstream 2 we are referred to the input we have considered while developing our proposals. So I would quickly just jump to, thank you. To a couple of other outreach activities that we participated in Q4. This is really just a couple of examples. If you consult or if you refer to agenda paper, I think 1B, that provides a whole list of the outreach activities we carried out in this quarter. So the first one, I would like to mention the coordination or our collaboration with ISO. So ISO has just established a working group, and the working group is responsible for developing the standards on the validation and verification of sustainability information. And in this working group, there is an IESBA staff and an IEESB staff member who participating as a liaison member. So the liaison member role provides us the opportunity to comment on the standards, and we can distribute that to our organization. But obviously, we have no votes within the working group. So I think the working group is this ISO working group is planning to have the first draft ready around September. So we are planning to provide it to the working groups and commenting on the standards. And the other event was that coordination with ISO was the CASCO meeting, the Committee for Conformity Assessment, where Chana participated and presented as a keynote speaker. So maybe I would just turn to Chana just to say a couple of words about this meeting with ISO.
Thanks, Sylvia. Yes, it was on the 26th of April. So it's an annual meeting that they have. And we were invited to be part of a panel, the ESG keynote panel. And it was also the IEESB because Josephine Jackson spoke on behalf of the IEESB. And she pretty much presented the current status, which was very similar to the slide deck used in the IESBA roundtables on the IEESB position. And then I spoke about the status we were at so this predates the task force meeting that we had in May in Lisbon. So it was a status as at the end of April. Thank you to Ken and Sylvia for preparing the material. So I provided them with an overview of the code because they wanted to understand how our framework worked. And then I talked about the initial thinking of developing standards that are at least equivalent to the audits of financial statements. And also acknowledge that most probably most of the sustainability assurance done under 3000 would have been using Part 4B, and talked about entities of heightened public interest, and also provided the timeline of where we were going in terms of exposure draft by the end of this year and the final standard by the end of next year. We got a question on professional competence and due care, and I think it was asked from the context of, do accountants have the necessary skills to do this work? I mean, I drew attention to section 113 of the code that talks about in anything what we do, we need to have the necessary competence, or we need to have someone in the team or engage someone to be part of the team to deliver the work, and that we are aware that firms are recruiting quite widely for their ESG teams. So whoever delivers the service would have the necessary skills. So that's sort of a quick update from that. Thanks, Sylvia.
Thank you, Chana. So the next event was the EPR standard setting and coordination working group in Madrid. And also there was an EPR plenary meeting in DC months after in April. So I would just turn to Ken or Gabriela to.
Yes, thank you very much, Sylvia. I'm happy to brief the board on the first meeting with the Standards Coordination Working Group of EPR. EPR for the uninitiated, that's International Forum of Independent Audit Regulators. We met with them, Gabriela and I, at the end of March in Madrid. And just in terms of the key takeaways, there were a number of questions that raised with us because we had briefed them on the progress on our sustainability work. And in terms of the questions that came up, well, there was first of all a general question: does IESBA see any competitors in the field of standard setting for ethics and independence? It was a general question, and I think Gabriela, you responded quite adroitly to that one. There was also a question about the landscape for sustainability assurance as we stood today, as we stand today. To what extent are professionals outside the accounting profession involved in sustainability assurance? So, and that's a question that, in fact, sort of permeates a bit of the feedback we collected over the course of the second quarter as we met different stakeholder groups. People really want to get a better understanding as to who's involved in the area of sustainability assurance and who's kind of overseeing them, et cetera, et cetera. So I'll maybe touch on this a little bit more later on. There was an exhortation to IESBA to work very closely with stakeholders as much as possible. Importantly, it was emphasized to us that it's crucial to work with the non-professional accountant part of the stakeholder community, especially standard setters, such as the International Organization for Standardization, ISO. Accountability, importantly, was mentioned as well. So there is a level of awareness, at least within the context of the audit regulation. It was also emphasized to us that it would continue to be important to coordinate with IESBA. There was a recognition that it will be challenging for the non-PAs to understand and comply with the independent standards that IESBA sets, recognizing that standards that this board has been setting has essentially been for accountants, for auditors, and therefore the realization that's going to be a bit of a step up for the non-professional accountants. The December 24 timeline that we had laid out in terms of the finalization of this project on sustainability related standards, there was an expectation that there would be some challenges regarding mandatory reporting and assurance and how these standards are going to be working to support both mandatory reporting and assurance. There was a bit of discussion around the use of experts. How are we going to be used to assist issuers, reporters in putting the data together and reporting on the information? What if the service provider is both the assurance provider and the experts themselves? They're doing both. They have an in-house expertise. So questions around experts, and also an open question as to whether our project on experts will address the use of experts by non-professional accountants. And that's more for the experts task force to deal with, as we know. So that's a bit of the sort of key takeaways in terms of the standards coordination working group questions, really, that are indicative of really people trying to get their minds wrapped around the developments, because it's a very fast moving landscape, as we know, with regulation coming in, with a lot of companies scrambling to build market capacity, etc. So let me just turn maybe to Gabriela, if there's anything you'd like to share on the plenary meeting engagement.
Sure, thank you very much, Ken. I'd just like to add to what Ken said, that we had the opportunity on the same week that we had this IFIA meeting with IFIA in Madrid to hold a couple of or a number of outreach activities with very different stakeholders in Madrid, like the vice governor of the central bank, the chair of the Securities Commission, who is also the chair of the Sustainability Task Force of IOSCO, the chair of the European Federation of Financial Analysts, etc. So we always take this opportunity to meet with as many people as possible to make sure that the outreach is really what it should be. But with respect to the plenary, the plenary took place in Washington on the 26th of April. And the two topics that I participated in a panel with Tom Seidenstein, chair of the IESBA. The panel was moderated by James Ferry from the FRC. And the two topics that they wanted us to address were mainly sustainability and fraud. On sustainability, the questions and the comments were in line with the questions and the comments that many other stakeholders are making. So there is some consistency in terms of the questions that are being directed to us, and it's mainly about the profession agnostic approach and the non-professional accountants, Mainly the questions are, why are you doing that? What for? And how do you make sure that these standards will be effectively implemented, and who is going to monitor that? And it's always necessary to clarify, and I think that each one of us around this table is responsible to make this clear to everybody, that question should not be addressed to the IESBA, because it's not our competence, authority, or subject to decide whether the standards are going to be used and applicable by non-professional accountants, which professional accountants, and how the implementation and the enforcement of this implementation is going to be made. What we are doing, and this is what I'm trying to leave clear everywhere, is that we, the IESBA, are responding to a need that we identified in the market, and that IOSCO called us to help fulfilling the gap, because these non-professional accountants are already active in this space according to different frameworks, in different jurisdictions, but generally until now they are active, as we know, and they are already almost half of the market. So our mission and our job is to develop something that to provide something for the public interest, because it is in the public interest that, given that these non-professional accountants are active in the sustainability space, sustainability assurance space, they may use standards which make their work as reliable as the work being done by professional accountants. So it was left very clear, and I think that speaking to regulators, the regulators understood and said, well, it was clear that this is for us and not for you to decide and to set up a framework which works for the effective implementation and enforcement. So on sustainability, these were mainly the main topics that they wanted to address and explore and clarify. On fraud, there is always a kind of an elephant in the room, because the IESB has a project on fraud and we don't have a project on fraud. So my job there was mostly explaining to them that we don't have a project on fraud, because everything we do has fraud as a background, and all the ethics and independent standards aim at addressing and fighting fraud. So it would be a little bit strange if we had a project to develop standards on fraud, because it would mean that the standards that we have, the ethics and independent standards, were not fit for that purpose. Everything we do is about fraud, is having fraud in mind, and is about fighting fraud. I hope to have left it clear. I think it's starting to make, people are starting to have this idea, but understanding that greenwashing is a form of fraud. What we are doing here on sustainability, developing sustainability standards, is because of greenwashing, which is a form of fraud. So anyway, and now this gives me a good segue to the Financial Stability Board, Sylvia, if I may, with your permission, because the topics were the same. There was not an agenda on sustainability and fraud, but given that the private sector or the firms, the GPPC were there, and the topics that they wanted to address and that were naturally driven to were the topics of fraud, the topic of the trust in the profession, culture of the firms, tone from the top, attractiveness of the profession. These are the topics and the items that everybody nowadays want to discuss. They are all connected. We cannot discuss the to my view, we cannot discuss the attractiveness of the profession without discussing the trust in the profession, fraud cases, wrongdoing, and etc. And so this was a very good discussion, of course, involving, again, sustainability, responding to the same questions that were clearly made. How can you ensure that the standards that you are developing are going to be effectively implemented and enforced? So I had to explain again in front of a different audience that this is we understand the question. It's not for us or on us to respond, because we don't have that authority. There was also a good discussion around sustainability reporting and the ethics standards that we are developing for that purpose. People are also, I think, getting awareness that before assurance there is reporting, and that assurance is based on something that has been reported before, and that most of the problems start there and not immediately at the assurance level, and so that making sure that that these audiences understand that the fact that we are developing standards for reporting, sustainability reporting, and sustainability assurance was absolutely necessary to make sure that all the sustainability information supply chain would be covered and that we would not leave anything open. So, in a nutshell, that's it. But there is consistency between the topics that the different audiences, regulators, private sector, multilateral organizations, etc., want to address. Let me just tell you that the Financial Stability Board Roundtable is a forum where many different stakeholders meet. So it's extremely important because it's a place where you have the firms, you have the central banks, you have IOSCO, you have people from the SEC, people and representatives of many different stakeholders. So it's always a good opportunity to convey our message. The purpose was mostly to update them since last year when I had the opportunity to attend the same roundtable. So they wanted to know what was the progress made since last year when I was there. This was not simply a list of standards, but we were still exploring what to do and how to do. So it was important for them to know that we are far beyond where we were last year in June.
Thank you very much, Gabriela. And I think the next point is about the meeting with the IESBA representatives, and Ken.
Yeah, thank you very much, Sylvia. In relation to the meeting with the IESBA, it really was with some of their senior staff members. First of all, Granville Martin, who came to our board last year to give basically an overview of the work happening at IESBA. Granville is the Director of Regulatory Outreach at the IFRS Foundation. I also met with Jonathan Bravo, who is the Director of Regulatory Affairs, also at the IFRS Foundation. So that meeting took place at the end of April 27th. And let me just share a bit of what they conveyed to me during that conversation. At the time, the final drafts of the IESBA standards, S1 and S2, were in ballot with a view to basically voting for approval and issuance by the end of June. So hopefully we'll see those two standards coming out in the next couple of weeks or so. They shared I suppose a couple of concerns, if I can put it that way. One was that IESBA not do anything that would put any undue constraints in terms of the supply of information on the reporting side, because clearly IESBA's standards speak to the reporting. So with the understanding that IESBA deals with the ethics and independence, there was a little bit of concern to make sure that we really have that in mind, because the market is really calling for greater transparency, more information, etc. So that was a point of emphasis from their side. They had a number of concerns from their standard setting perspective, which will also preoccupy this board. And one question they'd ask is how IESBA would envisage its standards being adopted at the jurisdictional level, because on their side, equally, they are concerned to make sure that their standards, being global standards, will be taken up at the national level. They have been reminded in their outreach to the regulatory community to engage in coordination with both IESBA and IESBA. So on their side, they do see really connecting with us and staying connected with our board and the IESBA as being quite important. They asked for our participation, and just in that context, indeed, they asked for our participation at the ASEAN Capital Markets Forum. The ASEAN Capital Markets Forum is basically a grouping of the securities regulators and investors, etc., in the Far East, in the Southeast Asia region. And that's at a conference IESBA is organizing jointly with the Capital Markets Forum there at the end of June. in Singapore, and they've asked for a senior member of staff to participate there and share a bit of the progress of our board on sustainability. And Jeff is there, so he will be attending this this conference on behalf of our board. They also shared that a critical issue is, from their perspective at least, is how non-PAs will be overseen and regulated in terms of the use of the standards. That, you know, from their perspective, they do see it as also being a question that's very relevant to us. And we basically committed to maintaining that dialogue on a quarterly basis. So our next touch point will be after June, once their standards have been approved and released. So I will be reconnecting with them on July 18th. And towards the end of July, Gabrielle and I will be meeting with Lee White and Jonathan Bravo. Lee White is Executive Director at the Everest Foundation. And basically we'll be touching base in terms of the latest status on our two boards work streams. So that's a bit of a roundup on the meeting with IESBA. So maybe let's pause here just to see if there's any questions before we move on. Sylvia, if I may ask, any comments, questions from anyone? No? Oh, Rania?
So I'm just curious if there is any thought around consolidating the requirements, the professionals who engage in the sustainability reporting, because I think if that landscape is sort of consolidated, it makes the job of the standard setters across the board, be it, I mean, ethics or assurance, so much easier, because right now you're sort of trying to set the standards for like everyone, everything, doing anywhere. It's really very challenging. So I think, I mean, recognizing full well that they are, you know, they are asking all those questions of us, but at the same time, they have a responsibility to play because they are the ones with the authority to enforce. So.
Yeah, well, I'm not sure if you have enforcement authority, but they do set these reporting standards. But maybe, let me share a bit of an insight that we collected from our German outreach precisely on this point, Rania, because from our perspective, we really don't have insight into the preparer market as yet. It is a fast-moving evolution, as we know, and everybody's scrambling, companies importantly are scrambling. But let me share a bit of the conversation that we had with Georg Landfermann, who is the president of the German Accounting Standards Committee, and I'll invite Jens and Gabrielle as well to share any takeaways from that meeting. But we met with Georg in Berlin, and he shared a few things with us. Number one, the Accounting Standards Committee of Germany has basically just reformed its strategy last year to focus on sustainability reporting, because really that's what's happening in Europe, and really to address the challenge of providing the standards and to show commitment importantly to IFRAG being the standard setter for sustainability reporting in Europe or in the EU. And that's in the context also of the efforts of Germany to be engaged at the international level, a case being in point being the establishment of the IESBA headquarters in Frankfurt. So that was a bit of context he shared with us. But in terms of comments or insights on the reporting side, again, he was coming from the accounting standards, so a bit of the reporting. What he said is basically there's a lot of variation in levels of awareness amongst issuers, companies in terms of sustainability reporting. Again, this is an evolving market. From his perspective, he saw a number of practical issues. First of all, how are we gonna get eventually to integrated reporting? Because that's a bit of the where we would like to see the markets evolve. There's going to be concerns around the length of sustainability reports, because companies can produce a lot of information, but how do we really make sure that it's all digestible, etc.? How to extract the information and from the different parts of the company and organize it in a way that's understandable, relatable, impactful, etc. So again, that's a challenge from the reporting side. And who has the final say in terms of what gets into the sustainability reports, the information. So these a number of questions, a number of practical issues, and then maybe that I'll go next to the question that Rania said, and that was more an insight that he shared with us, and in that he saw, at least from the perspective of Germany, that at least or around 80% of the sustainability reporting project, as he called it, is actually from and by PAs. In other words, it is being driven by the accountants within the companies. Around 80% is his assessment. So that's maybe goes a bit to your question, is there consolidation or not? We don't really know, but currently it seems to be driven mostly from the accounting profession, or at least the accounting and finance departments. He did emphasize the importance of non-PAs following the same standards as PAs. So in other words, there should not be sort of any arbitrage in terms of use of standards. From the perspective of German companies, he shared a bit of his views. He saw it as important for them to be international, or at least have an international outlook for consistency, for purposes of consistency. He saw it as important for IESBA and IFRAC to be aligned in terms of their standards and reporting. He saw a degree of uncertainty amongst companies in terms of how they're going to be reporting sustainability information, because as I mentioned earlier, ESG's report is developing very rapidly, very quickly, and there's a huge need for guidance out there in terms of how to implement the standards. And he did know that it's going to be even a challenge for the accountants themselves. In terms of how they're going to assist and provide the support and reporting. And from there, a practical concern that's, I think, all market participants are encountering right now, and that is a war for talent. How are they going to get the talent that they will need to ramp up their preparations for sustainability reporting? And a couple of final things he did share with us is to pay attention to interoperability of standards from the perspective of the capital markets. So our standards, standards of IESBA, others as well, potentially our accountability. So making sure that our standards can be working together. And the issue capacity is a real issue, it's a practical issue, but he saw it as an issue that needs to be addressed over time. There won't be any silver bullet. It won't be resolved overnight. And he saw it as important for companies to not try to reinvent the wheel, but to leverage already the systems they have and to build over what they have. And yes, first year implementations can bring a lot of challenges. So from his perspective, he saw that. So let me just pause here. Jens, Gabriela, anything from your sense of the meeting that you'd like to share?
Perhaps only one remark, because it's also an actual development. We discussed with him about the ESRSs and the process of implementing them. For your information, the European Commission has published last week the draft of the delegated act, which is a technical term, which are the 12 ESRSs, which some, how to say, changes toward the EFRAG draft. But we also discussed with Georg the problem of the timeline. It's only 4 weeks process of commenting, and how difficult it is not only to get the talented people and the experts, but also the resources at that time, with all these postponements in the last few months. So that's an actual observation, and we will see. And the Commission has to publish them now, because they should be in place from the 1st of January, and for that they have to finalize this in August. So you see the time pressure. And the difficulties, even though the German Accounting Standard Setting Board has relatively huge capacities, because all the preparers are giving input, they have problems to follow this process, especially if it's beyond the big capital market players, for example, for smaller practitioners, etc. So we discussed all these items.
I don't have anything special to add, except that, yes, one of the good things of having jet lag is having time during the night to read the 12 standards of IFRAC. That's what I did this night. And yes, 4 weeks to respond to that public consultation. It's really very, very narrow. With respect to the German outreach, Ken, I think that you covered it all. I'd just like to thank Jens Paul and Jens Engelhardt for the wonderful outreach initiatives that they provided us and for organizing it all. And it was really a very, very stimulating, I would say, week in Berlin, speaking with very different stakeholders. But I think that we came back much richer after that outreach initiatives.
Well, thank you, absolutely, Gabriela. And I did have another meeting. I wanted to just report back as part of the German outreach we did. We had a number of other meetings, but I just want to highlight the key ones. We did have a meeting with the representatives of the German Ministry of Justice and the Ministry of Economic Affairs and Climate Action. I think there were about 6 individuals, 5-6 individuals at least. So they did bring out their teams. And my sense is that they had a lot of questions. They really wanted to understand what's happening out there, because they're looking at basically the developments in sustainability reporting and assurance. Well, first of all, from the German context, and secondly, from the EU context. And they wanted to understand the international background. So they did acknowledge that, yes, other jurisdictions do allow non-accountants to provide sustainability assurance, but they wanted to understand basically how jurisdictions are actually accommodating those non-accountants in the area of sustainability assurance. And any reasons why, importantly, those non-accountants are in the market already. What was impetus for them to actually already be quite active in the area of sustainability assurance? And also they wanted to know how far those jurisdictions are along on the journey of sustainability reporting and assurance. Because remember, within the EU, basically reporting is going to move from voluntary to mandatory reporting. And how are other jurisdictions coming along in that regard, in terms of mandatory reporting? Relative to the implementation of the CSRD, they did inform us that they have a deadline of July 6, 2024 to transpose the CSRD into German law. So they have a bit of a tight time frame for themselves. They said they would effectively need a completely new framework to implement the CSRD in terms of the training, the certification, the licensing, etc., to apply to all providers. So again, all of these will need to be set up to give effect and operationalize all the requirements within the EU and Germany. In terms of the regulation and oversight of sustainability assurance providers, they said no decisions yet. So that's again something that they are going to have to work on from a policy perspective. There was a bit of discussion around the trend of regulation towards a greater focus on services rather than who's doing the services. And I think that's a trend that's quite apparent within the EU, but they wanted to really also flag that to us, that the focus is changing from the individuals doing the services to actually the services. And they encouraged us to engage further with the Commission itself. Yeah.
Which we will do very well over the next few weeks. I think that Paul has a question.
Thank you so much for that, and thanks for those highlights. I'd ask maybe just to take a step back with this question. We heard the session this morning about Adaptability's stakeholder engagement standard. So if we vetted ourselves against that standard, what would be our assessment of how we've gone through the stakeholder engagement process? And almost a double layer on that is, even when we're looking at stakeholder engagement, are we focusing on the centers where there's the highest volume of sustainable information being produced? Are we looking at the areas where the right kind of sustainable information would have the most impactful impact on global sustainability? Just think the simple realities of even when we look at the very low carbon emissions you're seeing in many developing economies, means there's no information being generated. But if they were guided appropriately, you'd have much more meaningful long-term impact decisions being made that would really support global sustainability in the true sense, not quality of information, but the quality of the world around us. So how is that informing the way what we're doing? Sorry for very unfair questions.
It is very, very profound, I would say, your question, Paul, but absolutely. I mean, maybe it's an invitation to this board to measure its stakeholder engagement against AA1000 stakeholder engagement standard that's issued by Accountability. But it is very appropriate, I think, for this board to do a bit of reflection in terms of its focus, in terms of strategy for stakeholder engagement, and are we connecting in a way that's balanced, in a way that can be as impactful as possible? Because yes, we can be very well active in the arenas that are most active, but when we look at it from a global perspective, it is in a sense a sum total of the impact that we make that's going to shift the needle, if you will. And Paul, you have a good point to make, which is that if certain jurisdictions are in the sum total reporting low emissions, is it that the information is not actually being produced and made available to the markets to make that assessment, or is it that actually they are already on the journey to, net zero, or whatever X% reduction in carbon emissions? So that's, I think, is an open question for us, and this board can have a role, can have a contribution in terms of really contributing to the changes that needs to happen. As we think about the work that we do in service of the people and the planet, etc.
Thank you. Then I think we are still in Berlin in Germany, because the next meeting was the IFAC S&P Advisory Group that took place in Germany, and Ken, Gabriela, and Andy attended the meeting. So maybe I would turn to you first, Ken.
I'm happy to start first, and Andy and Gabriela, by all means, to chip in. This is always a very active group. I mean, the S&P Advisory Group. They don't hold back. We were deluged with questions, I must say. But if I can just summarize at a high level, first of all, very supportive generally about this board's strategic focus on profession agnostic standards for sustainability assurance. They had a number of questions for us. So they really wanted to dig in and understand really where we're going on our work on sustainability assurance and reporting. Some of the questions were rather technical. First of all, engagements of heightened public interest. That's more on the assurance side. They wanted to understand, whether that's the same as the PI concept, which I think we're going to address in a little while under work stream 1. But first of all, some questions on the reporting side. They did ask about profession agnostic standards for sustainability reporting, if the board was indeed going to address this strategic question, which I think we know we've been addressing and considering, and if so, whether those standards would actually also be in the code. So that's an open question they asked. In terms of the preparers outside the accounting profession, there was a bit of concern, I suppose, that because this is a group of accountants, right? And they're looking at outside of the tent, if you will, outside the village, and they're concerned that non-accountants are not subject to the same professional standards, or at least the same level of professional standards as they are, or as accountants are. So it's a bit of a concern, it's a bit of perception. And there was an observation that companies are doing sustainability reporting because it looks good. And, I think a lot of companies are doing this because it makes strategic sense, and maybe it makes business sense as well. But yes, there's a bit of, there's a modicum of truth, I guess you can call it that, in that observation. And there was a question to us, I guess, how do we deal with jurisdictions that don't have an appropriate regulatory regime for sustainability reporting? Well, maybe I'd probably use Gabriela's response that it's not for this board to say who must use our standards. We will make the standards available, but it is going to be up to the jurisdictions to put in place the right legislative framework, etc., to make sure that those standards can be taken up. They had a number of questions on the assurance work that we're doing on sustainability. They refer to ISO, accountability, and others, and they noted that yes, those other standard setters have ethics provisions in their sets of standards, but they wanted to know how open and eager are these other standard setters to work with us and potentially use our standards as we go forward. They were concerned to make sure that on the assurance side, the non-accountants who are involved in assurance engagements appreciate the level of exigency of the independent standards. Again, recognizing that they might not have been using our standards necessarily. The question about monitoring and regulating all assurance providers, and importantly, the non-accountants came up as well. Again, a very practical question. And as basically assurance providers move, importantly auditors move from audit and sustainability assurance, there's maybe a technical question there as to how auditors would deal with the independence threats that might arise if they are also quite active in providing other services to their clients in terms of the reporting side, and how do we deal with the impact on independence from that perspective. And maybe finally, there was an observation about capacity building, and I think we can appreciate their context. They deal with the smaller clients, the small entities, and capacity is always a big concern at that end of the spectrum, both from a firm perspective as well as from a preparer perspective. And they really emphasize the importance of training, importance of education, importance of awareness, and importantly, the need potentially for them to use experts, on the both on the reporting and assurance side, if they don't have the capacity internally. So again, very rich discussion, a lot of questions, a lot of I guess interest in understanding where we're going with our projects, and I guess it's just a sort of augurs well for some further dialogue with them. Andy and Gabriela, anything you want to share?
So no rest for Ken, because the next one is the IESBA Sustainability Finance Task Force, and I believe Ken, you attended this meeting.
Okay, so. It seems to be me as well. Yes. Okay. Well, yeah, we've been quite busy on outreach. Yeah, let me just share with that. And this one was a conversation last week, in fact, just last Thursday. It was with representatives of the IESBA Sustainable Task Force, and it was really just a touch point to update them on where we are on our sustainability standards journey. I attended this meeting with Vili Botha, my counterpart on IESBA, and we briefed them on our upcoming board meeting in terms of the issues that we were going to be discussing with our boards, respective boards, this week, and IESBA next week. They did say that they were going to look into our papers, review what we have put out there in terms of discussion with the board, and they will importantly engage, at least in limited commitment, to engage with our boards on the substantive issues once our exposure to us are published. They did ask our plans for supporting capacity building. So again, a recognition that market capacity is going to be an issue. So they did wonder what we had in mind. So it's a bit early days for this board, but it is a question that's going to be preoccupying, I'm sure, everybody around the table here as we get further down the journey of the standard setting. The topic of outreach was also discussed. They emphasized the importance of really reaching out to the non-PA community. They did see it as important. They stressed the need to make sure that how we develop the standards, importantly, how we write the standards in terms of the use of the terminology, etc., will be understandable by the non-PAs. And they encouraged us to really focus on understanding market needs and needs for capacity building as we undertake our outreach. In terms of adoption and implementation, they were interested to understand whether we had any strategy for localization of the standards. In other words, how the standards are going to be taken up at the national level. They understood that at least for accountants, for professional accountancy organizations, perhaps the adoption journey might be a little bit easier than the non-accountants. So they did have an open question there. How are we going to think about the non-accountants? And they mentioned that IESSB has established a jurisdictional group of national standard setters and other stakeholders to provide input to IESSB on adoption and implementation issues for purposes of making sure that IESSB takes on board those potential adoption implementation issues as it finalizes its standards. And then they had a few questions that are a bit more specific, I guess, on the standards themselves. First of all, they did also raise this question of around this concept of engagements of heightened public interest. They really wanted to understand a bit more about this, and they asked whose judgment is it to make that assessment as to whether an engagement is heightened public interest. They were curious about who's on our sustainability reference group. So I give them a bit of an update on this. And on the question of relevant ethical requirements that are at least as demanding, that is a concept that is kind of in the IESBA standard. That effectively sets a baseline for ethics and independence requirements. They wanted to know who is going to make that assessment as to whether standards that are not from the code or at least as demanding as those that are in the code. And they emphasize the importance of really staying close to IESBA in terms of use of terminology. So again, this is an important point of coordination for us. And finally, they emphasize the need to work closely with the regulatory community because they see ethics standards as very closely linked to regulation. And they emphasize the importance of IESBA working closely and engaging in close dialogue with the national regulators to achieve global acceptance and adoption. So this is a bit of a roundup. Sylvia, I'll turn it back to you.
Thank you very much, Ken. And also, I would suggest if the members have any questions, just raise your cards after each report back, so we can take the questions after that. And now I think we would go on to the others meeting that are with the smaller font size. It's not because they were not as important, it's just simply to fit into one slide. And so the first one is the Forum of Firms meeting that was in Paris in March. And I would just turn to Luigi, who presented at that meeting.
Yes, the meeting was at the end of March after the board meeting, and I attended there with a number of other organizations represented, and where I basically represented and explained the decision taken by the board during the March meeting relating to sustainability, use of expert, and the strategic work plan for the next 4 years. And we had a number of question, responses, interactions, and discussion about the content of each of them. The most, well, my opinion, the most significant one was the request to explain how the work of our board was aligned with the IOSCO recommendation released just 1 or 2 days before this meeting. And we went through basically the most relevant matters related to the work of the IESBA meeting during the last month. And basically we confirmed point by point that the work of the board was informed by this recommendation that of course had been released just a few days before, but let's say were at the basis of the decision of the work that the board conducted in this month. And basically this was really the key point of this interaction.
Thank you very much, Luigi. And the next point is the 11th CRESER regional conference that was held in Sao Paulo in May. Wanya attended that meeting on behalf of IESBA, but given that Wanya is not here today, I would suggest that maybe once she joined us on Tuesday, we can ask Wanya to provide an update on that. So the next meeting was the African Congress of Accountants in Ivory Coast that Sadia attended the meeting.
So this was a very exciting conference because it was the first time they were meeting in person since COVID. The entire conference was on the topic of sustainability. I participated in a panel discussion along with the IFRS Foundation, IESBA. It was called Connecting the Dots. And that's The audience was over 20 countries, but they were representing accounting organizations, or they were accountants. So you can understand what type of questions I received. The 5 takebacks, I think, from this session was, as much as standard setters are really busy going forward with our work streams, practitioners and accounting bodies are actually consuming this. And it's a lot because as we all made presentations, we understood what timelines these bodies will have to think about for adoption and for preparing comment letters. When it came to ethics, it was really it was prevalent what new was in there. So we have a new topic that has changing parts. We have the introduction of professional agnostic standards. We have a new section of the code, and this new needed a little bit more time to unpack, which unfortunately we didn't have. So I think that there was an interest in unpacking it more, and we should find more opportunities to engage with this audience. There was an appreciation, and I think it's because we had a panel discussion that there was some sort of coordination. One of the members, one of the participants asked if we could actually capture this coordination to make it easy for someone to see how coordination is taking place. Yes, we are both, our boards are coordinated, but at the same time, they'd like to see a one-pager on how this is taking place. It will help them. There was also an appreciation that we're sharing information even though we went at an exposure draft page stage. So they would like to engage more. The questions were really about the professional agnostic standards, and it was more on implementation issues. So how would this be unpacked? Who would be allowed to use them? Firm culture, competency and due care, those type of questions, which we are seeing, I think, from the last round of discussions. This is kind of a theme when it comes to professional agnostic standards and what accountants and practitioners are concerned about. There was also every board was asked about their capacity building resources. Because as this is coming through, this is going to be new. And when it came from an ethics point of view, the question really went to professional competence and due care. Because if professional accountants are putting themselves out to be sustainability experts, oh, sorry, that's not the right word. If they're putting themselves out to be knowledgeable about sustainability information, we need to question whether they're passing that first fundamental principle test. And this was a question that wasn't just for ethics board, but for the accounting board, well, the IFRS Foundation, and for assurance as well. Paul?
Thank you. Maybe, Sadia, I hate to put you on the spot, but just to understand from that discussion, I think that your closing point there was quite fundamental. But just to understand, as we push or drive the agenda around independence and looking at independence both at individual decision-maker level versus entity independence, when you're looking at much smaller markets, what's the sense of almost the challenges that will come with looking at institution-wide independence when you have very small markets, people are cutting across so many different sectors and engagements, and what are the risks? And especially when we start looking at profession agnostic, it's one thing to, accountants and auditors are used to this reality because they've been doing audit. But when you try and bring engineers and environmental specialists into the requirement for independence to do their job, and they're like, I can't be independent and do my job. So shall I just use my energy explaining why we can opt out of this ethical standard? Because we're claiming in the environment we're in, this information is not really informing decision-making because everyone is making purely kind of financial performance decisions. So our information is not subject to that standard, but the ethics around that is so critical to the direction we're moving in. Maybe this is a much wider open question to the room. I think just how are we thinking around the direction we move on that? and almost the timelines we put in place and the guardrails we're putting in place in smaller markets where we want to really encourage the professionals to be playing a very proactive role in the quality and completeness of the information, but still manage the self-review risk. Because that threat of self-review in small markets, you might have all the people competent to do it, taking a step back and doing very light review or only purely assurance, but what they're reviewing is very poor and weak in its nature. So until as a profession and as professionals, we're advocating for the improvement of quality and completeness, is there a kind of, are we advocating for a weakening of systems as we drive this independence agenda? Thank you, sorry.
Well, Paul, I think that that question would keep us busy for the rest of the day, but I think it's I think that Sadia may want to say something.
I think I'll be brave enough for the first question. So there wasn't resistance to our current structure on independence that it follows the 4A line. There was kind of acknowledgement that they were happy that if you are doing the audit, you could still do the sustainability assurance. They didn't want to see a conflict in that. The second question, Paul, I want to refrain from answering because I think that's a working group question. And I'm worried that my personal views will come through.
Thank you, Sadia. But anyway, thank you for the question, because this is a kind of provocation, if I may say so, that we need to have. And yeah, I think that we all have to address these kind of questions as we go through the discussion today and over the next few times on independence. Rania.
I just wanted to react to Paul's, I wanted to say that I think any provider of assurance services, if they can opt out of the independence requirement, I think they would. I think the onus is on the users of the information to appreciate the importance of independence and require it. So I think ultimately it will depend on the users of the information if they feel that this is important, and they will require it. And that's going to be shaping the profession. So I think our most immediate audience is the regulators in the room. That's what I want to say.
Thank you. Do you still want to speak, Paul? Okay, thank you. Sylvia, back to you.
Thank you very much. So the last two items on our list is Mark's meeting with the UK, the representative of the UK Accreditation Services, and also the ECCA Sustainability Roundtable, where Mark was a moderator. So maybe Mark, can you just say a couple of words about these two meetings?
Well, only to just say, Sylvia, that there were two roundtables that we arranged with the ACCA, which were to look at the work that we're taking forward. I'd say that there wasn't anything new coming out of those discussions that haven't already been covered by the other outreach that other people have discussed already. Recently, I spoke to the Chief Executive of UKAS, so that's UK Accreditation Services. They fit into the wider European and international network of accreditation providers, and they're very happy to continue the dialogue between this board and their own board about how we might work closer together and what the implications of that might be. Given the focus on the IESBA as well, I also attend the IESBA Sustainability Standards Advisory Forum, so very much focusing on application and challenges, you know, in terms of wider adoption and the need for there to be that supporting framework around those standards. So not just the reporting standards themselves, but also an appropriate ethical and independence framework and assurance.
Thank you very much. So as you can see, there were quite a lot of outreach activities going on, and our intention at the staff level that we keep you informed on all the feedback and the outcome we have received in this meeting, and we will keep doing that in the next quarters as well. And now I think one final and really important coordination topic that we want to mention, that since the launch of this project, there is a frequent coordination with IESB at the staff level, and there is a bi-weekly calls, and we have an inventory list of the issues that we believe we need to coordinate on. So it's at the staff level, we regularly update IESB colleagues on what were the decisions on the board and the task force levels, and it's happening vice versa. So when we are drafting our proposals for the board's consideration, we usually take that into consideration. But in this quarter, we also set up 2 meetings for the IESB, IESBA sustainability liaison members. This is a coordination happening beyond the general coordination with IESB. And from IESBA side, the liaison member is Rich. From IESB, it's Isabel. So we have these 2 meetings. And given that IESB's exposure draft is scheduled for approval this June, especially next week. So it was really important that we focused on identifying the issues for coordination and really get a conclusion and agreement on the way forward regarding those issues. And just in the interest of time, I would suggest that we would cover these matters for coordination as part of the Workstream 1 and Workstream 2 presentations, if that's okay. And I don't know, Rich, if it's okay with you, where would like to. Thank you.
I think we should go through them in the work stream, because particularly a couple of things around definitions are critical. So it's better in the context of the full presentation.
Thank you very much, Rich. And I think we got to the end of our section on the outreach. And I don't know if you have any questions that you haven't raised so far regarding the outreach activities or coordination with IEESB. Then we would just move on, if you have time, okay, to the next topic, which is about the presentation of the standards. And I will.
Thank you, Sylvia. So I'm just going to sort of focus on some of the main sort of overarching issues that we've been considering that have got us to where we are in terms of the proposals that the task force has been developing. Obviously, before doing so, I want to recognise the enormous amount of work and coordination that's gone into this, and also to recommend that if you have an insuperable problem that you want to untangle, then go to Lisbon, because it seems to sort of give you the right mindset to be able to get there. I have to say that I think the task force made very considerable progress as a result of the discussions that we're able to have in Lisbon. And that's really been able to put us in a good position to be able to have a discussion with the board this week. And it certainly should be recognised as moving us quite a long way. So obviously, you know, sort of from the outset, we have been looking at this from a public interest perspective. How do we develop proposals for inclusion in the code that are going to have the best outcome from a public interest perspective? And so what I want to sort of talk through in the session as we run up towards lunch is thinking about what are the objectives that we're looking to achieve. How do those and how do the options that we've been considering map to that public interest framework? So how do they you know, deliver on the best sort of public interest outcome? Obviously, in doing so, we've been informed by discussions that we've had with our CAG, with earlier discussions with the board, with the global roundtables that Sylvia has already pointed to, which has given us an enormous amount of diverse insight. And of course, more recently, we also had a conversation with NSS members as well, to ensure that we are taking forward this project in a way that is going to deliver on those objectives. And then I think the most important thing in this session is really just to talk through where we got to in terms of the options. So you'll remember, did we have an option that was integrated? Did we have a part 5? Did we have a standalone code? And I'll talk about that and share some reflections on that as to how we got to where we got and why. It's died again. Oh, thank you. So in terms of the objectives, overarching is that we very much are responding to the challenge that we've been set by our stakeholders, globally adoptable standards, one that recognize the fact that these need to be used by a diverse range of providers. So how do we recognize the fact that this market is not one that is solely operated in by professional accountants? It has a lot of other different providers, and that of course varies by jurisdiction. And of course, those standards really need to be understandable and usable by that diverse range of different assurance providers. And of course, one of the other things as well, given the importance of sustainability information and given the purposes that it's used for, can they be used as a basis for enforcement? And that is, of course, a significant piece. So we've gone through an exercise that we gave you an early cut at in the meeting in March, where we looked at mapping the various options against the public interest framework characteristics. And we're thinking about, what are the key premises that are underpinning this? And it goes back to my earlier comments before Sylvia talked through all of the feedback and engagement that we've been doing. Ultimately, we want equivalence. So we've taken a decision to develop the code in a way that takes the same high bar that applies in an audit of financial statements into sustainability related engagement. So particularly sustainability assurance should mirror and be equivalent to that applies in an audit of financial statements. And that applies both in terms of ethics and independent standards. The standards are of the same rigor, regardless of whether or not you're a professional accountant or someone from a different profession or indeed a different provider altogether. And of course, the code needs to be a single version of the truth. So for enforcement purposes, you can't have the same requirement articulated in two different ways. You have to ensure that you avoid any risk of regulatory arbitrage. So feedback from the CAG, firstly, support for our approach in terms of where we were going. They welcome the options that we put forward as a good basis for discussion with the roundtable participants, and indeed that served us really well. It was the basis for some really good structured discussions. They recognise the importance of getting that feedback from the roundtables, and also I think helpfully the CAG realised we were on a trajectory. So reporting will develop over a timetable. And indeed, for those of you more familiar with where the CSRD is going, you'll see that there's a reporting set that broadens over time. And indeed, then it goes through a process requiring limited assurance and reasonable assurance. The CAG was also encouraging in preliminary support for a new Part 5, but said that we should test that with the roundtables. They realised that was possibly more appropriate given the limited time that we've got to deliver exposure drafts, and was also a pragmatic approach to have a sort of one-stop shop for non-PAs. They encouraged us to prioritise, and again, that was a recognition that it was impossible to do everything all at once from the outset. Your own feedback as a board, clarity should drive our consideration. It should link at all times to the characteristics in the public interest framework, and also to think about understandability and accessibility for the non-PA community. And also we needed to think about as sustainability information continues to develop and reporting continues to develop, we need to develop the code in a way that isn't sort of something that will age quickly. It has to be something that is going to work well for the medium to long term. We don't want to be kicking off a new project before we've finished this one. So just to sort of bear that in mind. Can you go on to the next one, Astu? I seem to have lost again. Thank you. Sylvia's going to change the batteries and see if that works. So from the roundtables, 4 roundtables, overwhelming support from those participants for a new part 5. So of all of those diverse stakeholders, they suggested that it was the most balanced option between providing something that was ultimately a standalone document, so a separate code, and something that was there sort of fully built within the existing pipes and wiring of the code. There was some support for a separate code, as that was the clearest and most comprehensive option for non-PAs, but that would lead to adoption issues. And indeed, it's the consideration of having a global code and wider adoption that has really helped the task force land on the option that it has done. Not much support from participants for the fully integrated option. As someone who fully supported the fully integrated option and has now changed their view, I will sort of happily sort of note that. But there was a concern that it would make that code too complex in terms of anyone other than professional accountants. And therefore, if we were going to meet the challenge of dealing with something that had versatility and reflected the diversity of the market, we wouldn't meet our objective. There was a recognition that perhaps over time we could move to a fully integrated code, but that would be something that would be a medium long-term objective and not really possible at the moment, given the fact that the market is developing and developing fast. So we've updated the mapping to the public interest framework. This is just provided by way of information, but of course that was looking at the different options in terms of what they would do. This has been a really helpful exercise for us because it's helped to keep us focused as a group on the public interest framework, and really are we remembering that when we're talking about what are the best options and how might they work. Oh, I'm now going ahead of myself. I think there we go. Thank you. It's all right. I think the battery life is about 1 press of the button. So, so if I can sort of now set out what the approach of the task force is, and this has been, you know, the really sort of ground-changing discussion that we're able to have in Lisbon. So we're going for a new part 5. We agree with the views that we got through the board, through the CAG, through the roundtable participants. It gives us an effective approach and it gives us a deliverable approach given the constraints on our time and our resources. It also meets our public interest objectives in making high quality ethics and independence standards available to govern sustainability work of all types by all providers in a timely manner. Fully integrated standards probably are not usable for non-PAs. We agree that a standalone, totally separate code would face adoption and implementation challenges as it may require legal and regulatory changes in jurisdictions, and there's a lot going on already, and I think that that is a hard thing to balance. So where we get to is part 5, so the new section will apply to all sustainability assurers, or sorry, all sustainability assurance practitioners, irrespective of whom they are. So be it PAs or non-PAs, be it the auditor of the entity. And that allows us to demonstrate that same high bar where we've got a high standard for both PAs and non-PAs, and it allows us to maintain that single version of the truth. One of the things that it's particularly helpful for is it provides a very clear route regarding which standards apply where a practitioner is providing non-audit or non-assurance services. And that's particularly important from an independence perspective. We leave it as a matter of choice for firms where they perform both the audit and sustainability assurance engagements to determine how they best comply with the requirements in Part 4A and Part 5. But that is a consistent approach with the architecture of the code already, where if you are the auditor, you are using Part 4A, and if there are any supplemental requirements that sit in 5, you pick those up. If you are not a PA, all of the requirements you need to follow from an independence perspective will sit in Part 5. So therefore, we have a workable solution. Now, before we actually sort of talk about what might be, or before I actually sort of open for questions, I want to share with you a particularly important consideration of why this works. And this is from my perspective of speaking in previous meetings of this board about the integrated option being the best one. What we realized in Lisbon is that if we had a fully integrated version, we would be putting a significant amount of change to the wording of the code, and it would be very complex for use by non-PAs. If we had requirements that were in sections 2, 3, and 4A of the code, and then they sat again in Part 5 of the code for non-PAs, we were effectively undermining adoption of the code. And the reason is I realized that the temptation myself would be, from a jurisdictional perspective, I could just adopt changes in sections 2, 3, and 4 and ignore Part 5. And that would undermine the global code that we actually want. And I think Rich articulated it really helpfully when we had our discussions in Lisbon about one of the things we want is to have a single code that applies to all types of engagement. And for me, who was skeptical about the benefits of Section 5 being the route forward, recognized that without this approach and without using 4A as it is for the auditor and Part 5 as a standalone one-stop shop for everything sustainability that doesn't relate to the audit, we would run a situation where you would have multiple versions of the code because jurisdictions would have optionality about whether or not they wanted just to recognize provisions that applied for professional accountants and auditors, or whether or not they wanted to follow what our objective has been, which is to have a code that is fit for purpose for all of these engagements, regardless of the background of the individual or the entity that is carrying out the work. So I wanted to share that with you because that's a particularly important consideration. And that was one of the really sort of helpful moments that we had in Lisbon that helped us really move forward and develop the material that we've shared with you today. So I think with that, and the fact that the battery's gone again, is I want to pause now and ask really for board members' views about the approach that we've taken and whether or not you can see that as being an effective route forward. So thank you.
Thank you very much, Mark, for having been able to say so much in such a short time frame. Really well done, and so important things. So let's now open for debate. And Laurie, the floor is yours.
So I'll start off. I think it's a really, thank you for that. I think that laid things out really well, Mark. And I think it's a really practical and implementable way to get at a lot without creating a lot of confusion. And by the way, the more I thought about it, the more I think that trying to revise a lot of language throughout the code to have an integrated one. First is super time consuming, but also is going to create havoc, right? I think it has a lot of built-in problems. So I think it's very logical, and I'm very supportive of that approach.
Thank you, Laurie. Felicia?
Thank you, Mark, and the team for, I think the work well done, very well done. To be honest, when I read through the material, it impressed me. It flows very well. And one of the questions that I was asking from the beginning was, how did you arrive at this option of part 5? And when I was reading through the material, I think I was very much convinced because of the flow. And if you read the code, the existing code, and you go to the part 5 aspect of it, you find that materials that are covered in the part 4A and B are already covered in part 5, which is very good. However, I have a question, because if you look at the way it is drafted, of course, it's covering the non-peers. And the question now comes in, how do you call the code? Is it for professional accountants, or it's going to be something else? So this is something that we need to discuss, because how do we now move from that perspective of calling it the code for professional accountants to now the code? I don't know whether it's going to be called the global code or something else. So that's something that we need to discuss, and maybe the board has to think through what are the implications of having these other non-peers adopt the code from this perspective on how it is being drafted. Thank you.
That's an excellent question, Felicia, that we did not miss, but we did not manage to respond, I think, but I'll ask Mark to react to your question.
So it is a really good point, and it's one that I think, have tried to duck. I think Sylvia might be selling lottery tickets with naming rights for the code when the exposure draft goes. One of the things that I think we were very cautious about was we didn't want anything to unpick the global adoption of the code. And actually, although we are encouraging its broader use, we do at the moment in many jurisdictions either rely on regulators, national standard setters, or PAOs as the route to adopt the code. So we will give it further thought, and we will come back to this board for further input and suggestions. But I think it's sort of a bit of a parallel to where we've got with option 5. We want something that is going to maximize global adoption. And therefore, I sort of almost want to sort of leave some of the foundations unpicked on the grounds that every solution that I think is better also has some negative outcomes as well. So I may be quite cautious and suggest that we leave chaos as it is, sort of beautifully formed and crafted. And maybe that is a question that we don't ask. But all I would say is that we have further meetings of the task force. You would not believe how quickly the thinking came on as a result of our Lisbon meeting, which developed this approach, which we thought was a really good approach that members of the task force were able to unite behind. And we are a pretty big subset of the board. So we may need to think about this question before we finalise the exposure draft, but it is something that we understand and appreciate, but there's no obvious way forward for it.
Thank you, Mark. Sanjeev, please.
Thank you. Mark, I think a job very well done. The agenda papers were very, very detailed. Reading them was one hell of a job, but very well done. I must compliment you and the task force. One question, I think one of the slides you mentioned about the roundtable's feedback, that the fully integrated set of standards would be the long-term objective. I think Laurie mentioned about the changes to be made would create the code more complex. Would we be looking at it in the next 2 years, 3 years, 5 years? Some thoughts on that? If that is the long-term objective, that's the question. Thank you.
I think a long-term objective genuinely is long-term. So we've got a market for sustainability reporting and assurance that is developing quickly, that has a lot of maturity to do, that has reporting requirements that we will see bed in over the next sort of 5, 6, 7 years. So if you were saying sort of, when do we start thinking about this again? I'm sort of talking medium term and beyond, not anything sort of within sort of an early consideration. It genuinely would be, has the market developed in such a way and has it matured in such a way that means that would be a better outcome than the one we're proposing? And I think that's many years off.
Thank you, Mark. Andy, please.
Thank you, Chair. Thank you, Mark, and the task force for the described Herculean amount of work done. And I'm not sure if this is for this pause or for the next pause, but I'll just mention it now. I mean, and this we talked about the market and the maturity of the market. And I realize I'm not telling anything we probably all don't know, but our typical audience for our exposure drafts is going to be the audience we want to reach, plus the rest of the world. And I know the Sustainability Reference Group is certainly a good point to get to those, but we're certainly spending a lot of resources and time developing this so it can be used by others. And it's so critical forward thinking that we get lots of comment letters from those others, so that we don't build our field of dreams, that we'll build it and they will come and use it. So I suppose that's part of maybe what's coming up with the reference group and the outreach. But I mean, I just hope that we get not just the insular comments from our typical sphere of influence, but hopefully from everybody too, because that will have it to be the most impactful. And I guess testing whether or not they understand, the non-PAs understand what's happening here. So I guess that was more of a comment and an item for the agenda, but and I didn't know, like I said, if it was here or for your next pause.
And all I would say on that, Andy, is that I'd absolutely share your observation, because I think that is going to be really fundamental. After the effort that we'll be putting in, are people actually going to say, yes, this is going to be something that we can work with and engage with? And I think that shows you the importance of going outside of the usual input. And all I could say is that one of the things that I was really encouraged by is that, and Laura will talk about the reference group, but we did have a couple of vacant seats that we were looking to fill. And it was really encouraging in looking at the proposed seat for an African member of the RefWorks as well. And I think we've got to sort of try and work out how we try and draw on those. So it was a really encouraging thing, but I absolutely take your point. And one of the things that I was thinking in the context of as we get later on into this year, we've got COP28. I've also got a Sustainability Standards Advisory Forum in October. What are the things that we can be doing to draw out comment from this wider and more diverse group of stakeholders? And how can we find out whether we're meeting their objectives as well as our own?
Thank you, Mark and Andy. Sadia, please.
So firstly, I just want to say I support part 5. I supported it at the last meeting as well. So I'm kind of happy to see it made its way. I think it's already kind of passing the test, because the board papers are a testament of how part 5 would kind of look. And as we go through it and we go through commentary, it's only going to improve. So I think that it's already in a place where I'm comfortable and I'll be able to explain how we are moving along. However, there's going to be a test. And that test is, are we applying the same rigor for non-PAs as we are for PAs? And I think that's the test as we go through part 5 to see how a professional accountant would be applying it versus if you're applying part 5 as a standalone. And it will come through in the questions, both for the workstream 1 and workstream 2.
And I do think one of the questions that we need as a task force to put to the board as well and develop some proposals is that obviously we've been very much focused on new standards for the code. There's also the question of what non-authoritative guidance is needed as well. And indeed, some of the things that we've been discussing already is what sort of bridging text do we need in the code itself to help with the application for those who, you know, are using it for the first time, to ensure that there is that consistency that you rightly raise for us. So there is a framing piece in the code, but then there's also a non-authoritative guidance piece outside of the code to help to try and address your challenge and make sure that we arrive at the right side of the line.
Thank you, Sadia and Mark. Luigi, please.
Thank you, Mark, for the comprehensive explanation and the basis for selecting this form of presentation. I agree completely with the proposal. Also because considering, I read many times the half of meter of papers you provided us, and while the underlying assumption is to have part 5 equivalent to part 4B in terms of independence and even in terms of ethics, I realized that this is probably the short-term objective, because I'm not really sure that the requirement should be exactly the same. And it may be that this project would also lead to change something in the previous part, at least where we have the same individual or the same firm providing both services. There are interaction that I think sooner or later we need to consider in order to understand how to amend the scope of the previous or the extant code and to amend the approach to be taken in part 5. And probably this form is the most, I will not say easy, but the most efficient way to deal with these changes.
I think that's a really important point for us to recognise, Luigi. I think, firstly, I would say that, you know, we've landed where we've landed because we've been able to helpfully draw on the public interest framework. And therefore, I think where we get to is hopefully something our stakeholders will recognise as being developed in a way that best serves the public interest. One of the things that we recognised we couldn't do in this project is to say, are there existing requirements in the code that need to be changed as a result of the developing and maturing sustainability assurance market? Almost certainly yes. And actually maybe one of the last things this task force does as we work towards finalizing revisions to the code is almost to hand over its thoughts to the board on these are the areas that may well develop over the next X years that might be worth considering a more wholesale revision to those requirements. But we couldn't do those in the context of this provision, of this project. But I do think it is something that we need to keep a sort of running record of, because some of the issues may develop in a way that becomes a more immediate consideration for the board to make, and other things may just be sort of longer term, sort of ticking issues.
Thank you, Luigi and Mark. And finally, Rania.
Yes, so thank you, Mark. I think you really make the point very well, and definitely, as everyone else around the table, I'm supportive of following the option of part 5. But as you said, I think whatever option we select, we go for, ultimately we will be facing certain issues. You're not going to get the best option or a perfect option. And so in this regard, my question to you is the following. And it's a very practical question. So when it comes down to like writing part 5, so if the intention is to have it as a completely standalone part, then does that mean that you will need to draw in certain parts of the rest of the code? Because obviously, I mean, the code, I mean, I'm not intimately familiar with the very details of the code, but I realize that different parts of the code, I mean, are interrelated. So I'm assuming that part 5 will need to draw on certain preceding parts. And then the question then becomes, and just from a very practical point of view, will you keep those parts exactly worded? Will you keep the same language, or will you have to adapt it because it has to apply to accountants and non-accountants? And then the question is, which is really, it's a question that really draws on everything that has been said recently around the table. I mean, what are the repercussions for accountants? Does it make accountants, will this mean, I mean, it becomes confusing for PAs to follow? I realize that I think we are very focused right now, and understandably so, about making the new standards or the revised standards understandable for non-PAs. But then the question is, we always have to keep in mind the PAs and make sure that, you know, we're not making their job more difficult. So yeah, thank you.
Thank you. And I believe that we've dealt with that challenge. I sort of 3 comments really in terms of the wording that goes into part 5, because we have to have a single version of the truth in the code. And because we have to avoid regulatory arbitrage, you can't use 2 sets of words to explain the same concept, because otherwise you run the risk that one group says, why don't you treat us in that way? And then you undermine enforceability. So there is a trade-off that we have to balance. There will be material that sits in 5 from other parts of the code, but I won't explain that at the moment, because I know Christelle will cover in her presentation the way that workstream 2 is dealing with bringing material in and how they're going to do it. So if we can park that question and come back to it when Christelle sort of does it. Now, not necessarily wanting to put Rich on the spot, but you know, we did discuss in our approach in Lisbon about how this would work in the context of non-PAs and PAs. I don't know, Rich, is there anything that you want to add to that? Because you know, you've very much sort of helped us navigate a way through.
Yeah, I guess I would add a couple of points that were on Mark's earlier slides, but for the non-PAs, there's a significant advantage to this approach, which is that it is all in one place. They can read and understand everything without jumping back and forth to something that pertained to the audit of the financial statements versus something that applies to sustainability. That's a very significant point, because understandability is an important part of effective adoption. Secondly, and I may not say this the way Mark or Christelle would say it, but I don't think we're going to find this approach detrimental to PAs following the code. They already know how to follow the code. We're going to bring some things forward that's focused just on sustainability. In many aspects, particularly my perception on the independence, we're not going to be changing what they are restricted on doing or how they have to consider themselves, them and members of their organization from an independence perspective. And then I thought I found that once we made this decision, at least in workstream 2, it made it easier for us to focus on what we were editing and what we were changing, because we weren't trying to change we actually had drafts available of if we picked a different approach. And when you started to go through those, you realize how much work that was going to be. And so that's a real issue in terms of the speed we're trying to achieve. And then the point that Mark mentioned about regulators potentially not adopting something that was outside the code, that to me was also a very critical point, that it has to be in the code. Part 5 makes it a good place to put it in the code. I think that just kind of sealed in my mind the last element, that is, this is about having something that's understandable and is broadly adopted, and that the regulators can point to and say, that's the code you follow for ethics and independence. And it doesn't have to be, and it's not going to be more complicated for PAs, is what I'm convinced about. So sorry, I may have repeated myself there a bit, but Mark, I'll turn it back to you.
Thank you, Rich. Thank you very much. Well, we still have a couple of members wanting to speak. I'm going to give the floor to Begonia, who is waiting for some time. Or do you prefer to speak at the end?
I don't really mind. Up to you. No? Okay. Well, thank you for giving me the floor. Well, first of all, I want to congratulate for the amount of job you've been doing. It's tremendous, the efforts you've been done, and how the number of papers we are having for this meeting evidences that. We in the PIOB, we understand that from the public interest perspective, it's important to deal with non-public accountants because they are going to be working in this area. So there are no doubt about it. The solution that you have decided to follow, which is focusing in the part 5 for the public accountants and non-public accountants for the assurance perspective, dealing with ethics and independence. Well, it's a good solution, but we don't like to see that this means that you are completely ignoring the other part, the reporting, because the non-public accountants, we are also working on the reporting of sustainability reporting or sustainability matters or ESG. And if the objective is to avoid greenwashing, I think you have to say something about that as well. So even if we understand that this is not the main focus at the moment because, well, too many things to do in a very short period, but we would not like to see that you ignore and forget that part as well, because this is something that, well, it's important for the public interest because, well, the readers, the users of the information will not know if it has been prepared by one or by the other. They want to have good information that is reliable, and that's it. So find what we are doing now, but please don't ignore, don't forget the other part, which is even before the assurance. So first is reporting, then it's assurance, but we understand that you have made that decision. Thank you.
Maybe I will answer to this one. We're not ignoring the reporting side, and we are proposing some adaptations to address the sustainability issues on the reporting. But we have focused that for the moment on the PAs, okay? We will make sure that this is also made available, and that other than PAs are aware that it exists, okay? And as a former preparer of financial information and what we call a preparer, I'm sure that the question is, what will be the best route to make it known and to some extent enforced? Maybe, and we are going to discuss that this week, that maybe there are other routes like corporate governance, etc., to make it happen, right? But we are going to discuss that during the 2 coming days.
Thank you very much, Christelle. Hector.
Thank you very much. I just wanted to mention that coming to this discussion from outside and not having had exposure to your previous discussion, I think that the solution you arrive makes a lot of sense, and I would be happy to support it. I would just like to point that the challenge of Part B within the code is how are we going to promote these standards for non-PAs outside the PA community while this is within the code. I mean, the effort of outreach to get to other people that are not PAs, that are not part of our community, that are not subject to the code because of the current regulation of the code, that would be a challenge. And there's a big bunch of people providing assurance services for sustainability out that are not PAs. And the challenge would be to try to get to them as well.
Yeah, thank you. Absolutely, and we recognise that challenge, and one of the ongoing sort of pieces of outreach is our continued engagement with both global and national regulators and standard setters. And it sort of comes back to Andy's point about, you know, where do we get our comment letters from? Where do we get our input? Because actually we need to get input from those that we rely on, not only to take what we develop and use, but also to raise awareness of it. So I absolutely sort of share that, and that will be a continuing part of our outreach. One of the things I think stands us in really good stead, though, is because we did the global roundtables, in a sense, before we started putting pen to paper, we did engage with people to say, we haven't come here to sell you something. This isn't our solution. Do you like it or not? We actually said, how can we craft a solution that is going to meet your needs as a diverse group of providers? So I very much hope that has bought us a little bit of goodwill, and therefore, you know, certainly I was present at 3 of the roundtables. The number of exchanges and comments and emails and LinkedIn comments and things backwards and forwards that we get as a result of engaging with those people suggests that they are interested in where IESBA is going, and they do want to continue to be part of that journey. So I think we will need every trick in the book to get there, but we do have a sort of route.
Thank you, Mark. Felicia, do you want to come back?
Thank you, Chair. Mine is just a simple one. Mark mentioned that in the process you struggled maybe to get some sustainability assurance practitioners from Africa. Recently, I happened to attend one of the outreach sessions of IESBA, which was carried out online, because they have organized with different countries to make sure that S1 and S2 is well-known, adopted. So I was thinking maybe that could be an avenue for coordination between IESBA with the IESBA to see how they can also be able to integrate us and tell us who are the right people, right contacts across the continent, and maybe not necessarily Africa, but across the world, because they're already doing a lot of work in terms of making sure that these standards are adopted and known across the world. It's just a suggestion, Mark. Thanks.
No, absolutely, and we continue obviously to have a dialogue with the IESBA as well, and certainly we do see that there are people who are very willing to engage in this, and you know, I think part of it is just the how fast can we run to make sure that we bring everyone into those discussions. It certainly isn't a, you know, that we're worried about we're going to have gaps. So we will make sure that we are reaching out and bringing in everyone to sort of part of those conversations. And it's a bit like Paul's comment earlier. It's about how do you write this? How do you develop this in a way that recognizes the need to serve markets of different sizes, sophistications, capacities. We've got to make sure that we've got something that covers the breadth of what we need to work with.
Thank you very much, Felicia and Mark. Angie, please.
Yeah, no, thank you for indulging me again. Yeah, I've always thought that the end of the rainbow is where there's reliable, relevant information for the world to use in sustainability, because we're long overdue. But it is 2023 and we're still early in days in this. So we all know we're in a place where it's largely market-driven forces. Voluntary is how it's been defined otherwise. But ultimately, the regulators may prescribe or proscribe who may or may not do this work. But for all those reasons, the approach that the task force has taken, I do want to say, is as a drafting convention, is one that I would support. But obviously, those moving pieces of the where the regulatory will prescribe or proscribe happens, as always, outside of our remit.
Thank you very much, Andy. Ken, please.
Yes, I know everybody's been desperate for lunch, and I see a lot of hungry faces around the table. So I'll be literally 10 seconds. But that's to Hector's question, and it's the point I would like to convey across the table is that it's important to bear in mind that the standards themselves can sell themselves. The standards themselves can promote themselves in the sense that they would be neutral and as objective as possible. In other words, not focus on accountants, because what's been a barrier up until now is the fact that those standards are addressed to professional accountants. And in the context of assurance engagements that have been performed already to date in the market, practitioners, whether they're accountants or non-accountants, have been using the IESB's ISAE 3000. And ISAE 3000 is linked to our code, in the sense that it points to our code as a baseline, a global baseline of ethics and independence. But you can imagine when an non-accountant uses IEC 3000 and turns to the code and considers using the code, well, actually, it's a code that's addressed to accountants, and maybe it's not for us, right? But now that we're going to be drafting those standards in a profession agnostic way or neutral way, using neutral terminology, etc., well, those standards will be basically there for the taking. In other words, we're going to make it as easy as possible for the non-accountants to use. And that's essentially my message and my sort of thought as to how we can really make sure that those standards are usable as widely as possible. And yes, does this board need to do anything in terms of advancing awareness, etc.? Absolutely. But the standards themselves, they have a big role to play in terms of supporting their use, etc.
Thank you, Ken. And I still need 2 minutes for me, if you don't mind. I know that everybody is very angry. First of all, don't forget about what you said, and please repeat it this afternoon before we start the discussion, and tomorrow morning again, and on and on. Yes, because it's something that we should remind ourselves all the time along the discussions that we will hold. I'm sorry, I know it's very late, but I think that there are some moments in these meetings, in the work of this board, that we should not miss. And the fact that everybody's angry will not stop me from making some remarks about what's happening here. First, about the process. Thank you very much, of course, to all those who prepared all of these documents and made this possible, but also to those who are not part of the task forces. And I'm very pleased to see that everybody is providing their comments, contributions, critical thinking, etc., to the work of the task force, because we need it. The work, the board is not a task force, it's a board. So I very much encourage the ones who are not members of the task force to keep on contributing and thinking about what the task force is proposing in a critical way, because we really need it. It's what makes us stronger, and what makes our case even stronger against possible things that the task force may not be seeing, and myself. This is the first thing. So secondly, I'm extremely happy to see the board agreeing on this option B, part 5 of the code, not only because of the option itself, and I think it's very, as we can see, satisfactory in terms of allowing us to meet a lot of objectives, but also address a lot of concerns. If we think about where we were in Nashville in September last year and where we are now, it's evident that we made a great, I don't know if progress is the right word. I mean, I see it like that, but at least there was a development of the thinking of the board, of the positioning of the board. And even if it was not easy, I think that it was good that we did start at a different point and that we had to go through the width of all the questions that we had to address, that we had to crunch all the problems and all the concerns and resistances, because any option and any decision that we are taking now in that respect, is much stronger, I'm sure, than if we had started by saying, yes, this is the answer, and that's it. So I think that we are very well positioned to move forward in this direction. I'm very grateful to all of you with different thinking, different positions along the way that who allowed us to be where we are today. Thirdly, yes, I hope that you go back to Lisbon, because as Mark said, I hope that it was also the inspiration of the city. And I want to tell you that by the last week of July, the tax planning task force, the use of experts task force, and the IEESP task force will all meet in Lisbon. And I hope that the inspiration is going to be the same, also because we will have the Pope there. And the world, what is it called? World Youth Day, so 1 million people coming to Lisbon, and you will be among them and benefiting from that inspiration. But there are a few other topics that I'd like very quickly to mention. First, Felicia, name of the code. Again, I think that this is a provocation also to the board to think about it, because it's not easy. It's not easy at all. And we tested it in Lisbon, and I doubt there will be a satisfactory solution for everybody, but there are many criteria. It has to capture everything. It can't be too long for many reasons. One of them is about sustainability, because if we think about the ink that we are going to use to write the name of the code each time we write it, it's not sustainable. But yeah, I'm joking, but it's really a strategic question that we all have to address. Then the long-term objective, I think that the response to I think Andy and Luigi who asked, but is that the long-term objective that we move into the first option? I think that we'll have to be careful and aware that many things may change along the way, and things may change even before we make these standards ready. So this is a call for us to be as robust as possible in every options that we make. Of course, we have to understand the politics, we have to understand the trends, we have to understand regulation, but we have to be sure that what we are doing here, the options that we are making, work for the public interest, and that's what will protect us from too radical changes that may happen around if we are fragile in terms of the fundamentals of our decisions. I think that these are the most relevant things. I think Begonia, just like Christelle said, the task force did not forget about reporting. It is a different strategic option that, of course, is put forward for discussion here, which is not to develop profession agnostic standards for sustainability reporting while making the necessary changes in part two to address these, and part three to address these concepts. Well, I'll have many more other things to say, but I'll leave it for the after the discussion. We are more than 35 minutes late. So Ken, what do you suggest? Do we leave, and Mark, do we leave the rest of the presentation for the afternoon? Okay.
Yeah, I would suggest we come back off. Yeah, I'm just concerned some people might just fall off for lack of energy. But we'll come back after lunch, and I would suggest 45 minutes for lunch, Gabriela, if that works for both members.
We would come back at
10 past the hour for those who are online. Yeah, okay. Thank you.
Thank you. Bon appétit. So I think it's time for us to start again. Thank you for coming back. I hope that you had a nice lunchtime. And before we move forward with the rest of the, and I see that Mark is not here. Oh, okay, but I'd like to have formal say from the board on the option. So let's wait 1 minute for Mark. Are you driving, Andy? Oh,
I'm not driving. I'm in a taxi. An Uber, sorry.
Okay, better so. So thank you very much, and thank you, Andy, for being with us, even if in a taxi. So before we move forward with the agenda, Mark, I'd like to just to have a formal and clear confirmation from the board that you are fine with the option that has been presented and apparently agreed. But for the sake of clarity and certainty, I'd like to ask the board members if you are all fine and in agreement with taking the direction that is being proposed of including a new part 5 in the code, which will include everything with respect to sustainability, sustainability assurance, ethics and independence standards for sustainability assurance. Is that the direction that we are going to take? Are there no concerns in this respect? Okay, so we can consider it approved. We don't need to take a formal vote, but it's an important decision. So let's record the decision as such, because it's going to be strategic for the future. Thank you very much. And now, Mark, Sylvia, I don't know who I'm going to give you back the floor back. Laura, for the rest of the presentation. Thank you.
Thank you. Okay. So after the roundtables, the IESBA sought expressions of interest from the participants and targeting especially sustainability practitioners outside the accountancy profession. And according to the terms of reference of the Sustainability Reference Group, we were looking to have a group comprised of up to 10 members. We received 29 expressions of interest. Out of those, the task force selected 7 individuals, making sure to have a balanced representation, both in terms of geographical representation and also gender balance. 3 seats are open. The task force decided to reserve 2 seats for Africa, for representatives from the Africa region and from South America as well. We have also received already some applications for these 2 seats, and there's a final seat that the task force is looking also to fill with the non-professional accountants. And so the task force will consider these new applications and brief the board in due term. So the engagement with the Sustainability Reference Group is through virtual meetings and also via email. And the first meeting was held last week. I would like now to invite Chana just for some words regarding the overview of that first meeting.
Thanks, Laura. As you can see on the screen, there are 7 members at the moment. We had our first meeting on the 6th of June. I extended IESBA's appreciation to these members for volunteering their time. We discussed the terms of reference of the Sustainability Reference Group, and that it will be focused on identifying challenges for non-accountants and also sustainability related examples for part 5. At that stage, a proposed part 5, because we informed them that we are taking the papers for this board meeting. Provided them with an update on the sustainability and the experts projects, and sort of said, explained to them how it was related. We discussed the timeline, what we were working towards, ED end of this year, and by the end of next year, the issue of the standards. We informed them that we are closely collaborating with the IEESB as well as other standard setters such as ISO in the development of the standards. We got to some specific issues and also informed them that we had the support of IOSCO and the PIOB in developing these professionally agnostic standards. So a couple of issues we got to were the definition of firm, I mean, most of them are non-accounting background, and they didn't seem to mind the definition of firm. They said that the actual definition doesn't use accounting specific terminology, so that it should work. However, they cautioned about the variations in B and C about control. For example, there could be an assurance firm that is owned by a private equity company. So outside of accounting, the ownership structures could vary. So they warned us about that. And then we discussed practitioner versus provider. And also pointed out that the IEESB uses practitioner. They were generally supportive of the use of practitioner for consistency with IEESB, but noted that provider or assurance provider is used in CSRD. So a suggested solution was to consider, if we include practitioner, then to make a footnote or something and say it's equivalent to terms such as provider in the CSRD. We just managed to start on sustainability information, but then we decided to park it for next time because that would require much more discussion. So some of the other things was whether IESBA will create a mechanism to report on compliance with the IESBA code. We told them that ISSA 5000 does require you to state compliance with relevant ethical requirements, and that would be the hook. They also raised issues over scope 3 data, and sometimes there's numerous suppliers, and it could be assured by different people along the reporting chain. And we also discussed that part 5 should be equivalent to part 4A, and no less, no more, no less. So we said that we would probably be meeting once a quarter and then via email, and told them that we have a task force meeting coming up in early July, and most probably we'll reach out to them once we have that task force meeting end of July or early August. Back to you, Laura.
Thank you, Chana. And Chana is the chair of the Sustainability Reference Group, something that I'm sorry I missed. So the sustainability, this reference group is one of the way that that the IESBA task force has to expand the scope to non-practitioners. And the objectives of the reference group are one, to act as a sounding board to the task force proposals, also to provide insights, expertise, and advice relating to the development of the IESBA standards. For example, providing examples of real life challenges, ethics challenges related to assurance and reporting of sustainability information, and also to assist in the development of non-authoritative guidance material relating to the application of the standards. And so this is a second part of our ways to reach non-PAs and to have them on board. This guidance is expected to be especially helpful for non-PAs because, of course, they are not familiar with the code. And so, again, this would be non-authoritative guidance. It would not form part of the authoritative text of the codes. It would help explain how to apply the code in its entirety when performing sustainability insurance. It would provide accessible and user-friendly guidance to assist the application of the code, and the primary users would be non-PAs applying the code for the first time. This is without prejudice to also adapting that first part that we have in the code, the guide to the code, which explains how to use the code, and that will also be helpful for PAs. But this non-authoritative guidance would be more directed to non-PAs. And so I would pause here for questions or comments.
Thank you, Laura. Any questions or comments? Junpei, please.
Laura, thank you very much for your explanation. It is beneficial to establish sustainability reference group composed of non-PAs. We can update our information on non-PAs efficiently in a timely manner. On the other hand, I believe that coordination with IESB's sustainability reference group is also important. The coordination might give us inputs which we cannot find because of the difference and because of the difference of people and perspectives. Also, besides SRG, I think it is still necessary to exchange opinions with stakeholders, including investors and regulatory bodies, etc., other than SRGs. It might be good to utilize a virtual conference, as it is easy for stakeholders in different jurisdictions to take part in. That's my comment. Thank you.
Thank you, Junpei. Begoña, please.
Thank you, Gabriela. Well, my question is about the structure of the reference group, well, the structure and the applicants. So we would like to have some information about the 27, do you say 29 expression of interest, well, where they come from, the different backgrounds, or how were the criteria used to choose the 7 people that have been chosen. And you said that the majority were non-PAs, majority, or how many? And why is that the decision about the number of PAs versus non-PAs in that group? We had the idea that they were going to be non-PAs. So maybe I was wrong in my interpretation. So so criteria for selection, industry, background, gender, geography, which criteria were you using and which applicants did you receive? That's it at the moment. Thank you.
I don't know if Laura, you.
Sorry, if you don't.
No, I'm happy to respond, but Laura, you want to respond to Begonia and I can supplement?
Sure. Maybe I could address first one of Junpei's comments regarding the coordination with the IEESB reference group. We actually have two people in our reference group that are also in the IEESB's reference group composed of non-PAs. Regarding the composition and the criteria, we targeted especially non-PAs that attended our roundtables. Of course, we got some PAs, people from the accountancy profession or with accountancy background, expressing their interest to be included in the reference group. It's I would say the current composition, so the 7 people in that were selected for the reference group, they are non-PAs. They may have, some of them may have an accountancy background, for example, from academic background in accountancy. But for example, the person that comes from Deloitte, she's not a PA. And I mean, I can give more, I don't know if we can share the list of applicants and their backgrounds, but they were from firms, from non-accountancy firms as well, academic backgrounds, mostly that. And the criteria, it's in the terms of reference, and we had geographical considerations when selecting those 7 individuals, as well as to ensure some gender balance.
Yeah, absolutely. And if I may just, maybe add to what Laura has shared, the focus has been on really having representation from the stakeholder community outside of the accounting profession. Importantly, those who have experience in sustainability reporting and assurance, and we have a number of those. I would say the group, as you can see it on the screen here, is, I would say, largely from the non-professional accountant community. Quite a few of them are in the practitioner space. DNV, for example, is a service organization that does a lot of sustainability assurance. Accountability, as you know, is in that area. Collins Aerospace, that's a preparer that's very much involved in sustainability reporting. The academic is doing a lot of work in sustainability reporting and assurance, and the individual from Deloitte, etc. So our focus really has been on having the right level of experience and expertise in sustainability for our purposes and our needs. We have 3 open spots that, as we've just discussed, will also be focused on really having representation from the non-PA community, but importantly, trying to get geographical diversity. And yes, gender consideration, gender balance has been an important factor in the task force's consideration. So we have considered, it's been really an effort to achieve as broad a balance and as carefully calibrated a balance as we could possibly achieve, recognizing the need importantly to have the experience and the expertise to inform this board's work. And I would say, I mean, we can certainly provide the list of applicants to the PIOB. I mean, if that's, that's no problem at all. And Nora, we can share that offline with Begonia so she can see the background. Thank you.
Just one more thing that I would add to the selection process, that once we are reached out to the individuals and asked for them to express interest, we share the terms of reference ahead of that time, and the terms of reference includes the specific selection criteria. And when the task force deliberated, the applicants, we had the selection criteria in these terms of reference that will be public once we announce the names.
Thank you, Ken and Sylvia and Begonia. I hope that this responds to your questions. Thank you very much. Rania, please.
Thank you. So actually, very much to Begonia's point, my question pertains to the structure of the sustainability reference group. And is it, I mean, I appreciate everything that you said in terms of the selection criteria, but is it more of a targeted structure? So this is how many, let's say, representatives we want from this so and so and so industry, or is it just, we just choose from the pool of applicants? And should we have, I mean, I don't know if perhaps we cannot get stuck. I realize that we cannot get stuck on each and every single detail and part of the process. But also, I mean, I think that the more transparent and the more, I mean, we share these and we consult, I mean, with these processes with others, for example, perhaps, I don't know, IOSCO, the PIOB, the more we do this at early on in the process, the less we expose ourselves to questions later on. So I think one of the things that we should consider is that should we target certain, I mean, certain people or certain representatives, certain industries for specific positions within that group, and then if we fail to secure those targets, then I mean, we will have demonstrated that, you know, we did what we could, but we could not. That's the best we can do under the circumstances within that time frame. Or is it okay? I don't have the answer to this. I'm just asking, is it okay to just select from the pool of applicants and just make, I don't want to say a random choice, but sort of based on what we're getting? Because I think this reference group is key in this process. And I think it's important to have a targeted structure. We achieve it or not, that's a different story, but we are transparent and we get inputs, we get some validation of that targeted structure from our stakeholders. This is what we're going to do. This is going to be our sounding board. I think that's important. Thank you.
Just to add, one of the things that the task force discussed at some length and was quite concerned about the balance is that we did go out there and ask for people to apply, and we did spend a lot of time trying to encourage nominees to put themselves forward to give us as big a selection as possible. One of the things we had to balance was whether or not we had a reference group that could start work quite quickly because we needed to get some input, or did we pause and reach out for further nominations and then run the risk that we would possibly get sort of to the end of June or something without actually having a reference group to give us some input. So we recognize the difficulty and, you know, hope to continue to balance that by reaching out for further input and further stakeholder, you know, advice and insights. But I think one of the factors that we did sort of put quite a heavy weight on is that we recognize the need to get this input into our considerations at quite an early stage. And therefore, you know, whilst we would consider to try and encourage other people to stand, it was really important to have something that was operable quite early on.
Okay, so definitely I agree with you. And of course, we have to be practical, definitely. But perhaps, I mean, it could be a sort of like, it does not have to be fixed. We can start with something and move on towards a target. But all I'm saying is we just have to keep in mind that at one point, we might be facing pushback from non-professional accountants when it comes to the adoption of the code. And so they might, I mean, they might criticize any part of the process. So the more we make sure that we get the buy-in of different stakeholders in this process, the stronger our position later on. And so recognizing that at this point, we know we have to get the ball rolling because we are operating against very tight time frames. But perhaps we can, that could be our target, and we'd be transparent in what we're doing and how we're operating. That's what I'm saying. Thank you.
Thank you, Rania. I know that there are people wanting to speak, but at this point, I'd like to add something with respect to the composition and the process that was followed to come to this conclusion. I fully understand the questions and the concerns and proposals, and thank you for that. But I can attest, because I followed it from close, that this was the possible, and I think the possible process with a result with which I think we should be comfortable, because we could not miss the opportunity of having the roundtables and reaching out to those people. Maybe most of the people around the table do not have an idea, and you don't have to have, of what it took us to make sure that these people were around the table at the roundtables. It was an incredible effort. It's a completely different audience, people that we had never met, etc. So it was a big achievement to have all these non-professional accountants discussing with us at the roundtables upon a huge effort from the board, some board members, staff, etc. So we could not miss that opportunity and let them go. At the same time, like Mark was saying, there is a matter of time that we cannot lose, of which we can't lose sight along the whole process. That doesn't mean that we should not do things, and I think we are doing in the most robust possible way. But the fact is that if we are not pragmatic in some moments, we risk missing the momentum and the opportunity. So that's what was done, is that the task force and the staff reached out to the people that we had identified to be at the roundtables, taking leveraging on that opportunity of them being there close to us. Because otherwise there would be a risk if we would open a call for candidates of having 150 applicants from we don't know where. So it was the possible compromise between being pragmatic and making sure that we would have meaningful representation at this group. Now, I had the opportunity and the privilege to be an observer when the task force was discussing who is going to be in and who is going to be out. And I think that the task force had a very balanced and careful approach to the group of applicants in terms of gender balance, geographical balance, background balance, etc. Is this the perfect process? No. Would it have been better to follow a different process? I think that we would have we would run a great risk of missing the opportunity of having this group ready to provide input as soon as we need. And we need it now, and that's why China was also so effective and quick in organizing the first meeting immediately after the group was formed. This doesn't mean that your comments do not make sense. They do make sense, but I think that we have reasons to be comfortable, at least with what has been decided. So, Laura, yes.
Yes, if I can, may add some very brief comment. In terms of background, we also privileged, or the task force privileged, people with expertise and practical experience and expertise that can really help testing the standards and adding sustainability related examples. Because, for example, we also had some applications from people representing standard setters. And I think the thinking was we will have other opportunities to meet with those groups and to discuss with them. And so we try to keep the reference group very practical and pragmatic oriented. Thank you.
Thank you, Laura. And those who were not selected, they received a letter, right, explaining the reasons. So trying to be as transparent and kind as possible for them to understand that we could not have everybody on board, because then we would have the risk of having a very big group which should not be able to provide the very concrete contributes that we need. So we have a number of requests to speak. I think that the first one was China, that is waiting for a long time.
Yeah, no, I want to sort of add some comments to what Laura, Ken, and Mark said. So in the selection process, we actually looked at their backgrounds as well and their ability to give sustainability related examples. And all of the people you see, and some of us could attest to them as well, that they have extensive experience in sustainability. So that was a key requirement. Out of the 29 people, I think there were about maybe 10 accountants. So we excluded them because we were mainly going for non-accountants. For the record, Michael Bray is an accountant, but I think he has extensive experience. He's on the first integrated reporting project, and he's a well-known, I mean, he's like a leading authority in Australia on integrated reporting and sustainability. So we did look at their backgrounds, and that was a key criteria for the selection. And I want to add something to what Gabriela said also. The 140 people sometimes in the jurisdictions, we had to call people and tell them to come, because it was easy to get the usual people, but it was harder to get the people from non-accounting and people who don't normally come to our roundtables. So there was a big effort which was unseen in getting this 140 people to the 4 roundtables. And so we already had people who were interested, and therefore that's why that pool was targeted for the selection. Thanks.
Thank you, Chana, and thank you to all of you who made an effort to have these people with us around the table, which was really a great achievement. Then Felicia.
Thank you, Chair. I think I want to also appreciate the proactiveness of coming up with this group, which is good, given the fact that there was no roundtable that was done around Africa. So I was wondering if it wouldn't be better to go through maybe PAFA, because they probably have the African understanding across the continent. They can be able to reach out, maybe assist IESBA to reach out to the different jurisdictions and identify people that are probably fit for this group. They may not have to select them, but they can also give you some recommendations, given that they also know the market.
We have done just precisely what you've said, Felicia. PAFA has given us 5 names, which the task force will consider. Thank you.
Great minds think alike. So next one, Paul, please.
Thanks so much. I think this is very basic, but just when we get into that whole deliberation around are we going to change the name of the code? We get so much credibility when we say, 1 to 4 were done by accountants. 5, it was extensively engaged with non-PA sustainability professionals. We get credibility being able to make that pitch. Thanks.
Thank you, Paul. Sadia, please.
So I actually have a question on the guidance part of this presentation. I was just reflecting on how we've done a debrief on what we've heard so far. And a lot of it probably sits within that guidance for non-PAs to assist them in adoption and implementation of the new IESBA standards. And I was wondering if we can think of a non-authoritative but part scope authoritativeness, in that through our deliberations, we probably have to agree on what's the scope of that guidance and how that guidance would be driven. I was also concerned about the timing of this guidance. I think the exposure draft will have to make note of this coming through and what it would cover, so that we don't get the same round of comments through the exposure draft on the implementation issues.
Thank you, Sadia. Ken, please.
Thank you, Gabrielle. Maybe just 2 comments before we wrap up this conversation. I must say, from my perspective, I couldn't have been more pleased with the level of interest we have received for participation on the reference group. It well exceeded my expectations, I must admit, and that just really signal basically the importance of this project from the ethics and independence perspective. Really, we had reached out to just the roundtable participants, and Gabriel, I just fear that if indeed we had put out an open call, it wouldn't have been 150 applicants, it would have been 1,500 applicants. That's just emblematic of the level of interest, as I say. But the point is, and I think the board has heard this refrain before: the perfect can be the enemy of the good. And what we need right now is expertise, experience that we can already have and that we can work with. So I am comfortable with the direction of travel. And importantly, we have those 3 open spots, which from what I've seen in terms of the applicants, we are going to be considering within the task force. they are going to be also coming from the non-PA community. So if, at the end of the day, when we look at the full composition of the reference group, it's going to give us a very solid basis to go forward. And maybe my final comment is an observation that Chana reported to the board in terms of the initial conversation that we've had with the reference group. And that's a comment about the disclosure of the ethics and independence standards that have been used by the assurance provider. Now, while it's true that ISA 5000, that's the assurance standard that IESBA is developing, will require disclosure of the relevant ethical requirements that have been applied, we have to really be conscious that the code is intended to work with any assurance frameworks, not just the IESBA standards. So as we go forward, let us not lose sight that it's important that we engage with other standard setters that are operating the assurance space, be it ISO, be it potentially accountability and others, to make sure that this important issue about transparency of the independence standards applied doesn't get lost in the fray. So that's an important issue, and thanks for raising this, Chana.
Thank you, Ken, and thank you all for all these important comments. I think that with this, I'm going to give the floor back to Laura. Is that you?
Well, we just finished the common issue session, yeah.
Okay, so unless there is any other comment that you want to make, the common issues session is come to an end. We consider the group the approval or the comfort, the general comfort of the board with this group, with decisions still to be made on with respect to the African and South American representatives, and one additional seat which is being kept void until further decision. Thank you very much for this. And with this, we will now move to the next item in the agenda, a little bit late. But now we are going to dig into the independence issues for sustainability assurance. And the floor is yours, Mark.
Thank you. I'm sure we can do a little bit of catch up in the next few minutes. So what we're going to do is we're going to move on to the main considerations and the main proposals to do with the independence part of the revisions to the code. And we're going to be sort of passing backwards and forwards between myself and Sylvia and Keith for various aspects. Just as the presentation comes up, actually, I think we're just changing the presentation over, aren't we? Oh, are we? Lovely, thank you. So just as Astu changes the presentation over, probably just worth saying a few things about the papers that you've got in the papers that you've got in the board pack. When we discussed the main considerations of independence as when we discussed the main considerations as a task force, one of the things that we were most keen to do is spend our time saying, what are the most substantive issues? And the most substantive issues are the ones that sort of needed most consideration and most judgment. And therefore, those are the papers that are tabled in items 3A to 3G. And those are the ones that we're going to work through as part of this presentation. There are other papers as well that the task force also considered, but those are more conforming changes that we would have to make within the code in any case. So this discussion as part of this pack is really looking at the substantive judgment considerations that we've had to make over what gets brought in and the approach that we take to bringing in information within part 5 of the code. And the rest of them are less significant considerations because it's just alignment of the text. So that's the sort of approach we've taken. So we hope that in covering through the rest of this discussion, we're going to spend time really sort of getting your views on some of the more challenging issues and giving the board a chance to say whether or not we've sort of kicked the tires in the right place and whether or not our consideration aligns with your own. Marvelous. I think we've got the presentation. So you'll see that focusing on items 3A to 3G, and then you've got the reference papers 1 to 11 as well. So you've got all of the substantive text that supports our considerations. In terms of the considerations, before I hand over to Sylvia, I'm not really sort of going to focus on those very much because I think we've already covered a lot of that. We had our meeting in Lisbon in May, both a joint meeting of work streams 1 and 2 and separate meetings of the individual work streams. And obviously the outcome of that was allowing us to develop preliminary draft text for consideration and discussion here. And also as you've heard already today, we've tested out some of the thinking with the NSS group, and we continue to sort of engage with our stakeholders to get the right views. I'm not going to say anything about the roundtables because we've already said enough about them, and I'd only be duplicating what we said earlier. And in terms of the focus on what the NSS was actually asking us, well, again, more questions. Do we sufficiently understand the non-PA landscape? And if we are developing these standards and we put them out, you know, how will those sort of affect work that's done by the non-PA community, and indeed how will they engage with those standards? So very good discussion there with the national standard setters. One of the questions that they did raise is the fact that we're working to an ambitious timetable, reflecting the fact that sustainability reporting is moving quite quickly. There was that recognition that you need to bring people on board with you and you haven't got that much time to do so. So they again stressed the importance of further engagement with regulators and continued engagement to really educate the market in terms of what IESBA is proposing to do and how. And then one of the things that we'll discuss at some length as part of these overall discussions is we had a conversation about the use of the term sustainability engagements of heightened public interest and how that aligns with the definition of a public interest entity in the code itself. So we hope to be able to bring some clarity to that in the presentations that you have this afternoon. But the sort of general message from the NSS participants is that they were broadly supportive of the criteria that we were putting forward. We just needed to make sure that there was sufficient clarity in the way that we sought to do so. But anyway, the first substantive section is moving on to cover the scope of independent standards. And in taking that forward, I'm going to hand over to Sylvia, who's going to do it. And I think we need a slightly higher powered pointer because it's.
Got it. Thank you. First test passed. So no, rather failed. But so the first issue we are going to discuss is the scope of the independent standards in part 5. And this is the issue that we actually discussed back in March as well, our first proposal. That time you didn't have the proposed text available. We were only talking about the conceptual issues. So now what we are going to talk about, you can find it in agenda item 3A. That really includes the task force thinking about the proposed scope for the independence standards. Astu, can we just please? Thank you. So as we have discussed in March as well, what the task force, the work stream 1 is proposing, that the independent standards focus on the sustainability assurance engagement, as this engagement is defined in the glossary of the code. So what we have proposed in March as well, we didn't really include changes to that definition that now you can currently find in the glossary of the code. And that describes the sustainability assurance engagement. It's as an engagement in which a sustainability assurance practitioner aims to obtain sufficient appropriate evidence in order to express a conclusion designed to enhance the degree of confidence of intended users about the sustainability information. So this is the definition that we believe the board agreed on and supported, because this definition is in line with the extent code assurance definition, and also the definition that IEESB is planning to use in their ISSA 5000 standard. So that's definition. I know that everybody's looking at the screen currently. It's not on the screen, because that's the definition we have we believed agreed on in March. It's currently in the glossary of the code. What we have also included and what we have discussed, that we believe it's important that the code would be applicable to any type of or any degree of assurance that the practitioners are providing. So both the limited and the reasonable assurance. So these definitions weren't part of the code before, and we have included them in the glossary. So the glossary will describe the sustainability assurance engagement, and it will explain that these engagements can be either limited or reasonable assurance. And we use the definition that IEESB is using in the ISSA 5000 to describe these engagements. We got a couple of advanced comments that these descriptions, the description of limited and the reasonable assurance engagements are a bit complicated. I mean, we believe that it's important that we keep this the description in line or aligned to IEESB standards. So that's what we intend to do, and that's what's currently in our proposal as well. So after the March board meeting, when we sit down to consider what we also discussed, that in part 4B as well, we are talking about different type of engagement. So there is the attestation type of engagement, when the assurance engagement in which a party other than the practitioner measures or evaluates the underlying subject matter against the criteria. And there is the direct engagement, where the practitioner measures or evaluates the underlying subject matter and then subsequently issues a conclusion on that subject matter. So we discussed within the task force whether if it's necessary that the independent standards covers both type of assurance engagements. And we got to the conclusion that we believe that at this point, the part 5, the independent standards in part 5, should only focus on the attestation type of engagements. So when a practitioner then when a party other than the practitioner carries out measures or evaluates the underlying subject matter against the criteria. And this approach, by the way, is in line what IEESB is proposing in ISSA 5000. So 5000 will focus on attestation engagement only, and not the direct engagement. The other point that we discussed in March was the differentiation between the assurance engagement and the certification type of engagement. So in March, I think the board agreed that the focus should be on the assurance engagement, but there was a discussion whether the code provides some description or clarity about the differentiation between the certification type of engagement. And there was quite a long discussion on how we could capture what a certification type engagement is eventually. So in Lisbon, the task force discussed potentially if we can provide any kind of description. And where we have landed is that we believe that we should have a positive approach, so focusing on those engagements that are in the scope and not a negative approach. So at this point, the workstream one is not proposing to including or explaining the difference between an assurance engagement and the certification type of engagement within the code. But potentially, or our suggestion is that the guidance to the new standards will provide this clarification on the certification type of engagement as part of the rest of the guidance on the scope. The next question that we discussed is, so once we landed that what type of sustainability assurance engagements would form or would be part of the scope, then the board also acknowledged and like recognized that sustainability assurance engagements cover a wide range of engagements, given the sustainability matters that are out there, and given the type of engagements as well. So the question was that, what are those engagements that we believe the board should prioritize or focus on at this stage, where we believe the high bar standards are the most necessary or the most relevant at this stage. So what we have heard also from the roundtable, that given the short time frame, we don't have time and capacity to address all sustainability assurance engagements that are out there. And they suggested, and the board agreed in March as well, that we need to prioritize and need to decide what are those engagements that we believe that part 5, so the standards that is equivalent to the auditing standards, should focus on. And that's where we come up with the term of sustainability assurance engagement of heightened public interest. And during the Bargeford meeting, we provided some criteria as well that we have discussed. Once we presented this approach to a couple of stakeholders, including the NSS and others, the comment we have received that there were some confusion around that what are the sustainability assurance engagement of heightened public interest would cover, because that's really similar to the term that we are using for the determination of public interest entities as well. And as Mark mentioned, the concerns weren't really around the criteria that we have provided, but really around the term and how we describe these engagements. And I think what we have provided as a response to these stakeholders, that basically the criteria, the public interest aspect, is really referred to the characteristic of the engagement and not the entity. So when we are talking about the public interest entities, this really about, we are thinking about financial criteria or financial conditions or any other conditions of the entity. But here we are focusing on why do we believe that these type of engagements are relevant or important from a public interest point of view. So this is the point that we will take back to the task force as well. And also we are interested to hear from the board's views as well. Our first reaction is that it's not the criteria or not the issue that we are focusing on prioritizing certain engagement. That's not the point. It's really mainly something that's creating some uneasiness around on the term we have chosen, and we are looking forward to inputs if we can use any other terms. And this point, first of all, personally, I believe it's really mouthful terms. It's really difficult to say it out loud all the time. But of course, for the other reason is just to avoid this kind of confusion with the public interest entities. Then can we just, thank you. So as I have mentioned, what we have discussed in March as well, that part 5, the independent standards in part 5 would apply to sustainability assurance engagement of heightened public interest, where the assurance is provided on sustainability information reported in accordance with a general purpose framework. And And I will come back to our determination of general purpose framework later. So this is one of the first criteria. The second point is that the sustainability information is publicly available to support decision making by investors or other stakeholders, or required to be provided in accordance with law or regulation. So this is the description or criteria for a sustainability assurance engagement of heightened public interest that we are providing in the code, but also we recognize that laws and regulation or jurisdiction may designate or determine any sustainability assurance engagement as such. So this is what we are proposing to be the scope of Part 5 independent standards, but that wouldn't mean that other sustainability assurance engagements wouldn't be addressed or covered in the code. So we propose that for other sustainability assurance engagements, Part 4B apply. And in the next couple of slides, or I think in the next slides, yeah, I would like to just talk about the determination of general purpose framework, because it is one of a really important element of these determination. And in March, the comments we have received from the board, that it's important that we provide a determination or a definition to this term. So we wouldn't leave it for the firms to determine what a general purpose framework is. And so the general purpose framework as a definition, we propose to include that in the glossary of the code. And what you can see on the slides is the wording of the definition. So the general purpose framework is already a defined term in the ISA standards. I think it's ISA 700. And that's what we used as a basis for this definition as well. So the general purpose framework can be a fair presentation framework or a compliance framework. And back in March, the board has a discussion whether the Part 5 standard should focus on both types of reporting frameworks, the fair presentation and the compliance framework. And our original proposal was that first we should just focus on the fair presentation frameworks. But based on the discussion we have with the board and the input we have heard, and also subsequently we had a discussion with IESBA as well, we believe that there would be a benefit to include both types of general purpose framework, so both the fair presentation and the compliance type of framework. So if the sustainability assurance engagement is carried on over sustainability information that is reported, either a fair presentation or a compliance framework, they will both fall under Part 5. And basically, this is something that's in line with ISSA 5000 as well. So ISSA 5000 are focusing and including both type of reporting frameworks. The comments in advanced comments we have got is there was a question that whether the scope would also include the entity developed criteria as well. So when the sustainability information is reported in entity developed based on an entity developed criteria, because our ISSA 5000 will include, when they are describing the criteria, they will include both the framework type of criteria and the entity developed criteria. So this is something that we will take back to the task force. But given this definition, and given that our first proposal is to focus first only on the general purpose framework, our response to these advanced comments that the entity developed criteria wouldn't fall under Part 5. But we are interested in your views, and we keep on coordinating with IESBA as well. So if we can move to the next slides. So based on what I have just presented on the scope, this slide is really intended to provide a roadmap that based on the proposed scope, what part of the code would apply to the different type of engagements. So as you can see in the yellow first box, we are only talking about sustainability assurance engagement. So not certification type of engagement. So it's really just to the assurance engagement at this point. And there is two types of engagement. One is if it's of heightened public interest, meaning that it is an attestation type of engagement, and the engagement meet the criteria that we were just talking about. So it's reported under a general purpose framework, is publicly available, or the laws and regulation describe the engagement as such. So if it's a heightened public interest, then part 5 of the code would apply to this engagement, whether irrespective of whether if it's carried out by a PA or a non-PA, because that's what we were talking about. It's a profession agnostic standards, and that's what by the way the roundtable generally and overwhelmingly supported. So I think that's the easiest leg of this slide. The other question is that what about the other engagements? So if something is not of a heightened public interest, so it's a direct engagement or something that it's not maybe reported under a criteria that was developed by the entity. So in that case, if the engagement was carried out by a PA, that we suggest that the provisions in part 4B would apply to these engagements. Based on the previous discussions we have the board, I think what we have heard that there is no intention at this point to expand the scope of part 4B as well. So if the engagement is carried out by a non-professional accountant, then part 4B wouldn't be, I don't want to use mandatory because nothing is mandatory, but we would expect that the voluntary application of the code would come into the picture. Or so in that case, the non-PA should apply the code or any other standards as demanding as the code. But I think what's really the key point here, that part 4B would be applicable to PAs as it is now. And at this point, we are not proposing expanding the scope of part 4B as well to assurance engagement carried out by non-PAs as well, subject to the board's approval or further discussion. But I think that's something that we agreed in March, and that's we got support for that approach. So I think, I don't know if I have further slides. Yeah, I think I would pause here. And we would like to hear your comments on these.
Can I just add a couple of comments, because I think Sylvia's covered the ground really well there. This is always a difficult choice for us because we've got to prioritize. We can't do everything at once. So what we've done is we've come up with an approach that prioritizes, and it's an approach that draws on the way that the code currently works. So we've taken the high bar approach of part 4A, and we've applied that to a set of sustainability engagements that meet criteria that we've tested with our stakeholders through the roundtables, through the NSS, through the CAG, and they've given us sort of a broad endorsement for that process. Never rule out the fact that in further periods, the board could consider to do further things, but we've had to, scope this project in a way that's deliverable and in a way that meets the immediate need of those entities that will be reporting, hopefully using IESBA standards or other frameworks that are currently available in the marketplace. So I think what we've taken is the board's position from the March meeting, tested that with our stakeholders, confirmed that actually they feel that that's broadly in the right position, and that's what we put to you today as a board. So very happy to get views and take questions.
Thank you very much, Sylvia and Mark. Now this is time for questions and comments, and I'd like to encourage the board to make as many questions as necessary, because these are critical and strategic decisions that we are making here. And it's important that all of you understand exactly what we are deciding upon. Also because you are going to be ambassadors of this proposal in your with your networks. So it's good that everyone is able to articulate what is in, what is out, for whom, and which are the reasons for each one of these options. This, of course, together with your comments on and possible suggestions to this proposal. So starting with Rania, I think you were the first one raising your.
Thank you. Okay, so my first question is on, I think, slide 7 about the direct engagements. So I'm just not very clear what you mean by direct engagements. Are we talking about an engagement where the practitioner is actually doing the reporting and the assurance? So that's because it seems to me like the way it is defined, I mean, not to direct engagements where the practitioner measures or evaluates the underlying subject matter against applicable criteria and then presents the subject matter. I just wanted to make sure that, I mean, I do not disagree that we should be focused on assurance, because I think this is what we've been tasked to do. But I think it would be important to understand what we mean by this term as we move forward. So that's my number one question. And then the other question is about the definition of sustainability assurance engagements with heightened public interest. I didn't really get the distinction or the nuance between engagements with heightened public interest and assurance, sustainability assurance engagements, because the way it is defined, assurance is provided, okay, on sustainability information reported in accordance with the general purpose framework. I think that also applies to sustainability assurance. And then the sustainability information is publicly available to support decision-making by investors. That's always the purpose of information. It's to, I mean, it's to inform a decision. You get my point? So I don't see, unless you're referring to publicly listed companies that are providing, then perhaps that could be clarified. You get my point. But otherwise, I think the way the definition is worded, in my mind, it applies to sustainability assurance engagements, and I don't see the nuance there. Thank you.
Thank you, Rania. I think it's better to get the response from Mark and Sylvia before we move forward.
I think that what I would just edit, and maybe I will turn to Mark, can provide some real life examples that maybe would highlight the differences. But the direct engagement is already a defined term in our code. So we didn't inventing something new. It's something that we just use, that it's already a definition and already a concept in the part 4B part of the code as well. And maybe if someone can provide an example from the practice to the direct engagement, I would appreciate that. And also regarding the sustainability assurance engagement of heightened public interest, I think the focus was really about that these information is publicly available, and there are reports and sustainability reports that are not prepared for the public or to influence the decision making. So we believe that those reports, the public interest aspects of those reports, are not as important, not as relevant as the engagements we are focusing here. But maybe I will just turn to Mark, who will provide some examples that.
Well, I think not so much examples, but the thing is, with the attestation type engagements, you're effectively, someone is reporting against an established framework, a recognized framework, and there is assurance of that information, again, in accordance with the recognized framework. Where you're looking at direct engagements, you're taking away that framework, and it could be asking for reporting against information against particular criteria that the entity itself has described. So if we go back to an earlier discussion, it would be reporting more against a special purpose framework than a general purpose framework. Now, we need to look at this entity, this sustainability engagement of heightened public interest. But it is, as Sylvia says, just a recognition that some engagements are of public interest because they generate information that is used by investors and members of the public and other stakeholders to make decisions. And it's done on the back of information that is made publicly available rather than private information that an individual or an entity could commission. And so therefore, in trying to carve off what we're covering, we want to make sure that we're dealing with this publicly available information first. And that's the driver for our framework and why we've set out what we've set out.
Thank you, Mark. Go ahead.
I just wanted to react to this. So, okay, I appreciate the fact that, there's a difference between when information is publicly available and when it's not. However, in both cases, it's going to impact decision-making because that's generally the purpose. I mean, ultimately, the impact on the public interest perhaps is somewhat less, but it's there. And then my other question is, will there be much of a difference in the requirements if it were not publicly available? So, and I'm sorry if I'm just, you get my point. I mean, does that really, my point is, if that information is publicly available or not, it is going to influence decision making. And sometimes it could be a private company where the information is not publicly listed, but you're talking about a huge amount of resources that are being channeled towards that organization. So what I'm trying to say is, should that make a difference in the ethics and independence requirements? I mean, just a thought, perhaps. I mean, I'm just thinking really out loud.
It's a difference though, because it's not something that applies differently to public and private companies, because of course in many jurisdictions, even private companies report their financial results publicly because they're obliged to file them with their register of companies. So you have got publicly available information even there. This is a recognition that what you're doing is you have companies that are producing information against a recognized framework. And therefore, what you've got is almost regardless of company, you have the same type of reporting. So you've got comparable reporting between different entities. And therefore, it's important that the users of that information can have the same level of confidence and trust in it because it is subject to the same level of ethics and independence that apply. If you've got information that is not within the bounds of what we've defined, and therefore it's something that's either reported on through a special purpose framework, or it's been a designed engagement to say, answer me a question on this specific aspect of my information, there's still a route within what we're providing to give an ethical and independence framework, but that is through part 4B of the code rather than what we're proposing to do with part 5. So it is just a recognition that, in a sense, the top tier for us is publicly available information provided in accordance with a recognized framework that is produced for decision-making purposes. And therefore, for most companies, that will be information that's put in the context of their annual report and made available, rather than things that might be a set of information that's not designed for all users, that's perhaps designed in the context of a narrower sort of specific consideration.
Thank you for the explanations, and thank you for the questions, which are really important, because at this point in time, they show how much we have to care about words and about the options, of course, but about words. So I have a difficult task. Ken, you're looking at me, so.
Yes, maybe just to add to what Sylvia and Mark have shared, Rania, and maybe if I can add to some of the explanations to help you better come to terms with in terms of the direction, etc. And that's an important. I mean, the question you've raised is a very important one, because what we are discussing essentially is where the rubber meets the road, because this board has to be clear in its mind as to what standards it's setting and for which types of engagements and who is in and who's out. And if those are on the table here not very clear, I mean, we have to go back to the drawing board. So it's a very critical question
this is where the rubber meets the road. So in terms of the scoping of the standards for assurance engagements of heightened public interest, Mark, in a way, sort of alluded to it. In our code, if we were to use the contracts of audits of financial statements and other assurance engagements, to your question, yes, there are two sets of standards. One is stricter or more stringent, and the other one is less strict or less stringent. The stricter ones are sitting in Part 4A for audits of financial statements, because audits of financial statements they're really intended for general consumption, etc. And the less stringent standards are sitting in Part 4B, and these are for other assurance engagements. And these can span the gamut. You could have one-off engagements, you could have limited scope engagements, you could have engagements that are commissioned on a very for a very specific purpose, etc. And in those circumstances, would it make sense to require the practitioner to apply all the standards that are in Part 4A? And where this board has landed is to say, no, it doesn't make sense, because this is really just a one-off. Maybe it's an assurance engagement that's been commissioned by a lender, for example, in order to satisfy the lender that based on its criteria, this entity will meet its threshold to be able to arrive at a lending decision. And it's the same for sustainability assurance engagements. You could have engagements that are very broad for general consumption, and equally engagements of very limited scope, maybe non-recurring, one-off, etc. And therefore, the importance of this board making sure that it has the right cut, so that we're not really subjecting all sustainability assurance engagements, whether they're for wide use and distribution or they're limited assurance engagements. It does make sense to be proportionate in that sense. So it's a bit a long-winded explanation, but hopefully that helps in terms of getting you to that level of comfort. Your other question is a little bit more technical, and that's a direct engagement. And you did ask for an example. I mean, one example in a financial reporting context is where the assurance practitioner is actually doing the measurement or evaluation. That's a technical explanation. That's a technical definition. But in practice, an example is where the assurance provider is, let's say, reporting on entities' internal control. So the reporting of the internal control is the measurement or the evaluation. But reporting on the effectiveness of the internal control is the assurance that's being given. So as a practitioner is doing the reporting, they may well be gathering the evidence along the way to support a conclusion on the effectiveness of the internal control. And that's a direct engagement. And this may well happen in a sustainability assurance context, because yes, I mean, entities might well commission a sustainability assurance engagement for reporting on controls over sustainability reporting. And that's basically what we're saying is we're scoping those engagements out for the time being. Maybe eventually or at the next stage, maybe this board might well consider scoping those engagements in, but for the time being, we're saying that we're only focusing on attestation engagements where the basically the entity has done the measurement, or in this case, the reporting on internal control, and the assurance provider is coming in to report on the effectiveness of those controls.
Not to dwell too much, I just want to give you one tiny example. Perhaps this was in the background, the back of my mind when I asked my question about the heightened public interest. So the UNDP, I mean, basically in the Arab region, we're talking about countries that are developing. Okay, certainly many of them are very underdeveloped. Now, one of the practices that UNDP is trying to do is they're trying to raise, for example, let's say green bonds. And then they try to map them to private sector companies, very small, medium-sized enterprises. And so the idea is, the intention is for the government to raise the money from the green bond. So it's a sovereign bond issue that is used in order to support private sector entities that are, let's say, green. So one of the efforts that the UNDP does is that it does a private sector mapping. They identify companies that are small or medium-sized that claim to be green. And so you are talking about companies that really are not following any general purpose framework. Why? Because the idea is, when you're talking about the UNDP, they're trying to work with what's available. They cannot go and ask all those companies to let's say to take on the reporting or assurance in a certain based on certain general purpose frameworks. So what I'm trying to tell you is, if you look at every company per se, it's small. You're talking about a small amount of resources that would be directed towards that company. But if you think about it in the larger scheme of things, you're talking about a very large sum of money that is being channeled toward those companies, a very large group of companies, number of companies, based on exactly this. So if you think about it in this case, it's heightened public interest, because you're talking about a government that is receiving funds from donors around the world. Some of them, they are issued in, I mean, basically public or financial markets. And so, I mean, obviously it's a very particular example, but this was in the back of my mind when I told you that sometimes, I mean, there are certain circumstances in certain, and also to Paul's point earlier in the day, there are some situations that are specific to certain countries in the world. And so, yeah.
But I think, Rania, that we've still got flexibility in there, because firstly, in any donor situation, the donor can specify the particular criteria that they want to apply. So there's nothing to stop a donor saying, if they wanted assurance of something, they might want it in assurance with an appropriate reporting standard, an appropriate assurance standard. So they could use ISAE 3000, and they could say the provisions of the Code of Ethics if they wanted to. So there'd be nothing to stop that. But if you were taking your example and turning it into an engagement, they would still have relevant and applicable ethical and independent standards. It's just that they would follow through Part 4B of the code rather than Part 5. So we're not leaving these behind. They're still there, but it's recognizing the fact that this isn't using a general purpose reporting framework. It's responding to particular conditions that a donor might want confirmation over in order to access particular financing. So if there's nothing specified, then 4B of the code will apply, but there's nothing to stop the donor requiring a higher standard and using the higher bar that we've provided within Part 5 of the code. So either way, we should be able to do it. But one of the things could be that as we think about non-authoritative material, some of the scenarios, like the ones that you've given us, are things that we might want to explain within non-authoritative material to say, well, if you've got this type of engagement, these are your options.
Thank you, Mark, and thank you, Rania, because I think this is really an important point, and the example that you gave is really illustrative of other situations which may require special attention. In fact, most I'm not saying that they are the most important users, but they are donors and multilateral organizations, investment banks, etc. They are great users of non-financial information for the purpose of making decisions whether they should fund or donate or whatever. So, but this is important to have these examples and questions in mind to see and test what we have. I think that Mark gave a very good response, which is it's for them to decide what kind of requirements they want to impose. But it's important that we have this very clear that there are other situations which may merit and deserve our attention. And as we go, we will see if we need to include something else in the definition. So thank you very much for that. I don't know where to start, but Sadia, let's go around the table, at least for now.
So I was hoping I wasn't going to go first because I'm not a fan of the word heightened public interest, but I understand why we need to add this kind of lever into the code. Let me tell you why I don't like the word heightened public interest. The first thing is that public interest is probably used in 3 times in the code. We say you need to act in the public interest. We have public interest entities. And the last one is the coordination with the IESBA, where they have this term significant public interest entities. And that kind of complexity, we shouldn't add to it. The second thing is that I wonder whether we're putting the public interest remit out of our hands and into legislative hands. Because the way it's currently drafted, and if you hone in on the B, it's actually saying if any law regulator makes it mandatory to have this engagement, then it's of heightened public interest. But there might be a different reason that they are requiring it. And then I wondered if I could propose flipping A and B, because if we really want to hone in on the B, if it is required by law and regulation, or if it's publicly available, then that's what we should call the section, if it is. And that's how the lever would be added without using the word public interest. The other thing I wanted to make note of, I questioned whether this the slide actually has any judgment involved, because if it does have some kind of judgment, then we're not looking at a definition, but we're looking at a framework approach on how people would make this determination, whether they're in part 4A or part 4B. And the word that keeps on tripping me up is publicly available. What is meant by publicly available? Is that the right level, or is it publicly used or publicly known? And that type of conversation will need to be considered, so we see how we build this into it. Thank you.
Thank you, Sadia.
Sorry, one last point.
Sorry.
I also wondered, well, it's already there where you're saying that we're going to later on, we say that we'll have to make consequential amendments to part 4B. But I really think those ones, we shouldn't consider them as a small item. We might need to consider them sooner rather than later, because just to make sure that we are complete and it's coherent. Thanks.
Thank you, Sadia. And very happy for the task force to discuss your challenge a little further. Like, I think it's a slightly, it is quite a difficult situation, because for the reasons you don't like the term heightened public interest, I love the term heightened public interest, because it gives me an extra sort of texture of ambiguity that I can apply to different situations where I want to bring things in and out. But I do like, I think what we were trying to do is we were trying to say there are certain things we need to prioritize. And perhaps, one of the things we sought to do is say, well, prioritization is something we want to do in the public interest, but actually in using that as the terminology, do we sort of undermine the term? So we'll take that away and have a look at that. I'm really interested in your challenge over that, the law or regulation point, because of course, in the PI definition itself, we allow jurisdictions to designate other entities as public interest entities in an extension to the PI definition that we've got. So in a sense, we were sort of cognizant of that when we were thinking about how we did this. And on the publicly available point, like, again, it's sort of, where do we land on this? Because interestingly, one of the challenges that Andy made earlier, and he provided some comments knowing that he was going to be traveling, is he said, actually, it should just be publicly available information, because publicly available information is by default going to be used for decision making by people. And therefore, did we need to do that? So we've got to strike a balance. And we'll sort of take away all of those things into the mix to try and work out what is the best one to arrive at. But thank you for that, because I think it's an important challenge.
Thank you, Rania. Sadia and Mark. Luigi, please.
Overall, I think that I agree with the architecture of this explanation. I was trying in my mind to say list those engagement that are in or out in this engagement, in order to try to visualize the impact of this definition. And one of the matter is that is not clear to me, probably because I do not understand what it is what certification is and why it is not in this concept. it is not clear to me what certification is, because in another part of the proposed rules, it is an example of a potential self-review for a practitioner having provided services related to certification. So, and these, let's say, I was of the understanding that certification was one thing, but when put in context of a self-review, I do not understand what it is. So is it possible to explain what certification is for the purpose of this exclusion in order to make sure that, let's say, I understand exactly the reason of the exclusion?
So I think the answer to that is that obviously very happy to explain the thinking behind it, so the board can give a view as to whether or not it's comfortable. But actually, for the purposes of what we're trying to do, if we're trying to define what falls within our scope, we define what falls within our scope. We don't then define what doesn't fall within our scope, because you'll never come up with an exhaustive set of what doesn't fall within the scope. But in a sense, what we're driven by is engagements that are resulting in either a limited or reasonable assurance opinion, rather than just one that is a certification that a series of requirements have been met, which is not actually providing a level of assurance. It could be seen in many respects as almost providing a confirmation of sort of almost akin to agreed upon procedures, or the fact that you've provided the following sort of things as part of a determination whether or not you meet a given level of performance. So that's the rationale for it, that if you move away from something that is giving a reasonable or limited assurance opinion, and it's one sort of based on a certification, then you're coming into a very different type of engagement. And that would then, of course, under what we've proposed, fall under the 4B route rather than the 5 route. So it wouldn't be out with the scope of the code. It just would be recognizing that it wasn't subject to that high bar that would be an audit or assurance engagement currently under Part 4A of the code.
Thank you, Luigi and Mark. Felician.
Thank you, Chair. I think from the presentation that Mark has just completed, he's made a bit our lives easier, because he's explaining everything clearer. And what I also like from the presentation is that the general purpose framework is now clear. So definition is quite robust. I like that. However, if you look at the heightened public interest definition and what is being said in the drafting, it would be nice to have non-authoritative material that would clearly explain. I don't know whether that is in the code or it's outside the code, that would give more guidance on the users, because like Mark mentioned, that would make the whole concept more clearer. Also, it would be nice to have examples of these engagements. If you talk about attestation engagements, you're talking about now these are people who are not PAs, so they probably need to understand more on these concepts. So it would be nice to give examples. And I think when I was reading the Part 4B, there are certain areas where the examples that are given. But when you go to Part 5, there's no examples. So you need to see how we can marry the two. And also, if you could also have the frequently asked questions, and maybe put something in that. I think I saw that in the PI working group, we had a series of questions that people ask, and then you can also have answers to those. So I think that would be more will bring more clarity to this whole argument. Thank you.
Thank you. And I think firstly, I could reassure you that the intention is to do many of those things. However, in order to do those, we need to come to the board to ask for the board's agreement on the bones of what we're doing. And in fact, my mother would say to you, Felician, that you're the sort of boy who couldn't go to bed the night before his birthday because you'd be so excited. You'd be asking for more things. So we fully do intend to develop the non-authoritative material. And indeed, some of the things that we've discussed is, do we need some sort of bridging or framing text within the code itself to help explain some of the points that you've raised? But also, we do want to provide examples in order to help with the application. And indeed some of the other things like the FAQs too. But that will follow. Our priority at the moment is to say, these are the key sort of areas of judgment. Can we get your buy-in for where we are in terms of the position? And then we can finalize, or we can build out text for the board to consider as a block of text. This is the full section 5. And then we need to say to you, in order to make this section 5 work in the best way possible, what do we need to provide in terms of non-authoritative material, examples, framing text, and other things as well? So it's not that we've overlooked it at all. It's just in terms of what we can do for this meeting, what we wanted to do is share with you the key judgments that we've made, but we fully recognize that we need to provide, some help to make this sort of go live. But that is very much something that we will do.
Thank you very much, Felician and Mark. But before we move forward, let me just react a little bit to what I heard here. It's true, and it's absolutely clear that we need to make decisions this week about the direction that we take, and that the board will have to agree or not agree upon, as Mark says, the bones and the structure of what the standards are going to be. But I also think that this exchange of ideas is also absolutely critical for the task force to understand where the issues can be, where the issues are. I think that Felicia is not necessarily, well, I'm a little bit like Felicia, you know me, I always want more things the day before my anniversary, my birthday. So I'm not surprised by that, but I don't think that's the point. I think that what Felicia is flagging is some concerns around some concepts and the ability of non-professional accountants of understanding them. So I think this is the moment for us to identify these issues, because in 6 months, all of us around the table will be so familiar with the concepts that we will not be able anymore to understand what it's complicated, complex, strange for other people. So I think we have to balance these two approaches. Yes, we have to make decisions around the main options that are being proposed, and I called for that at the start of this meeting. Let's not postpone, well, if we have to, of course we will, but let's try to be focused and decide, but also make sure that we listen to what's happening here from the comments that we heard until now, which, and for me, they mean that, well, we have to be probably do a little bit more work, trying to refine a few things or flagging things on which we will have to do a little bit more work or whatever. So just trying to balance what's happening here, which I think is important for the future, of course, having in mind the need to make decisions on what is structural in these proposals. So, Christelle.
Thank you. My first point was on the comprehensiveness of some wording, and I struggled with what was a direct engagement, and here the answer was, well, it's defined in the glossary, and I read the glossary and I didn't understand. So if I put myself as a benchmark for non-PAs, I would say that even if it's already in the glossary, we shouldn't restrict ourselves from changing the wording if it can be useful for new readers. And my second point was on the slide 11, where there is a mention, just the one after, yeah, on the last blue bucket there, other standards as demanding as the code? Who is defining that?
Well, in a sense, what we're doing here is we're following an approach that you'll hear more about, which is consistent with the IAASB, which is, remember that we said we always wanted to be framework neutral as well as being profession neutral. So what we don't want to say is, and it's very relevant to the discussion we're going to have about quality management. So in the audit and assurance world, ISQM1 is the quality management standard. We don't want to mandate that everyone has to use ISQM1, but if you choose to use a different quality management standard, it needs to be as demanding as ISQM1. So we're taking a similar approach with this to say, we're not mandating what you use, we're giving you some flexibility. But what you can't do is you can't choose to use a lower standard. You must use one at least as stringent.
Which I understand. I was just wondering, because we are speaking about the IESBA code, not one piece of, so it's quite a broad set of standards. And are you talking about, for example, national code of conduct that apply today to PAs, and that would be considered by whom, I don't know, as the same level? That's the point.
And thank you for the question, Christelle. And just for further clarification, what's in the slide actually is like, we were talking about something as demanding as a code, that we are framework neutral, but also that's something that's in the IAASB standards as well. So when they are talking about the relevant ethical requirements, they are talking about the code or something as demanding. And given that in the ISSA 5000, they are talking about all sustainability assurance engagements. So in the case of all sustainability assurance engagements, they need to comply with relevant ethical requirements, which is the code, or something as demanding as the code. So it's not just, it's also in the ISQM concept, but also in the code concept as well. It's something that we have, that IAASB is already using, and that's important that we identify. But I'm turning to Ken because
Yeah, just to add to what you've shared, Sylvia, it's a question that I reported on earlier that was raised also in a few of our outreach events or activities. As we engage with different stakeholder groups, they also have the same question: who is to make that judgment? Who is to make that assessment that standards that are at least, or that are, let's say, argued to be at least as demanding or as stringent as the IESBA code are in fact as stringent or as demanding. It is not the judgment, it is not, well, in effect, it wouldn't be the judgment of the practitioner, because from their vantage point, they're going to be using the standards because those standards would have been already promulgated and issued by a standard setter, whoever they might be, and then they will go forward and provide their assurance service. But it will come down essentially to the national standard setter or to the relevant standard setter that will be promulgating those requirements that are other than the IESBA requirements. And an analogy, if I can use that, is what IFAC does for its member bodies. Under the statements of membership obligations, IFAC does require its member bodies to adopt the IESBA code or requirements, ethics and independence requirements that are at least as demanding as the IESBA code. So it is a requirement of membership that PAOs adopt or promulgate, let's say, ethics provisions that are at least as demanding as our code. But outside of IFAC's remit and mandate, it would be basically at the level of their local jurisdiction. You know, whoever is the body that promulgates those requirements will have to make that assessment. And I would say this is what Germany does. I mean, maybe it's Jens, you can, I mean, Germany doesn't per se adopt the Green Book, but what you do is you consider the developments in terms of standards that IESBA issues, and then you make your assessment as to whether how you align to IESBA meets that bar of at least as demanding. Jens, I mean, you can confirm or add to what I've shared.
Yeah, I fully confirm this, because that's in certain jurisdictions you have several sources of law where you have to implement the code. It's a commercial code, it's company laws or professional laws. That's one level, and then there are professional standards from the national standards that they can copy, paste them, and then there are even lower legislative acts. So by that, in the full, you are compliant, and you can prove for each and every section of the code that you are compliant, but you are not taking the book as a book and implement it. I think that's in many jurisdictions the case.
Thank you, Sylvia, Ken, and Jens, for your additional clarification. So to the first, Christelle's comment on the, no, I'm not just reacting to what you said. I must confess that I was expecting something like that to be raised here, because I understand that if there is something which is already in the code and defined in the code, okay, this is helpful. But since we are developing profession agnostic standards, again, we have to identify the issues, the problems, the understanding difficulties that some concepts may have. And while I understand that we can't change everything, because there is the one version of the truth that Mark is always and very rightly insisting upon, and because we don't have time to amend everything, it's important to understand that even with respect to the existing concepts, etc., where the difficulties are. Because when we decided to develop profession agnostic standards, it's because we acknowledge that not everything is simple as it is. So again, I don't have an answer for this or a response, just flagging these difficulties and making sure that going forward, we address them in one way or another, which means changing anything if possible, or appropriate, or not changing, but providing additional clarification or whatever that makes the concepts more accessible to the others. So thank you for that. Well, we are quite late. I think we are 35 minutes late. I think that we are going to try to finish this round, but otherwise we will stop for a few minutes and restart. Ellen, please, on behalf of Andy, may I assume that?
Sure, I'll try to make this quick because I think a lot of his questions have been asked and answered already. So the one question that I know he did have was if we could get a sense of what kind of sustainability information the task force believes is publicly available, but would not support decision making. His second question is it the sustainability information that actually has to be publicly available, or is it the assurance report that's publicly available, since that's what's being relied upon in order to make that decision? And then I'm assuming we're going to do the QM, because I know we got into the QM, but we didn't cover it yet. So hold that, right? Okay. He did have an example with respect to, because he had a question about direct engagements versus certification engagements. And the example I guess he had top of mind when he was trying to think through that was if you had a professional certify that the emissions are Z parts per million within the tolerable guidelines of regulation X. Okay, so I think that would be a direct type certification engagement. How is that really different than a company issuing a sustainability information with an assertion that the emissions were, Z parts million in compliance with regulation X? And if there really isn't a difference, does it, are we giving a pass to non-PAs, telling them they don't have to comply with Part 5? So if the task force could give some thought to that example.
Thank you, Ellen. Mark or Sylvia, do you want to respond now, or
yeah,
do you want to collect a few questions?
I'll do it briefly. I'll think about sustainability information that would not support decision making, because in a sense the focus is when you look at publicly available information, you're thinking, well, what is there in the annual report of a company? You know, it's almost formal legal and regulatory reporting requirements to actually put things to market. Do we intend this to follow things like announcements to market over say financial results and so on? Well, often those are not accompanied by any sort of, they don't have a reporting framework under which those are made, or at least a general purpose one, and they don't necessarily come alongside with the assurance conclusion around it. Like in a sense, the question about, is it the information that's available or the assurance statement? In a sense, it's the information, but it's the assurance statement can be with the information. I'm not sure how helpful as a decision-making piece of information the assurance statement is on its own without that information, and certainly I'd struggle to see how an investor would ever use that. And on the example, I take the point, you know, that you could have that very specific reporting requirement, but in a sense, that's a very specific reporting requirement in accordance with a special purpose reporting framework. And therefore that would still follow our logic model and go down the 4B route. So in a sense, you know, we're being utterly consistent and we're following the sort of principles. But it's something we can continue to look at as we develop the text as a whole. So you know, we're very happy to take that on board.
Thank you, Alan and Mark. Sunam, please.
Thank you. First of all, yeah, I fully supported the Workstream 1's approach. My comment is about still the sustainability information. Workstream 1 proposed two categories of sustainability information. First one is publicly available to support decision making. Secondly, information required to be provided by law. I have concern about the first, the information publicly available to support decision making. Without requirement for assurance, I believe there is a high likelihood of this category of information to be abused in practice, because there are a lot of information being made available for the purpose of decision making, advertising, or branding. So without any requirement for assurance or backing of law in individual jurisdictions, this category of information just can be nothing from our perspective. So this is my concern on how to overcome that kind of abuse with disguised intention. Thank you.
So, Sungnam, I hope that I can assure you, because it's in there, but within the drafting. So in a sense, on that slide, it's 1A, assurance is provided on sustainability information reported in accordance with the general purpose framework, and the sustainability information is publicly available. So if the sustainability information is publicly available, but it's not assured, then it doesn't meet our criteria. So it has to be information that is assured in accordance. So assurance is provided in accordance with the general purpose framework. If it's not assured, it doesn't meet our criteria.
Thank you, Mark and Sunam. Rania, if you don't mind, I'm going to finish with those who haven't spoken yet. And then if we have time, I'm going to get back to you if you don't mind. So Chana.
I like to support what Sadhya said about heightened public interest, although I'm on the task force, because I heard the similar comments at the national standard setters last week. I mean, I'm thinking about the situation in Australia. The reality is that they will start off with the top 200 or the top 300 listed companies. So it's essentially a subset of the pies. Maybe Mark, we just think a little bit about it, because in a lot of countries it would be a subset of the pies. I mean, Sadhya didn't mention that in the accounting standards, there's the publicly accountable entity. So we have 3 standard setters with 3 different definitions of very similar entities. And then to that, we are adding heightened public interest. So I think we need to maybe think a little bit about it.
I think what the way you say that, Channa, what I would propose to do is park that comment and come back to it when we've had our discussion on pi for the purposes of independence for the code, because I think once we've been through how we're proposing to deal with pi, it might then be easier to say, well, if it's not a heightened public interest engagement, what is it? Because it actually might drop out of the discussion that we can have around that. So I take away the fact that we might not have the right term, and indeed, as Sadia also said, but I think if we deal with it in the discussion around a pi, then it might be easier to answer that in a way that might satisfy both of you and the rest of the board as well.
Thank you, Channa and Mark. Paul, please.
Thanks so much. I think still around the terminology on publicly available to support decision-making, just a question as to whether the qualification of to support decision-making creates room for subjectivity, because do we stand the risk of maybe at some point an argument being made that, well, all this information has been available for X amount of time, but it has not changed the way decisions are being made. So maybe this needs to be kind of de-escalated in its importance and not subjected to the ethics and transparency standard. The publicly available is the key thing. When you try and add to that, I think it creates a risk of misrepresentation or arguments that can be very circular. Secondly, just around the question of the, going back to our discussion in March, just the postponement of the sustainability standard application to non-PAs. I was just wondering whether, given we've come out so strongly and consistently that we're pushing for a profession agnostic, if nonetheless we go ahead to try and, as it were, front load or put forward accountants to be able to give sustainability reports to a global standard, which other non-PAs cannot do, whether it can be misinterpreted as what's our intention in postponing, and almost by making the statement about non-agnostic, creating a postponement avenue that, yeah, we'll deal with it one day, but until we deal with it, non-PAs cannot issue sustainability information against an established standard, which only PAs can do. So we're raising them against others in a competitive space. Sorry about the very existential questions, Chair. Thanks.
It's a very good points for us to mull over. Firstly, I think on your first question, you're probably pushing us more to where Andy was also pushing us, which is, in a sense, you change B, and B in there becomes the sustainability information is one, publicly available, and required to be provided in accordance with law or regulation, because then if it's a company's annual report, or if it's a regulatory filing, or if it's something that is available, then, you know, in a sense, you're saying if it's publicly available, and I think this was Andy's challenge to us, if it's publicly available, it will be used for decision making, because that's inevitably, you know, how it works now. So I think that's possibly the way that we need to consider amending this, and we can discuss that within the task force. But I think the more we hear that emphasised, the more perhaps we don't need qualifications around publicly available. It is just publicly available. On your second point, in a sense, I don't think we are deferring, because we are trying to develop ethics and independent standards that will support application by non-PAs. I do sort of agree that there is a wider existential question about the infrastructure as a whole, as in, if you're a non-PA and you were required to report in accordance with an ISSB standard, or you were required to provide assurance in accordance with ISSA 5000, would you be able to do that immediately, or would there be a period in which you were sort of looking to mature and develop? I think that's something that we could look into further. And actually, you know, as you've asked the question, Paul, it may actually be a specific question that we want to include in our own consultation with the exposure drafts, as in, is there anything more that we could do in order to maximize the accessibility of what we're providing for use by participants in this market?
Thank you, Paul and Mark. Begonia, please.
Thank you, Chairman. Well, I found very interesting the discussion. Very well, many angles have been taken into account, and I'm not going to add anything new, because I think you have covered most of my doubts. Because I must say, we at the PIOB and I personally have a number of doubts about some of these things, and well, in particular, I think that if you are adding new expressions, they have to be clear, very clear. And even if they are old expressions, if this is going to be for non-PAs, they could be clarified or modified. So as a general idea. But to me, this heightened public interest is, to me, not to the PIOB, is not a clear expression at all. And I guess that at the end, whatever expression you include, it will be in the glossary to make it very clear. But in that at the moment, I have some doubts, as Sadija said, which you are using public interest in several ways, and qualifying the public interest to me sounds a bit too much. Heightened public interest. So it seems that is the nature of the information and not the type of company, the one that defines this new group, which is very important, because is the group of is the sustainability reporting that will be assured based on part 5. So this has to be very clear, and I don't think at the moment is clear enough. It is being public. I think that's a strong argument. Being public, not necessarily available to support decision making. It might influence, it will influence, but the reason is not that it's prepared to support. It could be prepared because, well, stakeholders want it, and they are not going to make decision with them, but normally they will do. So at least at European standards, there is no the connection between decision making is not needed to have the purpose of decision making to provide information. But I would say that it's probable that there will be decision making after having the information. I don't understand in this particular slide, the last bullet, number 2. I wonder if this is included in B2. I'm not, the more I read it, the less I find that this last part is necessary, but I leave that to you. And then talking about the other interesting argument about direct engagement versus attestation engagement, for me is also difficult to understand. And if you are trying to have a code applicable by non-PAs, I think it would be good to avoid difficulties in this. And I think that it's not just changing some words and replacing a profession by sustainability reporting practitioners. There are more things to be adapted in the new part 5 if this is going to be applied by non-PAs. So that's all. Thank you.
And thank you, because it again, very helpful steers for us. Absolutely agree with you about the need for us to bring clarity where we're using expressions, and in a sense, it shows that we're on a journey to try and get to a final position. And also we need to clarify how that's used. The point about two is I think it was very much influenced by the discussion that we'd had in Abu Dhabi, where ADA had adopted the code and extended the scope of the code under local law to apply to different groups that wouldn't normally be subject to it. And I think we were very sort of influenced by that discussion at the time, and so recognise the need to provide that flexibility. So, for instance, they have applied the code to those charged with governance, as well as normally sort of as well as to those who would normally be subject to the code. So it was a reflection of that. But we'll need to think whether or not, as you say, is it something that is actually needed in that context, because it may actually be picked up in the existing definition of a PI, where we recognise that local jurisdictions have the flexibility to add to that definition if they wish to. And I think the approach that we have to a PI will deal with that. I think we're always going to have a challenge over the accessibility of language. And we have a trade-off over the accessibility of language, in a sense of, if we need to change terminology, how much can we change in the code within the scope of this project, rather than it being a wider project about terminology in the code that we recognise may need to develop, but not necessarily within the scope of this project. Because in a sense, if we start to unpick certain established terms or definitions, we're opening ourselves up to a much wider consultation and questioning that doesn't necessarily support the objective of wanting to get these things in. But we can look at sharpening definitions so that they support the sustainability type context. But again, all useful things for us to think about in the context of our further discussions. So thank you.
Thank you, Begonia and Mark. And finally, Yao Shu.
Thank you, Chair. Thank you, Mark. I think it's a very hard work, and thank the task force. I support the approach that the task force has done, and I also have the concern about the term that heightened the public interest. And I understand that Mark has expressed that there must be some difference between the heightened public interest and between the PI. But I think for the most of the stakeholders, sometimes they can't tell what's the difference, because in practical, and the stakeholders sometimes they cannot to clarify that what means that the heightened public interest. And I think in the same code, there are some different terms, but they may be they express the similar meanings that may confuse the users. Thank you.
Thank you, Yao Shu. And what you've actually done is just really helpfully prompted me, because on that slide, if we looked at the top of that slide and we say Part 5 only applies to sustainability assurance engagements where, so we delete of heightened public interest, because what we're actually then doing is saying this applies where the following criteria apply. And actually we then take away this sort of value judgment that we've made that says, actually, what we're doing is we're identifying where this applies, and we're also giving them this badge to say they're of heightened public interest. So, so you've prompted me very helpfully there, Yao Shu, to say we just take out that reference, and then we actually have a set of clear criteria that help us in a more sort of neutral way. So thank you.
Thank you, Mark. Rania, I'll ask you to be especially focused and
Yes, sure.
quick.
Okay. So the first point is on the publicly available information to support decision making. I would argue that any information that has been required by any reporting framework, be it general purpose or special purpose, is there in order to support decision making. I think this is, I mean, the relevance to decision making is basically how this information is identified for reporting. So I think perhaps that's one point to consider. And the other thing is whether you stick with the point, the wording heightened public interest or not. If we want to limit our the scope to these types of engagements only, my question is, do we have any information or statistics on sustainability assurance engagements? And I mean, what volume of them really apply in this case, fall within this category, such that, I mean, my point is, will the ultimate part 5 that we come up with, will it address most sustainability assurance engagements for non-PAs? That's my question. Thank you.
So I think on your general purpose versus special purpose sort of point, the decision we sort of arrived at back in March was that our priority is general purpose. Special purpose might be something that comes later on, but we're not excluding special purpose, because a special purpose framework that was subject to assurance or that was prepared in accordance with a special purpose framework 4B would still apply. So we're not saying it falls outside of the scope, it just falls within 4B rather than part 5. And on your sort of, do we have information? Well, we do have, not, I would say, official statistics, but we do have a reasonable understanding of where sustainability reporting is likely to apply, and that is likely to be initially on large public companies in jurisdictions. Like, we know at its most expansive, perhaps the CSRD in the EU is going to apply to 60,000 companies. So those are sort of like caught within this. But again, we're not ignoring everyone else. We're saying these first tranche that are reported in accordance with a general purpose reporting framework, be it IESBA or be it, you know, CSRD and what the European Commission is asking for, that applies there. To other ones, we'll still have the 4B route. So, you know, we're not being exclusive. We're prioritizing how we're developing the code, which is the only thing we can do within the constraints of what we have. So I believe that we do have a job in front of us, which is the non-authoritative material to articulate how this works. But actually, I am quite comfortable that what we have is a prospect that is meeting the sort of challenge that we've been asked to meet in the marketplace. But we've got to be able to explain it to all of those out there who will ultimately use it. So I think that's sort of where we are.
Thank you, Mark. Well, we will break now for a few minutes. But before that, yeah, thank you to all the board members and to Mark and Sylvia for all the responses provided. This shows how challenging these decisions on scope are. It was expectable. It was nothing that we would not be expecting, but I think that there is a lot of food for thought coming from these comments that the task force will bring back and will certainly digest and come up with some refinements and adjustments. I think if we're wrapping up, I think that we can generally say that the board is reasonably comfortable with the scope or the strategic options made with respect to the scope, although some tweaks may be necessary with respect to these heightened public interest engagement, assurance engagements. I think that the board is less comfortable with the concepts and the wording, and that this should be probably, well, I encourage the task force to work to think about what we take away from this meeting and from these comments, because we have to think that if the board members who are the ones very familiar with this language are not completely comfortable and have not clear what the concepts mean. I think that we may have a problem in the near future. And it's better to think about it now than later, if possible, and when possible. So we will break now for 15 minutes, 10 minutes?
Yeah, I would ask board members and other participants to reconvene at 4:40. So 40 past the hour here for those who are online. And I would suggest, Gabriela, that we maybe extend the final session until 5:30, if that's okay, recognizing that we still have quite a bit. I'm just looking around.
Okay, for me, it's okay. We just can't ask too much, but I think that 5:30 is still fine. So, well, okay, we will extend it until 5:30.
Okay, so 15-minute break. Thank you.
So thank you for being back on time. I'm sorry for the short break after a long meeting, but we really have to restart because it's quite late and we still have a lot of issues to address. I'll give the floor immediately back to Sylvia or Mark.
I'm not going to curse myself by saying this one should be reasonably uncontroversial. But never mind, I will. So, quality management. One of the things that the task force discussed at length is of course, we are developing an approach that is equivalent to that of an audit of financial statements for Part 5 of the Code. So where a firm carries out sustainability assurance, or indeed where a firm carries out an audit or an assurance engagement, they need to have in place a quality management system. And that quality management system, of course, also refers to the applicable standards of ethics and independence. So in the context of an audit firm, we know that that means ISQM1, the standard that's developed and issued by the IESBA. And effectively, if we're going to be equivalent in our approach, the same level of quality management has to apply to sustainability assurance practitioners. Now, that is consistent with where the IEESB are in ISSA 5000. They are having the same quality management or equivalent quality management arrangements apply to a sustainability assurance engagement as would apply to an audit engagement. Now, one of the things that the task force is saying is that if we have this consistent approach, one of the things on our list of things that has to be done is there will have to be some transitional arrangements, because we recognize that even for well-resourced large audit firms, developing and implementing a quality management approach, if you don't have one, is quite a substantial undertaking, and we need to reflect that. Cool. We're there. So the way that we're seeking to do that within the context of the revised text is you've got 400.7 there on the screen. This is a proposed paragraph that we're looking to put into Part 5. So it's saying quality management within firms that perform sustainability assurance engagement. And this is absolutely consistent with where the IEESB are. So where that provider is coming from a firm that already uses ISQM1, then we recognize that they apply ISQM1 supplemented with any other professional requirements and requirements in law or regulation. And then what we've done at the bottom is this approach is consistent with the IEESB, where they've said, if you are adopting an approach to quality management that isn't ISQM1, then you can't have one that is not as demanding. So the text that we use is that if you're using a different approach to quality management, i.e. you're not using ISQM1, it has to be at least as demanding as ISQM1. So that's the sort of broad challenge that we've dealt with, and that's in a way that meets that equivalence requirement. In terms of how this applies in the context of firms, we've got a revised definition or an expanded definition to go in the glossary to say that the requirement to have a quality management approach is a requirement that sits on the firm, so it's a firm-wide control. And so therefore, what we've got to do is we've got to update the definition to bring in sustainability assurance practitioners, as in addition to the language that already exists for professional accountants. And what we've added at the bottom there is a reference across to the new paragraphs that we've brought in to Part 5 to explain how the word firm is used in the context of Part 5, where you've got quality management applying both to the individuals and to the firm. So this is again taking that equivalence approach and bringing it across into this part of the text that we're proposing. So it's actually a pretty straightforward set of slides on this one. So what we're saying is you will have a quality management approach. That quality management approach will be equivalent to that would apply in an audit of financial statements. If you're an auditor, it's ISQM1. If you're not a professional accountant, you will have something at least as demanding, so you won't fall below that bar. So the question for the board is, are you happy with that approach?
Thank you, Mark. While you shake the
because
remote control tool, we are going to start with the questions and comments. Thank you very much. Rich, sorry?
Can we go back a couple of slides, Astu? I've just lost all control of it now. Thank you. Oh, no, one more forward. There, thank you.
Okay, thank you very much. Rich, please.
Yeah, I think we talked about this a little bit in coordination with IASB. The concern I have is that I don't know what other framework is out there that is at least as demanding as ISQM1 that someone would be following. And so is that going to be, you know, I know we're trying to demonstrate flexibility and not make it impossible for non-PAs to comply, but is that leaving them with a real choice, I guess is my question, or a lack of clarity, maybe the other end of that. So I'm not sure we can answer this as much as the IASB may have to.
I think I agree with you, Rich, that it is a very fair question that we should put back to the IASB. But I also think perhaps it's something that we could reach out to our reference group to say, are there any frameworks that they're aware of that they're using in the quality management space? But I have to say personally, Rich, I am not aware of a framework that is as demanding as ISQM1 in the context of other engagements.
Okay, thank you. Let me just add for the benefit of the discussion, I hope. I fully understand Rich's comment and concern, but I also think that if there isn't, and probably there isn't any framework which is as demanding, exigent, rigorous as the ISQM1 now, it may exist in the future. So if it doesn't exist, doesn't apply. So nobody can argue that they apply a different framework. If in the future there will be one that any entity or standard setter or whatever will create, then we don't need to change the standard. So this is a very fair question and comment, but I don't think that it brings us necessarily a difficulty. So just.
I agree, and we deliberately are aligned in this respect to the IASB. So if there is a further question, it's for the IASB, not really for IESBA.
Okay, thank you. Any other comments? Sadia?
So firstly, I support having a quality management system. I think it will be hard for the code to be effective and implementable if a non-professional accountant didn't have one. However, I wonder if it's within our remit to ask for ISQM1 without being specific that it's to the relevant ethical requirements, and whether that would be the nuance that we could require in the code. And I know it's splitting hairs, but that's where I'm at the moment, whether it's within our remit to set this requirement for non-PAs. I also think there's appreciation of what sits behind that requirement. It's something that it takes a lot of time, it takes a lot of resources, and it would be something that you'd have to do over a period of time, not just. It kind of speaks to the effective date on which you would ask non-PAs to be ready with this and kind of ready to be in compliance with the code.
And I think agree with you on that, Sadia. And one of the things that we would have to ask the board to consider is what would be the sort of transitional arrangements for new providers that were moving into the space of providing these types of engagement, who didn't necessarily have a quality management approach that was as rigorous or as demanding as ISQM1. So I think the best we can recognise is the need for there to be an appropriate lead-in period to help them. But in a sense, I'm sort of slightly reluctant to go further than that, because of course QM is there framed within the IESB's remit, and they've chosen to go down this route of, you know, if you don't follow ISQM1, you need an approach at least as demanding. And therefore, I think we sit with that for the time being, unless we see anything coming back from the consultation and the outreach that the IESB does.
Thank you, Mark and Sadia. Begonia, please. It's not Begonia, sorry, John Pay.
Thank you, Mark. I'd like to support task force approach. As for quality management system, I believe it is challenging that IESBA would ask non-PAs to maintain their quality management system like ISQM1 uniformly, because there are several types of non-PAs, from large firms to individuals. I understand that the quality management system is very important for sustainability assurance, but I think the strict rules lead to decrease in the number of sustainability assurance providers. So I think the flexibility is necessary at the beginning of the implementation of the code. For example, I believe it might be good that IESBA would have options or transitional provisions in the code. I think it might be pragmatic that IESBA would ask non-PAs to maintain quality management systems as demanding as ISQMs, as the practice is getting mature. That's my comment. Thank you.
Okay.
No, absolutely agreed.
Thank you. Laurie, please.
Yeah, I'm supportive of this. Can you go back one slide? And this is just fun for me. Yeah, look, I think there is an ethical side to this under the fundamental principles of professional competence and due care. Us referencing it, I assume that's where you guys are coming from, as well as the fact that the IASB references it. So it seems to me that it's the transition period that's important here. I mean, I think obviously we have to stay consistent, but I do think it really does matter that we have this in place. So I'm supportive of this.
Thank you, Laurie. Christelle.
On this slide, just to say, I was wondering if you wanted to address the question of firm's definition into another chapter, because the question was only on ISQM, or this is the time to discuss the consequences of that firm definition.
So we've got an issue over the definition of firm that when do we come to, Sylvia? Sorry, can you?
Basically, the reason we are addressing the firm definition here, because going forward in part 5, the subject of the requirements will be the firm, and it will be on the quality management standards to determine that who is in or allocate the responsibility within the firm for individuals to comply with the independence requirements. So that's why we also raised the firm definition, that it's relevant here, but elsewhere as well, regarding the requiring independence and so on.
Okay, so because of and it was to come back to a point that Chana was talking when we were reporting on the SRG discussion about are you aware or do you take into consideration the impact of your requirements when there is an organization that has, for example, here an ownership, which is way out of the assurance world. Yeah. So here it's clear if an entity controls an assurance provider through ownership, management, or whatever, it should be included in the ISQM1 stuff, etc., and probably other consequences. And so, did you? What's your answer to that raised question about? Is it? I don't know if is it proportionate? Is it adequate to do that this way?
I think the answer to turn it on its head is that if you don't do it, we can't say that we've got an equivalent regime, because the regime as it fits within an audit of financial statements sits on the individual and sits on the firm. So we have controls that apply at the engagement level and controls that apply at the firm level. If we don't have controls that apply at the firm level, then we can't say we have an equivalent regime. And one of the things that we've always sought to do is maintain an equivalent regime. So I suppose my answer is that yes, it is proportionate to deliver an equivalent regime, although we recognize that we may have to, well, again, I'm reluctant to say that we have to provide non-authoritative material in this respect, because it is for the IESB to explain the applicability of the quality management approach in the context of sustainability providers, not really us. So it is something that we'll have to continue to engage with the IESB over, but it is their sort of issue to resolve rather than our issue to resolve, I think, at this stage. Is that a fair sort of position to land on, Ken?
Yes, I'm really nodding. So absolutely fully support.
Okay, thank you. Mark Felician.
Thank you, Chair. Mine is just a proposal, given what has been discussed. From what I hear, there's no any other international quality management system that is in place, apart from the ISQM1. In that regard, if we, and this is coming from the discussion that we had today morning with accountability, given that they also set standards and they probably have an experience in dealing with the ESG and sustainability matters, is it something that IESBA and ISB can do, maybe to find out if there's something that they've done in that regard, or is there something that they want to do in future? It's just to see if they can, they have maybe an upper hand in coming up with such standards, so that we know if we are to release the new code, and then there's possibility in future that bodies such as accountability could also help in coming up with similar standards like ISQM1.
It is a thoughtful proposal, Felician, but I think my advice to the board is that I'd be extremely reluctant to do so, because in a sense, the IAASB has set the bar, which is you apply ISQM1 or something that is no less demanding than ISQM1. The IAASB has not then defined any, it's not identified any alternative quality management approach that they consider to be as demanding as ISQM1. I don't really think it's in the scope of this board to say, we agree the following quality management approaches are as demanding. I think that is for the IAASB. So I think it's something that we can pass back to them. But one of the things we can say to them is that we've identified the following stakeholders who may be quite helpful to them in either identifying alternative quality management approaches that meet that threshold, or potentially these might be stakeholders who are willing perhaps to work to develop a quality management approach that is as demanding as ISQM1. But I'm I'm sort of very mindful of our remit and not wanting to creep any further. So I think that that's probably the best that we can promise in the context of our project, and feed into the IASB accordingly.
Thank you, Mark. Ken, please.
Yeah, if I may very quickly, and maybe it's two points in response, and maybe it's to add to what Mark has shared. Number one, I don't believe IASB themselves will be in a position to say which other quality management frameworks are at least as demanding as ISQM1. They will be in the same shoes as this body is. And therefore, I don't believe they will be able to go forward and identify different quality management frameworks. And that goes to the point that we discussed earlier, that at the end of the day, it is going to be up to regulation. Laws and regulations that specify the framework of standards that will apply to sustainability reporting and assurance, to specify which standards will meet, let's say, certain threshold, defined thresholds in terms of acceptability for purposes of sustainability reporting and assurance. And in many cases, it will come down to the securities regulations, especially for the largest entities are going to be reporting in accordance with mandatory reporting and assurance requirements in regulation. So that's what I would say. But maybe going back to the reference to accountability earlier in this conversation, and I know Pepe is still at the back observing this discussion, but if you can recall the presentation we heard from Daniel Metzger this morning, he did mention that accountability will be developing a bridging document between its AA 1000 document and ISAE 3000, which is, let's say, the general assurance standard of IASB, for purposes of identifying the axis of equivalency or where perhaps the differences might lie. So that's an example of a standard that has taken on its own evolution or desire to develop the analysis that's going to be necessary in order to identify whether its standards are at the level of equivalency relative to the standards of another standard setter. So all to say is it's really out of the hands of this board is my sense that it is going to come down to regulation or the relevant standard setter to make that assessment of equivalence, if you will.
And thank you for that, Ken. And one thing, and I don't mean to put Jens on the spot at all, but one of the things we do know is that in the CSRD arrangements, it talks about quality management arrangements that are equivalent to those that apply in an audit. And I don't know whether, Jens, at some point, the Commission may choose to articulate guidance, or EFRAG might articulate guidance to help in that application, but that might be somewhere else we can look to.
I think there is no ambition to make such a decision. It's to the national enforcement body or competent authority, I would say, to look at the audit regulation, where ISQM1 is more or less, or ISQC1 mixed with some M elements, is implemented into the audit directive and the audit regulation. And it's an assessment made by the enforcement body, the inspection, to say whether this framework is equivalent, which the other assurance provider is using. And probably this is something, and we are discussing this on national level too, if the national legislator is taking this option, who is responsible for making this? And the idea is that the same enforcement methodology should be used by the same authorities. That's an ideal world. We don't know whether this will succeed. For example, for PI service provider, so it would be the competent authority in my jurisdiction, and for non-PI providers, it would be the delegated authority by the chamber. So that is probably then the pinpoint where you have to make the decision whether a certain application is in line with the regulation or the directive.
So I think that's a very helpful sort of explanation in the context of the CSRD, and probably to my mind adds further weight that this is not This is not an issue for us to define what we mean. It is either a matter for national jurisdictions to define what they mean, or it's something for the IEESB to articulate. But you know, the point is made, but we recognise it's one to escalate in our engagement with others, not to address ourselves.
Thank you, Kenyans and Mark. Luigi, please.
And Mark, I think two comments. First is that probably these are the effective date of this particular provision is something that we may consider exposing or asking directly in the exposure draft in order to receive comment on that, because of course it is also dependent upon many things, including how legislation, how into the specific legislation this matter is dealt with. The second point, what it is not clear to me is the definition of sustainability assurance practitioner and how this definition trigger the requirement in terms of independence. I would expect that sustainability assurance practitioner for the purpose of independence also include the firm, and therefore, let's say the independence requirements are applicable to the individual and to the firm. The definition that I noted in the glossary, at least to me, it doesn't seem very clear in this respect, or at least, let's say, the one of professional accountant is clearer because it is explicit in this. And I wonder whether it is me that I do not understand, or whether it is some clarity is required in order to make sure that firm are included.
Just my suggestion that because the sustainability assurance practitioner is something that will be covered during the workstream 2 presentation in details, and my suggestion would be that maybe if we can go back to that, come back to that comment at that point, if that's okay with Mark and Crystal as well.
Okay, thank you anyway, Luigi. We'll address it tomorrow or after tomorrow. Sorry, yes, Chana, please.
So with this quality management standard as demanding, so in Australia we have ISQM1, and then for non-assurance services, APSB has developed a quality management standard based on the principles of ISQM1 and borrowing some material from ISQC1. And for various historical reasons, compilation engagements is with the APSB and agreed upon procedures is with the AUSB. And we both recognize that each other's quality management standards are as demanding. So you could do agreed upon procedures engagement based on the ISQM1 equivalent or APS 320. So I would keep the words as demanding because you never know what various jurisdictions will have. And for the purposes of those two types, in Australia, you could use either quality management standard.
Well, thanks, Chana. And again, it just shows the sort of navigational minefield of this, because we do have different arrangements in different jurisdictions, which again, I think reinforces the point I made.
Thank you, Chana and Mark. Well, I think that we don't have anyone else wanting to provide comments. Mark, are you okay with what we heard here? Okay, so let's move forward.
Oh, I get a break. It's Sylvia's.
I got 2 minutes, so. So the next topic we would like to talk about is the determination of PIs in the context of sustainability assurance engagements. So during the March, So at the March meeting, the board agreed that the part 5 would also set out a different regime for clients that are PIEs and for clients that are non-PIEs, that is equivalent to what's currently the situation in part 4A as well. So after this decision, the question that not just work stream 1, but the board has also discussed that what should be the PI definition in the context of sustainability assurance engagement. The existing PI definition in the code is really focusing on the financial conditions of an entity. And the question was that whether we should go beyond this definition. So there should be different PI definitions for audit engagement and sustainability assurance engagement. And where we have landed during this discussion in March is that basically we believe that the board has just adopted a revised PI definition for audit engagements that will come into effect in December 2024. So it's not really the time to make any changes to this PI definition. And the best approach is at the moment to leave it with the professional bodies and the jurisdictions to determine that what should be a PI in the context of the sustainability assurance engagement. So based on this board's decision, what we have discussed during the task force meeting in Lisbon is whether the part 5 should set out any kind of conditions, factors, criteria for these professional bodies and jurisdictions, how to determine a PI in the context of sustainability assurance engagement. So the task force considered that, and what we believe that just to determining these factors would be a separate project itself, and just to also to come up with these kind of factors at the global level would be really go beyond our time frame. So at this point, we would really rely on the professional bodies and the jurisdictions how to determine a PI, and what we propose that the provisions for the PIs in part 4B be applicable if the entity is a PI for the purposes of the financial statements. So the current PI definition that you can see on the right side of the slide, or the specific jurisdictions determines that the entity is a PI in the context of the sustainability assurance engagement. So these are the two conditions when the firm should follow the PI provisions in part 5. However, equivalent to the part 4A requirements, we would keep the requirement for the public disclosure for firms that they are following the PI's independent provisions. So this is something that's already existing for audit engagements. And we would just follow the same structure that has been decided, that they need to provide these public disclosure the way they they deemed appropriate. And the bottom of the slide, I just highlighted that, of course, that would require some coordination with IESBA regarding what the form and the location of these disclosures should be, because there's already a coordination regarding the audit engagements, but we haven't coordinated in the context of sustainability assurance engagement that we will do in the future. So basically that's the approach for the determination of PIs in the context of sustainability assurance engagement. So no changes to the PI definition and leaving it on the professional bodies and the jurisdictions how they would determine a PI in the context of sustainability assurance engagement if they believe that there's anything else they would like to add.
And can I add just one thing, and that is that a lot of the feedback that we sort of began to hear around the PI definition was that there's a balance. You could look at trying to change it, but everyone recognizes that we've only recently had significant changes to the PI definition in the code, and it's really important to let those bed in before we propose to do anything further. And I think that that's a really important thing to bear in mind, because sustainability will be a very significant change to the code. There are already some big and crunchy things that are coming up to an effective date, and some other big things in the pipeline. And therefore, you know, as a task force, we felt quite strongly that this was the right thing to do at this point.
Thank you very much.
So we are pausing here for any comments on the PI issue.
Thank you, Sylvia and Mark. Luigi, please.
I agree with the concept of not amending further the definition of the PI, because this would increase the complexity of the entire environment. I have a question though. If I understand correctly, the PI as defined for the audit will prevail, basically, and will apply also for sustainability. What about the PI that are defined as such on a voluntary basis by the firm, the audit firm, auditing the financial statement? Do we need to think about mechanism for them to confirm to the assurance service provider, if it is not the audit firm, that this entity is to be treated as PI? Because this could be something that it is not an information immediately available to the provider.
It's an interesting question that you raised, Luigi, because and it may be something that again is a question that we want to sort of go out there to stakeholders over, because what if you have a situation where you have a firm that is the auditor of an entity, and the firm treats that entity as a PI, but the sustainability assurance provider disagrees with the auditor and doesn't want to treat the entity as a PI, and we've got no mechanism to force one to follow the other. So I absolutely understand the need for consistency over this one and communication, but equally, what about where we have a difference of views between the two? So at the moment, we have obviously a regime that allows for the voluntary adoption of PI requirements to entities that aren't PIs, but I don't necessarily think we can code that into how we deal with sustainability engagements where you may have a difference of views. Okay, you may not, but it may be a question we have to go out there and ask.
Thank you, Luigi and Mark. Sunam, please.
Yes, for the two Mark's response, I think we can have a paragraph encouraging the two auditors and practitioners to have communication when they have different judgment or conclusion about the public interest entities. That's my suggestion, or whether we can think about that approach in the code. Thank you.
Thank you. We'll certainly take it away and discuss as part of the task force. Thank you.
Thank you both. Sadia, please.
So I understand why the task group has landed at this approach. We only have 2 quarters to go for an exposure draft. PI was a 2-year project, and starting something at this point is not feasible. I would caution on the messaging though, because if 2 quarters is too less time for this board to come up with a framework, I don't think we can expect jurisdictions to make that determination. And I think that's where it comes to the wording of the specific jurisdiction determines if an entity is a PI, and that kind of puts some kind of responsibility on jurisdictions, which they might not have time in terms of the effective date of the standard. I think that we should leave it as jurisdictions may amend the definition of PI for sustainability. I have 2 questions though. We are proposing that they can add on PIs. Are we also proposing that they can take off PIs for sustainability engagements?
So I think your second one is easier than your first one, which is, no, we're not proposing that they would take away from the PI definition, because the PI definition is the PI definition. So it wouldn't undermine it. On the first question, I suppose, there's no sort of burning platform telling jurisdictions that they have to do something. It's merely one for them to elect to do if they choose to. And in a number of jurisdictions, they won't choose to do anything. And in a number of jurisdictions, they may either immediately or at some point in the future. So we think that the wording that we've got doesn't rule out that flexibility to jurisdictions, but we're happy to take away and discuss it further as we have our deliberations.
And also, I think our consideration was that if we are providing some factors for jurisdictions, it needs to be applicable and operable at the global level. So it's a more difficult and challenging stuff that identifying these kind of factors at the jurisdictional level.
Yeah. Sorry, just one comeback, and that is jurisdictions are going to be looking to us for guidance to determine how they would add entities to the PI definition, and whether we include that in the explanatory memorandum or in the code, we might have to provide some guidance. Else we're going to have very different views on how each jurisdiction adopts. And I thought that global operability and consistent approach was important. I'm not sure what the answer is. It's just a question at this time.
I think it's a good question, and it almost becomes slightly harder to come up with the illustrative examples that were provided in the PI debate. So I don't know whether it leads you where you can go anything further than a situation where sustainability considerations are of material, are of material bearing to the entity, that it needs to consider that, but we'll certainly take that one away.
Thank you, Mark and Sadia. Begonia, please.
Thank you. I have a doubt in the interaction between this paragraph 417 and 403, because I understood, it's not the PIOB, it's me, I understood that part 5 applies to the heightened public interest assurance reports. If this term is used or not, that's a different story. But then why do you need now to talk about the assurance of PIs? I mean, is that a different group then? So within part 5, there are two types of requirements for those heightened, whatever name you use for this group of companies or of practitioners, or I'm a bit lost with this.
Maybe just to clarify, and maybe that's I'm just asking Begonia if that's the question around, because when we are proposing sustainability assurance engagement of heightened public interest, we are focusing on the characteristic of the engagement. So it's not on the client, whether it's listed, it can be any type of client. It's really what defines the engagement. So whether if it's public under general reporting framework, when we are talking about PI, it's really, we are talking about the characteristic of the client. So these are different concepts, and there will be, similar to part 4A of the code, there will be different requirements for PI clients and non-PI clients. So once they landed in part 5, so the sustainability assurance is of heightened public interest, or whatever we end up calling it, then again, there is another distinction between the PI clients and non-PI clients. But to get there, they need to land in part 5. So that's another kind of, yeah, that's the question.
It does go to show the challenge of trying to do this by building from the ground up. It would be, it would be a lot easier if we could do it from the top down, but unfortunately we have to sort of put these components together and then hopefully also explain how the overarching logic sort of helps them fit together.
Okay, thank you, Sylvia and Mark. Ellen?
Andy had one other question. In the gray box, you indicated that the task force proposes that the PI requirement apply in part 5 when 2 conditions exist. Did the task force talk about maybe including those 2 factors, conditions, whatever you want to refer to them as, in the actual guidance so that it was clear?
Thank you very much, Helen. And yes, that's something that I think we will take back to the workstream 1 and discuss whether we can enhance the clarity, and maybe we need to use the words that we have in the gray box and just adding the bullet points. It's probably that's clearer. So that's definitely we want to consider. Thank you.
Thank you very much. Rania, please.
Yes, thank you. So it's actually my point is very much to Begonia's point. I mean, first of all, it came across as a bit confusing. I mean, the introduction of the pi issue there, but then now that you explained it and you explained it really well, my question is, will that have an impact on the independence, ethics and independence requirements? Does that mean if it's a pi entity, then part 5 will not apply anymore? So will, and if so, then my next question is, I mean, my concern is based on what we've been discussing, what we discussed in the morning, which is that, I mean, the push now is to have part 5 that addresses the majority of ethics and independence requirements for sustainability assurance engagements. And so ultimately, with all those different categorizations, will part 5, and that's basically my question, will part 5 be addressing the majority of those requirements, understanding full well what you told me earlier, Mark, which is that, I mean, there are different routes, I understand, but right now, I think, if I understand this correctly, the focus is on part 5, addressing the needs of, sustainability assurance engagements. And so I think it would be good to make sure that part 5 addresses, I mean, the bulk of such engagements that, I mean, right now, and then other parts of the code would address, other specific types of engagements, but that part 5 addresses most of them. So, I mean, if you are taking the pies out, if I understand this correctly, then no, then what's the point of making that distinction? That's
So what we're doing is we're just following the framework in part 4A. So one of the things that, if we sort of go back to sort of the starting point for this discussion, is that we are effectively taking 4A and adapting it for sustainability, but we're not changing the underlying 4A. And if we're going to have an equivalent code, and if we're going to avoid regulatory arbitrage, you can't have a difference between 4A and 5. So what we're doing is we're mirroring the way that the current code is structured in part 5, because to change the structure would be a completely different project. It would be a different consideration. But in terms of the intent of the project, the intent is that part 5 applies to all sustainability engagements that meet the criteria that we set out. If you don't meet the criteria, then the sustainability engagements go down part 4B, which is consistent with the high bar threshold that operates in an audit of financial statements or a review engagement. And where that's not the case, you go through the 4B route. So what we're doing is we're mirroring the existing code. And I think your challenge, Rania, is a fair challenge, but it's about the logic of the existing code. It's not about what we're trying to do with part 5. Go on, Sylvia, do you want to add?
Just asking that maybe the point, Rania, that you're raising, that we are introducing this PI regime in the part 5, as well as Mark mentioned, that we need to do that because it's already in part 4A, but won't affect the scope of part 5 and which engagements are involved in part 5. So what belongs to part 5, or what's the scope of part 5, as Mark said, will be these bullet points. And once the disengagement is in part 5, then the firm needs to consider whether the client is a PI or not. So that wouldn't add any limitation to the scope of part 5. I don't know if that's so it will be part 5 will be applicable to both PI and non-PI clients.
I understand this, but since part 5 is supposed to basically, the idea is mainly to address non-PAs. No, I understand it addresses PAs and non-PAs as well. It's sustainability assurance, but PAs are also covered. So just follow my logic here. PAs are also covered by the rest of the code because they have to follow the rest of the code. Yeah. So right now, if you think about part 5, it is targeting mostly the non-PAs.
So
Yeah, because whatever you're introducing in part 5 that is already there in the rest of the code, PAs already no. Okay. Well.
Not in the context of a sustainability. Go on, Jens. Do you want to?
I would like to try to do it. You could say that sustainability is covered by the fundamental principles in this broader sense, but 4A and 4A is not covering sustainability assurance. So that's why if we wouldn't have part 5, we wouldn't have applicability also for the PA. So we have to find a new part for all sustainability assurance. So that's why it's not a duplication. It is a part specifically for sustainability assurance engagements for PAs and non-PAs. But it has the same level of assurance and independence and everything else as 4A.
I understand.
It's just making an analogy, sorry, to the extent parts of the code. Okay. So you copy paste it, but it's not that these parts are applicable nowadays to sustainability. You might do it by analogy, but now we have a specific part addressing this.
Okay, I get it. Just follow my logic. Just the whole point of going for the option of having a part 5 is basically to meet, so that non-PAs, when they are performing sustainability assurance engagements, they can just go to part 5, correct? And forget about the rest of the code. So it's like a one-stop shop, part 5, okay? So if you're introducing the PI definition in that part, if I'm a non-PA and it doesn't affect, it's not going to affect anything, and I'm reading this part, it's going to confuse.
It is affecting. It is affecting.
That's my question.
It is affecting because PI definition has nothing to do with the assurance provider. It's because of the client.
Okay.
And non-PAs will have PI sustainability assurance engagements.
Okay,
so it has nothing to do whether it's a PA or non-PA. It's a client who is a PI, a non-PI. So
understood. But if they make that distinction, if this entity is determined or identified to be a PI, will that affect the conduct of their work or the ethics and independence requirements?
Yes, it has a difference. If you're looking at the extant 600 sections, there are several requirements which are stricter for a PI audit engagement, a PI client, than for a non-PI client. For example, there's an absolute prohibition for certain services.
For independence requirements.
Yes, it is about independence requirements. There, this differentiation between PI and non-PI is relevant. So that's why we are taking the same approach, because many legislators have indicated or even done it, that they're saying we want to have the same distinction between, or we want to have the same standards as for the financial independence regime. So that's why we are thinking in that respect, we have to copy this approach, this methodology, also for the non-financial.
So you're taking the independence requirements one level higher than for heightened public interest?
No.
Oh.
We have this, I think the term heightened public interest we are skipping now because it's confusing. So we have only PI and non-PI. As we have it in the financial sector, we have it in the non-financial reporting or the sustainability sector. So it's exactly the same because, and that's the reason behind, just think about many disclosures you have in a sustainability report are the same in the financial report or are overlapping. And there would be a misunderstanding if you would have a certain level of independence for disclosure coming from the sustainability perspective and another one
From the
coming
financial.
so that's why it should be the same methodology approach.
Okay, I understand. Okay, thank you.
Thank you very much, and thank you, Jens, for this additional clarification. Well, it's getting really late, so I'm going to take the last request. Sunam, you wanted to speak? Not anymore, Begonia? But I don't want to disencourage you. Okay, Ken, in that case.
All right. I'm so happy that I have the last word before everybody heads off to a nice evening. No, this has been an interesting discussion, and this concept of engagements of heightened public interest has been a big red herring to my mind. And I think Mark has given us a solution, which is to just drop it off, and lo and behold, we have the answer. But joking aside, I am very hopeful, I would say. In terms of how we're approaching the conceptualization of the PI concept or the PI notion into the new sustainability assurance engagements. And why do I say that? It is because, in effect, we are embarking on this journey of developing standards for essentially what's going to be the new world of corporate reporting, which is going to be really increasingly focused on sustainability reporting, and eventually we will get to the holy grail of integrated reporting. And because we are in the early stages of reporting, the market needs to evolve and it needs to develop. And as we have discussed, precisely our standards also will need to evolve, et cetera, et cetera. So to the question as to whether we should try to help national standard setters define a PI in a sustainability reporting context, I would say we don't need to rush to that question, because precisely we are in the the early innings of the game, so to speak. Let us allow the market to start to absorb the standards and start to apply the standards, both on the reporting, the assurance, and the dependence sides. And then we will see where the needs will come up as we go further down the road. Chana earlier mentioned that in Australia, I think it's the top 200 ASX companies. So it's a subset of the PIs, for example. So it's not the entire PI universe in Australia. So that already is giving us an indication that at the jurisdictional level where all the action is happening, jurisdictions understand that there is going to be a huge hurdle, if you will, or a huge wall to climb, not least because of the capacity issue. Right? Even companies will be struggling with the new corporate reporting requirements, etc. So they need to build the capabilities and so forth. And therefore, it makes sense to target the largest companies that have the wherewithal, the resources, etc., to build a capacity to, in order to fulfill the reporting requirements. And from there, broaden the scoping of the entities that would be scoped in under mandatory reporting. Maybe it's going down the next 200 on the ASX list, or in the EU, maybe it's the next 50,000 companies beyond the first 60,000, etc. And as we go down the road, then maybe questions will start to come up from national standard setters, local jurisdictions, etc. Precisely raising these questions. We need more guidance in terms of how to define a PI for sustainability reporting beyond how we have conceptualized it in the context of financial reporting. So that's why I say I am hopeful that we have started on the journey, and we are approaching it in the right way, in the sense that we're not rushing to solve the world's problems, so to speak, right? But we are trying to do it in a systematic way, in a well-considered way, recognizing that we shouldn't be trying to boil the ocean, in effect, right? But let's take it in a way that makes sense, pragmatically within the capacity of this board, and also recognizing the time constraints. Thank you.
Thank you very much for your last word, Ken. And I don't want to take that from you, so I'm going to close the meeting now. I think it was an excellent meeting with a very substantial discussion and not easy. I would encourage the task force, which, as far as I know, is going to meet now after this long meeting, to digest all these comments and try to make the best out of them, always with this idea that we can't do everything now, we can't change everything, but we have a commitment to prepare and issue professional agnostic standards. So trying to reach the best possible solutions with this criteria in mind. So tomorrow, I believe that we will have another very relevant challenges, namely with group sustainability engagements, apart from other topics. So for those who will not attend the Sustainability Task Force meeting, I wish you good rest and be prepared for tomorrow. And for the others, good work, good job.
And before we disband for today, two quick announcements. First of all, for the Sustainability Task Force, the meeting is happening here. So after the board has, those who are not participating in the meeting have left. And secondly, for the dinner, the board dinner on Wednesday, for those who will not be attending or joining the board dinner, if you have not already alerted Astu, do let her know, because she needs to confirm numbers with the restaurant. So if you could do that as soon as possible, so that you can then, as I say, send the confirmation in. Thank you.
Thank you. See you tomorrow at 9.